All righty. Are we live? I think we are. Good morning, ladies and gentlemen. It is September 18th, 6 a.m. Pacific time in 2024, and today is the big event. It is Jerome Powell in the big event. It is Jerome Powell in the big event. It is Jerome. It's a lot of echo, but it's Jerome Powell in the Fed. We are potentially and almost certainly about to get our first rate cut in 4 years, but overnight, even in the last 48 hours here, or even 72 hours, the uncertainty leading into today's event, it is higher than ever. It has been over 15, 20 years since you have seen an undecided decision ahead of the event, and there is a lot of volatility. We're either going to get 25 or 50 basis points, and when it is all said and done, where we go from here, man, this is going to be the start of a new cycle. So it's absolutely wild. I'm telling you, man, you have no idea. Today is going to be a crazy day. Even afterwards, it's going to get nuttier. But the way the market is and the way these new risks are coming in with everybody undecided, it is going to be a wild day because no matter what, half of the market is going to be wrong today. Oh, yeah, Chatadonia. So I hope you're ready. I hope you're locked and loaded. But before I get into anything else, if you are new, unfortunately, you will not be able to talk for about 7 hours in the chat. So you're going to have to subscribe all day. You're going to have to listen in, see how we do things, get a vibe, and make an investment in the chat. But why I do that is so, one, you don't get banned. Two, so we have a great community and you have time to follow the rules and see what we do it. But then three, most importantly, you got to learn to invest. You got to invest in the chat and above the news, the trading, all of that. You have to make sure you own the stock market and are able to benefit off of it because regardless of what happens this whole year, you can see this account. We are making money off of it and holding it, and we plan to do that for like another 5 more years, God willing. So we'll see. You'll get the news wire, all of that, but I hope you're ready. And chat, once again, baby, welcome to the craziest day in a very long time, and get ready for the shift. And good morning. What's going on, baby? Are you guys ready? Are you ready, Tim Whitman? Are you ready, Ansel? Are you ready, Troy? What's going on, baby? What up, Miguel, Gary, Mr. Ansel, Gunnar, Jay Samuels, baby? Good morning, PNC, Brown, Tom Crows, Winning Lowe's, Monica, Adam, Professor Lau, baby. Yay! Good morning, baby. What up, Mark? What up, Krista? How we living, Big Carly? What up, Colton? Cassis, hi, dear. Hey, to the Chaos, Berry. Jerry, William, El Chapato, Hester for Mayor, Matthew Warman, Kenny Miranda. Oh, my God. We got donos in the morning. Let's go, Amo business. Good morning, baby. What up, DM? Are you guys ready? Are you ready? What up, Silent? What up, Awaz? What up, J Buck Dystopian? Are you guys ready? Stop it. This is the day, man. Open face. What up, Vance? What up, Benny Silverio? Good morning. Oh, y'all better be ready. It sucks because you got to go through a couple of hours, but we're going to have all day to talk about this. I'll have the previews and all of it, baby. Good morning. What up, General Chad? What about that Twitch? What about Item? Swinging. Sidonian, 333, Lord Wavy Ball, Zaid, Lizzie, Dev Patel, baby, Blowing Dough, Sanchez, Lord Wavy Ball, Payday, The Marketer, Blizzy B, 12 Jimin, Toy Soldier, Icebug, Blue Mall, Uncle Nick, and Robo Hand Tech and Blazing Bob, baby. Good morning. So, Chad, I hope you guys are ready. It is going to be a big one. And again, I mean, I feel like Powell, he's going to maneuver, and I'll just tell you this, though. Like, usually when BS happens overnight, a lot of people get left disappointed. So I am excited, and I do think today has a lot of room to move, but I also think with how we got to this 50 basis point debate, I think there's going to be a lot of BS embedded into today. So if you are trading it, you better keep your head on a swivel. If you are not going to trade it and you're going to let things develop, enjoy the show. You're going to love it. But other than that, I do think a lot of the environment for a lot of BS and volatility, it is here, my friend. So in the meantime, here is Josh AI with the headlines, and get ready for all of it. And then I'll be back and we'll close it. And good morning, baby. Good morning. U.S. futures are steady in watchful mood before Fed. U.S. equity futures kept to tight ranges as a watchful tone spread across global markets before the Federal Reserve's interest rate decision. Traders are split over whether the U.S. Central Bank will announce a cut of 25 or 50 basis points later Wednesday, with market-implied odds currently signaling a 55% chance of the bigger move. Contracts on the S&P 500 were little changed, with the benchmark about 0.5% below its July record. Europe's Stoxx 600 index retreated 0.4%. The dollar slipped close to its weakest levels since January, while Treasury yields ticked higher. Investors are looking for the Fed to ease policy sufficiently to respond to recent signs of weakness in the economy, achieving a soft landing without stirring concerns that conditions are worse than markets appreciate. If they're doing 25 basis points this time, the likelihood that they can get to 100 basis points by year-end is pretty slim, said Justin Onukusi, Chief Investment Officer at St. James Place Management. So if you don't get 50, then you're going to get significant moves in market pricing. The yen climbed as much as 0.8%, signaling expectations of a narrowing divergence in policy between the Fed and the Bank of Japan, which decides on rates on Friday. In corporate news, Alphabet Inc. gained in U.S. pre-market trading after its Google unit won a court fight over competition with the European Union. Apparel maker Davide Campari N.V.'s shares fell 6.7%, as its chief executive officer resigned after just 5 months. In the UK, money markets see the Bank of England delivering modestly less easing after services inflation rose to 5.6% in August from 5.2% in July, while the headline figure held at just above the 2% target. The pound strengthened and yields on UK government bonds rose after Wednesday's data. Economists largely anticipate the Federal Open Market Committee will reduce rates by a quarter point to a range of 5% to 5.25%, though a number expect a half-point move. Investors see greater scope for the larger adjustment. Fresh quarterly projections in the form of the so-called dot plot released at the end of the central bank's two-day meeting will offer further insight into the path ahead for borrowing costs and the economy. Chair Jerome Powell will also hold a press conference. I think they will go 25, but if they do go 50, how they talk about this will be extremely important. Torsten Slok, chief economist at Apollo Global Management, said, "That is why the dot plot coming along with the statement today is critical for rates expectations." If the dot plots suddenly tell you maybe we are not getting 10 cuts, maybe we are getting only 6 or 7 cuts, then of course that will also mean that markets will look at that and say, maybe we are overpricing this, Slok said. In commodities, oil turned lower after a 2-day gain as signs of higher U.S. stockpiles countered concerns that Middle East tensions may escalate further. Fed Day, the day investors have been building up to for weeks, if not months, is finally here, with the Federal Reserve widely expected to lower interest rates after holding borrowing costs at a 2-decade high for more than a year. The bigger question is not if they will cut, but by how much. Investors see better than even odds of a half-point adjustment, with forecasters favoring a 25 basis point move. Markets waver. Ahead of the decision, stocks struggled for direction as a watchful tone spread across global markets. Futures contracts on the S&P 500 and Nasdaq 100 are slightly higher, while healthcare stocks are leading Europe's Stoxx 600 index lower. The dollar weakened and Treasury yields ticked higher. Warnings abound. Still, the day is kicking off with a couple of warnings. Daniel Iveson, who runs the world's largest actively managed fixed income fund at Pacific Investment Management Company, says the bond market has priced in too many cuts and expectations are vulnerable if inflation resurges. Meanwhile, Bridgewater Associates founder Ray Dalio says the size of the cut this week won't be a game changer for global investors. Bitcoin bull hedge fund manager Anthony Scaramucci projected record highs for Bitcoin, fueled by a combination of interest rate cuts and U.S. regulatory clarity for crypto in the wake of November's presidential election. We are going to get pro-cryptocurrency, Bitcoin, and stablecoin legislation in the first part of the next congressional term in the U.S., the founder of Skybridge Capital said in an interview. At the same time, you're intersecting with rate cuts from the Federal Reserve. Google victory. Meanwhile, Google won a court fight with the European Union over a 1.5 billion euros, $1.7 billion, fine for thwarting competition for online ads, partly atoning for last week's crushing defeat in a separate judgment for abusing its monopoly powers. Judges at the EU's General Court in Luxembourg backed the Alphabet Inc. unit's challenge to a fine doled out in 2019. Alphabet shares edged higher in pre-market trading. top overnight news. Japan posts soft economic data, WW exports coming in +5, 6% YY in AUG, down from +10, 2% in Joule, and below the consensus forecast of +10, 6%, with exports to the U.S. falling for the first time in nearly 3 years, while machine orders dipped 0.1% in Joule versus the street +0, 5%. RTRS. UK inflation for AUG was in line, WW the consensus, including headline CPI +2, 2% flat versus Joule, core CPI 3.6%, up 30 BP versus Joule, and services CPI 5.6%, up 40 BP versus Joule. RTRS. Citadel Securities shelved plans to join the ranks of bond dealers that trade directly with the Fed. BBG. Google won a legal fight with the EU over a 1.5 billion euros fine for preventing rivals from placing online ads. BBG, they'll go 50 today. The communication has been confusing, but if you follow the path of the data and the language of Jay Powell at Jackson Hole, it leads me to 50. Powell was very dovish at JH. Didn't want further weakening in labor market, and data since has been broadly weak. If you follow that line, he will push for a bigger cut given how far they are from neutral. GSGBM, Josh Schifrin. U.S. crude inventories rose by almost 2 million barrels last week, the API is said to have reported. That would be the biggest surge in almost 3 months if confirmed by the EIA. Still, supplies at Cushing fell closer to the level that's seen as its operational minimum. BBG. Nippon Steel was allowed to refile its plan to buy U.S. Steel, People Familiar said, probably pushing a decision on the takeover past November. Joe Biden, Kamala Harris, and Donald Trump have said they oppose the deal. BBG. China's foreign ministry says it is taking countermeasures against some U.S. firms regarding their weapons sales to Taiwan. Measures include freezing property within China owned by the firms. RTRS. Retailers in the U.S. plan to hire fewer seasonal workers this year, tilde 520K people versus tilde 564K in 2023. RTRS, BlackRock will launch a $30 billion AI investment fund, WMSFT Microsoft, to build data centers and energy projects related to the technology. FTI, former Atlanta Fed President Lockhart, said he sees a normal 25 BPS rate cut by the Fed, but wouldn't be surprised by 50 BPS. BBG. What are they telling us? Tell me about Mr. Bostic. But yeah, I don't know, man. Josh AI, I think maybe he knew today was Powell. So, I don't know. I think he put his suit on. He sounded a little different. He sounded a little slower today. He said, it's a big day, Josh. He said, I got to be professional today. I don't know. Yeah, I don't know if it was sad or slow, bro. Yeah, I didn't want to. I didn't want to stop. I don't know how it came out, but I just rolled with it, man. He's ready to go, but we still got more. So get ready, very big day. S&P futures are up by 0.1. Wednesday morning comes after U.S. equities finish little change in an uneventful Tuesday session. S&P briefly touched its July 16th all-time high before giving back most of its gains in the afternoon. Small cap cyclicals crowded shorts among the best performers. Treasuries weaker across the curve. Gold is up by 0.3. Dollar down by 0.1, Bitcoin off by 0.2, and WTI down by 0.9 with copper up by 0.5. Fed set to kick off their easing cycle this afternoon. Still a lot of uncertainty about the magnitude of the opening move along with the debate about the potential market reactions and narrative spins. Bigger issue still seems to revolve around the bullish signaling from combination of Fed easing and economic soft landing. At the same time, market dealing with some near-term headwinds in terms of negative second-half September seasonality, fading buyback support in earnings, and elevated election uncertainty. Not a lot of macro news flow on the economic front. August housing starts and building permits both came in ahead of consensus. Both focus firmly fixed on FOMC decision. Updated SEP and Powell presser this afternoon. Fed funds currently pricing in a above 60% probability of 50 basis point cut, though the street seems to be more in the 25 basis point camp. Dot plot expected to show 75 worth of cuts for 24, below the 100 basis points currently seen by the market. Powell expected to reiterate dovish messaging from Jackson Hole in terms of the Fed not welcoming furthering labor market cooling. Very quiet in terms of corporate news. General Mills revenue ahead and EPS a touch better, though organic growth still negative. BLK and Microsoft reportedly planning $30 billion AI investment fund. Reuters reported activist Elliott still wants to oust Southwest CEO. X up on report that Nippon Steel takeover set to receive extension from security review. CWST a laggard on $400 million equity offering. Lunar up big on NASA contract. ME down after independent directors resigned, citing CEO's failure to provide a fully financed buyout proposal after 5 months. And hold on, there's more. I'm getting the plays ready too. But there's more, my brother. So Fed expected to cut interest rates on Wednesday, with markets and economists split on the magnitude of reduction. Debate swirls over how big the Fed's widely expected rate cut will be, and importantly, what happens next. Traders betting on 50 basis point rate cuts are risking heavy losses if the Fed opts for a smaller reduction. Markets doubtful that the Bank of Japan will hike again this year, pricing in just 38% chance of another hike by end of 24. BlackRock and Microsoft launch AI partnership. Google wins spat with EU over $1.5 billion fine, thwarting competition for online ads. U.S. grants DuPont Steel permission to refile takeover plans. Novo says Ozempic will very likely have a price slashed in bargaining with the U.S. government. UAW clashes with Stellantis, criticizing the company for cutting jobs and delaying plants at Illinois factory. Boeing workers strike to continue after failing to agree on key issues of wages and pension on Tuesday. Activist Elliott still wants to get rid of Southwest CEO. Dollar Store push aggressive real estate expansion even as they contend with slowing sales and weaker earnings. Biden does not intend to invoke federal law to prevent port strikes on East Coast and Gulf of Mexico. Japan trade and machinery orders miss, reflecting softer external demand and manufacturing weakness. UK headline inflation steady, leaving door open for rate cuts, though core reading and services price accelerate. Several China chip stocks surge on government equipment lists that some interpret as signaling progress in efforts to develop their own chip tech. Faltering economy reinforces expectations of additional policy support, including RRR cuts in China. PBOC to inject one-year liquidity to domestic lenders on September 25th, making another delay in revamping the policy toolkit. Trump vows to restore SALT deduction that he capped as part of 2017 tax cut law. Harris proposes to cap childcare costs at 7% of incomes for working families. Hezbollah vows retaliation against Israel after pager explosion. Israel acted out of concern that Hezbollah may discover the plan. U.S.-Japan close to a deal to curb tech exports to China. Chip industry, South Korea emerges as top U.S. investor on rising China tensions. China warns EU tariff on EVs will seriously interfere with trade relations. Germany's Habeck says trade conflict with China must be averted. And Biden administration seek up to 6 million barrels of oil for the SPR, matching the largest such replenishment since 2022 drawdown. Wow. I hope you're ready. There's more. There's some pre-market movers here on Powell Day. So good morning, Chattadonia. IP is up by 1-3-0. Team is up by 1-2-0. CRM is up by 1-1. Strategic collaboration with NVIDIA. GEHC is up by 0.8. BTIG upgrade. SMCI up by 0.4. Needham initiates buy. Bosch is up by 4.5. Repeatedly working on debt refinance aimed at completing spinoff. X is up by 4-1. Nippon Steel getting another application for the review. TGTX is up by 3.9. New Bryamovi data. GLNG up 3.1. EPC agreement with CIMC Raffles for production vessel. VFC is up by 3. Barclays upgrade. Siri up 2.3. Guggenheim upgrade. BLCO is up 2.3. Private equity firms in discussion to acquire may submit bids by Friday. NFE is up by 2.1. ROIV 2.2. Organon to acquire Dermavant for up to $1.2 billion. MNKD up 2-1, clearance of PIMDA to initiate phase 3 clinical trial of Icon in Japan. VRDN up by 2-1, insider buy. Visco up 1.8, Barclays upgrade. Lunar up 50, NASA contract with max potential value of $4.82 billion. 8PLT is up 41.9, regulatory update on Govorestat for the treatment of classic calictosemia. Swivel up 10.0 off contracts. SPAI up 9.8, nothing. Neon 6.7, nothing. Turn up 4.9, insider buy. Editas up 3.9, Jones initiates buy. ABCL up 2.6, Gain up 2.5, 70 cents a share supplemental distribution to common stockholders. RMD is up down by 3.9, Wolf Research downgrade, Summit down 2.3, Edwards down 1.8, Jeffries downgrade, GIS down 1.7 off earnings, Palantir down 1.4, MSTR down 1.3, pricing upsize offering of $875 million, NC down by 0.9, Truist downgrade, CWST down 400 million common stock offering, MGRC down 3.9, Wolf Scott and McGrath rent mutually agree to terminate previously announced combination. CBUS down 18, common stock offering. PGHL down 15, TCJH down 13, HCWC down 11, and then ME down 9.1. Independent director send letter to CEO and resign. Tell employees she's committed. CEO tells employees she committed to taking the company private. Ba-da-ba-ba-ba. Oh, Chattadonia, we have a lot of time. So there is all of your news, your headlines or plays. I mean, honestly, the plays aren't even that crazy. I think all of the plays are going to be obvious today. Hopefully you watch the watch list. You got that Bitcoin. Oh, my gosh. Almost 60 months, Kurt McGart. Let's go, baby. Thank you, my friends. Hey, man, listening from Bali. Nice. Let's go, man. You better enjoy it. Again, today's going to be a very large day. We got a few minutes here, so I'm going to go to the bathroom. Follow me on Instagram at The Trading Fraternity. If you have anything, you let me know. I hope you watch the watch list. Again, we'll do a little preview ahead of the event, but there's definitely a lot of things from the statement to the SCP today that, again, a lot of money is going to be made and lost today. I hope you guys realize that. Again, if you're not going to trade, that's a whole different story, but like the way the pricing is in, the way people are right now, there's a lot on the line, man. There is a lot on the line. Where's this chart? This is like the surprise chart. So last time this is where we are today. This is the chart in terms of like one way or the other between 50 basis points and 25. So the spread between what can happen and the undecided nature, it hasn't been this large since like 2015 and then even larger than 08, 09. It's quite wild. So we'll talk about it. But I'll be right back. Follow me on Instagram at The Trading Fraternity. Good morning.
Less than 2 weeks.
Well, my operating assumption, by the way, is there are two base case scenarios after the election. One is Kamala Harris is president with a Republican Senate. I think there's an 80% chance Republicans end up winning the Senate because there's 7 vulnerable seats, all Democrats. And if you consider Joe Manchin's retirement, you're already basically at a 50-50 because it's almost unquestionable that the Democrats could win that seat. So
what's the other?
The other scenario is Donald Trump with a Republican House and Senate. So I tend to discount Kamala Harris's tax proposals in terms of raising the corporate tax rate because I don't think she'll be able to get it through the Senate. And so, I think she might be able to get the child tax credit because it looks like there's some bipartisan element to that. I do think the one tax increase she would probably get is on households making over $400,000 because all of those tax rates expire at the end of 2025, so you don't need legislation to raise it. But if you have Trump as president with a clean sweep, he gets his trade policies through, which require no act of Congress.
By the way,
and he might get his corporate tax.
By the way, Ron, the 2017 tax bill sunsets next year, including the SALT deduction cap. Do you think the Democrats want to raise taxes and keep the SALT deduction cap?
Well, I think the Democrats would probably want to remove that limit on the SALT deduction if they were in control.
Okay.
And so I do think, by the way, whoever wins the White House probably carries the House. And again, I think Kaylee's point about the vulnerable Republicans is spot on in terms of raising that limit because the Democrats are really hoping to win the House in California and New York, where this is one of the most important issues.
But still not counting out a red sweep. This is as big of a delta as we see the 25-50 debate. Ron, we got to leave
So remember, that's actually the most important part. For how the economy reacts to the election. So remember, you are going to need that. You are going to need that. So Chattadonia, I hope you guys are ready. I hope you guys are locked in, ready to go. But we have a couple of minutes here now, but you're here right now. You heard the TV. You got to hear all of the headlines. Tell me, baby. What is the first play of the day? What do you got, baby? What do you got? Post it in the chat. Let's go. Tesla 230, GME, TLT, IWM, TLT, silly, lunar long, Tesla call, Apple call, shop call, add in Tesla and TLT calls, ARB long, city call, TLT calls, J6, 6J, go by, zigzag, sitting pretty, more lunar, watch list, baby, keeping Zim, TLT, Beetle long, SPY daily, Intel to the long term, TNXP forever, SPY call, sitting patiently, Beetle, PLCE, chilling with TLT, MPW, SPY puts, watching TLT, Mara calls, UVXY, crude call, Vito call, SQQ, Ethereum, chilling till I feel it, QQQ, FedEx earnings, Palantir, no tax on overtime call, Tesla calls, VIX calls, UPS, UVXY, VIX long, watching the SCP, more TLT calls, adding more TLT calls, Intel January 2640, UVIX, LDI long, Whirl, Wheeler for the long, TLT long again, Riot calls, TLT, and the final plays. ZB long, UNH puts, NASDAQ all-time high, September 30th, TLT calls, TLT puts, TLT baby, and holding TLT calls. My goodness, there it is. There it is, baby. So, Chad, mine is very simple. Beto and GBTC. If you aren't aware of the Bitcoin play, go watch yesterday's watch list. Even the one before that, the last two, I put it on there. I think that's going to be probably the best play today. Otherwise, bonds and the yen, and then go to gold in that order. So I think crypto, bond/yen, and then gold, those will be the top movers. And then anything after that, you can go for the equities if you want to play it, but I do think those will be the best. And then we'll keep an eye out there for oil, and then also watching FedEx and Nike as well, just because they have earnings. Again, FedEx on Thursday, Nike next week, and then APLT. It was a biotech with some good data, just in case. Just spice it up a little bit. So keep that in mind, and remember, no plays today. If I do make a play, I plan on going over it on the watch list, so don't ask me what to do with it. I do want you guys to make your own decision. If you do ask a question, though, I'm down to cover it on the watch list. For sure, baby. For sure. So I hope you're ready, but Chatadonia, it's game time. And here at the Cult, baby, before we do anything, before we try to chase a dollar, before we try to enrich ourselves, we must pay homage to a very special group of people that has made a sacrifice that most of us never have and never will. And quite frankly, we wouldn't be here without the sacrifice of a lot of our fellow Americans. That's why every day here, man, I hope all of you could show the love and appreciation of the veterans and the people who have served this nation, because quite frankly, it goes overlooked so easy, and we like to enjoy our freedoms and have fun and talk a lot of smack, but at the end of the day, there's people in this country who have sacrificed a lot of their lives. They've lost a lot of things, and they've made a commitment to something bigger than themselves. So for all of those who have made that commitment and served, I hope you know you're loved and appreciated, and I encourage all of you to show this in real life and bring this to life. So veterans, past service, active service, the families, thank you, thank you, thank you, and God bless every single one of you. And big shout out to anybody else out there giving back to their local communities, all the doctors, nurses, teachers, firefighters, police officers, the janitors, the coaches, the garbage men, anybody making their community run. God bless you and thank you, baby. But ladies and gentlemen, please rise. Place your right hand over your heart. Say it with me. I pledge allegiance to the flag of the United States of America and to the republic for which it stands, one nation, under God, indivisible, with liberty and justice for all, baby. Send it to judge! Oh, it's game time, baby. Oh, no, let's go. Wow, happy Fed rate cut day. That's it. You haven't seen this day in 4 years, man. You know, it was 2019. You were actually here. I think we were live on stream, actually. Last time we had a Fed rate cut. Actually, no, every time. Yeah, we made a lot of money off of it. I didn't. Now that I realize it. So I'm not making any promises today, but it is a big day, man. It's a big, big day. This is the day that the Fed has made, The crackheads will buy all the Fed futures out of nowhere because the Fed's a scam. What? All right, so we only have a minute. Did you guys hear it too? Even in the morning, Bloomberg, they had to make a segment to disprove one of my theories. I don't know. So if you watch me a lot and then you watch Bloomberg, it happens like once a week. I say something crazy that has a lot of truth to it, and then they have to go on TV and like agree and disagree with it at the same time. It's kind of funny. So because the thing they were talking about this morning was what we talked about yesterday, where it's like the way the 50 basis point odds have moved, some people are bringing up the theory that this was orchestrated by Powell. So they said it may be conspiracy, but you know, some people, it's a word on the street. That's all. I mean, it is I think a better way to put it is opinion, jackass. Yeah. So, but I think it's a pretty solid opinion. So we will see, my friend. We will see, baby. So I hope you guys are ready for it. Again, 5 seconds. Call out any plays. Like the video. Get the stream alerts. And that's it. 3, 2, 1. Round 1. Fight. Hello. All right, man. Let's see. So again, very, very calm opening. Remember, we are only pricing in about 1% today. I will do that a little bit before. Alaska CO says strike unlikely to be significant. Interesting. There's what's it called? That one headline on the port strike. So if Biden doesn't step in, that could actually be important. And then we're still down on the yen. That almost went green, but then that flipped. Yeah, Tesla's there. FBI director Flax Typhoon used against hundreds of thousands of compromised devices. Oh, what is that? What's Flax Typhoon? I don't know. FBI statement on some sort of cyber attack. Watch Apple. Let's see where the betos are at. And then MPW got clobbered. The TLTs all came back. So now the TLTs are literally 1 cent higher. Could be a good double dip. Oh, no. We got them at 5 or 8. I will have to see. All right. And Beto. So Bitcoin's down a start, and then I want to watch gold. Otherwise, this is what I was saying here too. You know, again, when we get a lot of anticipation and hype, it is going to open the door to some disappointment. So I do think the trading and the fact that the odds are all over the place, it's going to cause quite the reaction. But then at the same time, I mean, I do think this is going to be a lot easier if you're not trading it. So just keep your head on a swivel. Redfin is going up again. So again, bond plays, gold, all of it's chilling out. And then remember, at one point today, pretty much after Powell, the bonds may begin their 3-day session. So again, usually the day of the rate cut, and then the next 2 or 3 days after, you get some of that effect. Intel popper, Palantir going up. Intel is in the green. Yeah, MPW just got worked a little bit in the morning. I want to say it's like, what, 3-4%? 5%? Yeah. Remember, 30 cents is pretty big for them. We have EIA numbers. I don't know if oil will move us too much, but yeah, we do have it. And then remember, every other data set from here on out, it's going to hit a little different. So again, now, and that's why too, if you didn't watch the watch list, I would watch it now. I'll try to give a preview, but right before. But remember, the amount of cuts and what gets priced into the dot plot, that right there will ultimately be our answer. The meeting comes out, the rate cut comes out before the press conference. So I don't know if that's what you're asking about, but yes. So literally at 2 p.m., we are going to find out what the rate cuts are and the dot plot. And then at 2:30, you're going to get Jerome Powell to have the press conference. And then MP Dub still drop in there. So again, I'll watch. Even REITs, though, if the REITs sell off a lot, that could be another one to think about following the rate cuts there. Oh, and now the FedEx puts come back to life. And then Oracle on the low. VFC, they had bond news yesterday, and then today they just got an upgrade. So they had bad bond news yesterday, and then just literally analyst upgrade in the morning. Yeah, Lunar, it's a $4 billion contract with NASA. It's crazy. Or up to $4 billion. Boeing news. Alaska says does not expect to receive Boeings. I don't know. Again, there's been a lot of those headlines in the morning. 2:30 Pacific time? No, Eastern. So it's the same time for the last, 10 years. VIX is up 4. Yeah, everything is. Everything's up except the Dow. Pfizer is up. interesting for that one. MO's even going up. So watch, again, Dow. Actually, SPY's red now, too. So NASDAQ and Russell, only one's up. Again, bonds dancing around. Yen starting to go. Oil starting to break out a little bit. STX on the high. Hold on. I don't know. I still like gold. STX popping here. Interesting. Oh, so where was it? Oh, I forgot the explanation, but pretty much the last time that we had, like, there was, I need to get you the data. I forgot the punchline, but literally there's some parallel of this meeting compared to January 23. Oh, I need to find it for you. Oh, but never mind. That's why, because I was just looking at commodities. I want to see what silver did at the beginning of the year. Yeah, they didn't respond too good. So again, the examples we have, it's like January 23 and then September 2015. Those are the last times you had this level of uncertainty coming into the decision the day of. So let's even check the Fed rate monitor. Yeah, Whirlpool is low-key on fire. Is that breaking out? Remember, this thing went as high as 104. If we could get past 104, 105, Whirlpool will be on fire. Lunar's still going up 60. Yeah, it's killer. I've had that earlier this year. I sold it for a smaller loss, but that thing took off. Intel's climbing up again. Again, FedEx puts now are trying to climb back up, but that stock actually went green again. And then even Nike, again, value. It's weird the Dow is down. Could be because of like Microsoft probably, but yeah, the Dow value plays are doing kind of decent. SPY and Dow, only one's red, barely green on NASDAQ and SPY. Am I looking for gold put or call? Probably to the call side, but I said this on the watch list yesterday. The problem, this is why I like Bitcoin. The problem with all the other plays is that they're high. Like gold, if you buy gold today, will it move off of the rate cut? Yeah, if the dollar moves, is there a chance that if things are big on the dot plot, can gold move? Of course. But the risk, just like a bond, is that if you buy it at this price, there's so much downside if the market wants to be on some BS. So that's what you got to watch out for. That's the only thing I don't like. That's it. It's just like, yeah, stocks are at all-time highs, but when you go look at bonds and then you go look at gold and a lot of these other like fear gauge things, just don't forget, like, you're high off the ground. You know what I'm saying? It's not like you are not speculating on these assets at the bottom. You are speculating at a 2-year high. Some of them at an all-time high. So that's where it's kind of like, you gotta be cautious. Got to be cautious. Is the VIX at 19? Holy shit, it is. Yeah, that's wild. Remember VIX the other day. So when we were talking about rates, when we had no 50 basis point on the table, the VIX was at like 17 or 16. So ironically enough, as we have raised the rate cut odds, the VIX is skyrocketing. But yeah, we're still at 62%. So although, albeit, I think it's weird, Powell can pivot till the very last second. So just keep an eye on it, but it does seem that we are going to get that 50-50 unless that changes final moment. Have you thought about what will happen if the 10-year holds or goes up? Well, as long as it doesn't do it by 0.5, you'll be fine. That's the thing. I really think I gave you some gold on the watch list yesterday. I'm going to do it live for you, so if you're going to be here, you'll get to watch the magic live. But at the end of the day, there's very strict math that you can apply to today to let you know what's going to make the market move or not. It's very simple. It has to do with within a quarter to half a basis points. You know, I'll give you a little one right now. I said this on the watch list too, but you guys got to think about it. Right now, if you go to the Fed dot plot, it's pricing in just around 100 basis points of rate cuts. So is the market. Do you realize that if you don't get a 50 basis point cut today, how are you going to get 100 basis points of rate cuts in two more events? You see, so that's the problem people are having with it. But that's why I'm saying the math is very simple. We're within like a quarter to 0.5. As long as the dot plot and all of the other tenures, if they don't move within half a basis point, the market is firmly prepared for all of this. And it's literally there. If you go read the 10-year, the 2-year, the bonds they're not surprised by anything right now. But if we do get a big change to the dot plot and then everything else, then there you go. It's simple, 25, 25, 50. Yeah, but that's the thing, though, is that if you open up with 25 now, you only have 2 more meetings left. So then that will make it where the Fed has to be guaranteed to go bigger. But if they don't want to, like, why would they commit to that? So it's more likely that if they start lower today, they're going to lower the terminal for this year. They're going to raise it. So why keep it at 100 when if you're going to start with a quarter, chances are the Fed is going to raise the terminal for the end of the year. They're not going to leave it where it's at if they don't start moving with 50. Oh, the FedExes, they just scammed the ask. Oil popped. It's been going, man. And then yen's still down. Bonds are clobbered, but eventually I do think the bonds are going to, they're going to have their moment. Actually, let me check January. Am I saying the market is looking short today? I don't know how the fuck you got that conclusion. I was just talking about the expected rate cuts in the dot plot and then how the numbers, what would indicate what's priced in or not. So like I was saying, more than a quarter point, more than a half a point different than the dot plot or the SCP, then the market will be prone to a bigger movement because that would not be expected. But anything on the dot plot or the reaction, if it's within a quarter or half a basis point, I wouldn't really expect too big of a move, to be honest. That's where market we could all get scammed today. But the only other part is that half of the market is offsides. So in the sense that somebody's going to be wrong today. I don't know how to explain it any other way. Somebody is going to be a big portion or a group of the market is going to end up a loser today. And that's what's going to add the volatility. Why? Because people are betting on 50, 25, and they're already going in. It's kind of crazy. Red Hill Bio. Okay. After the second time, I think you're just pumping it. So I'll see you in 30 minutes. I won't permanently ban you, but next time throw in your play. Let us know what you own. One group bought $2.7 billion in TLT. That is true. Well, that's what I'm saying. I think the long term this is easy. We follow the hedge, and even then, 2019 when we hit TLT, we had like a week afterwards. It wasn't right away. So in a weird way, that's what I'm saying. I think short term, some of you are going to get wrung out today. I think the hype, the movement, I think there's going to be so many stupid pops and drops, and then we go nowhere. Someone's going to get washed today. So I hope you protect yourself. But in the long term, or in the midterm, then we're really going to be good because then you're going to know for the long term, and then we're going to have an idea on the dot plot, and then you're getting in the final quarter and everything else. You know what I'm saying? So just be very mindful. Today it's so exciting, but that excitement either means right now we're pricing in 1%. We're either going to smash that and then the market's going to go 2.5, or nothing is going to happen at all. And then we'll see. All right, bro. Yeah, turn. That was the Ozempic one. It kind of chilled out, honestly. Or not our early move. Again, I am only looking at oil and gold and all these other ones. So we'll see. What time is it right now? Yeah, I got an idea. The bonds after the cut, it depends on the dot plot. So that's what I was saying. Like, I'm on in real time. Right, you've watched me do it before, but once I read that dot plot, if it just like I outlined yesterday, if it goes beyond a certain number, I'm gonna know what's bullish or bearish. And then depending on how aggressive it is, I'm gonna be able to interpret or not whether or not it's aggressive, and then from there we plan aggressively ahead. If not, then I wouldn't really make a move, and then you stick to the same plan or path that we are on now, unfortunately. And then oil still climbing up. Powell been dovish. Yeah, he's been very dovish ever since January 23. That's what I said. It's funny how this meeting, we could even bring up some of the January aspects, but yeah, undoubtedly your man has been very, very bullish. We'll wait on that. Wait for a little bit. Dell and Snap popping up here. Yeah, those are both moving. Again, Snap going up. They had a price increase, I believe, or maintained today. ON, that's popping. So very interesting. Ahead of Powell, you're getting some retail runners. XLF. Oh, yeah, I forgot about financials. Remember even yesterday they had some of that. You think big money will be looking more at 2024? No, not at all, actually. So 2024 is just the final, that's the end of the runway for this year. You know what I'm saying? There's literally only 3 more meetings. And then, is there going to be a short-term upset or surprise if we get a quarter or less? Yeah. But 2025 is going to be where a lot of the story takes place. So if you're going to defer anything and push it forward or push it back, 2025 is a good year. And then 2026, that's ultimately just go look at the 2-year. If that 2026 number moves too far from the 2-year, then ta-da. Large rocket barrage from Lebanon towards Galilee. You don't know how it works today. Can you explain? Not now. You could go watch some of the old videos or go to Investopedia if you don't understand how the rate cuts work. But it's something that the Fed does pretty actively. But you haven't had. The last time you had a rate cut was 4 years ago. No, 75 is off the table for sure. Right now, again, we're still doing the 50 basis point debate, and it does seem like the Fed futures are locked into that. And then, again, bonds or spies at VWAP right now near the opening. How different are BITO and FXY plays? Well, yeah, crypto's a lot different than the yen, and BITO is levered. That's why I go look at BITO, and it's go look at Bitcoin. BITO's down while Bitcoin's up. That's what happens in these levered ETFs. So that's the only thing I don't like about BITO is that it's levered up. Yeah, 50 right now it's like 60%. 60% of 50 basis points. IWM is doing decent. It's up by 0.3 right now. SPY's barely green. Dow is down by 0.15, and then NASDAQ barely green as well. To peach it up. Let's go, man. Let's get it. That's it, man. It's your first one, too. Are you ready? But stay on topic. Your other question was asking me about aliens. So, again, today, too, if it's kind of weird and I catch it, man, I might just ban y'all and I might not say a word. So, that's it. It's Powell Day, baby. This is like new issue day, bro. So, I hope y'all stay in the game, man. I hope y'all stay in the game. Very, very big day. I think TLT is gonna level out at one point. Everything is gonna level out at one point, and then you'll get some of that upside, and then the event will happen. But again, I wouldn't underestimate how these premiums are gonna trap a lot of things. Cleaning that fishbowl on new issue day. Yeah, and then there's the SPY. So SPY's literally at break even. That's the funny. Again, oil is doing very, very well right now. On silver, I think silver can move. Again, silver and gold are both up. So I think silver is underperforming today, which could give you a little bit of upside, but you just got to watch out and make sure that everything is like locked in there, you know? My account with the TLT calls down, so you should know, man, I'm not doing those updates anymore. So I've posted the play, I've posted what price I've bought them at. Anything else, I mean, you could go get it yourself and figure it out. Okay, I love you, but I'm gonna time you out for that BS because you should know. You were here yesterday and every other day. Thank you. Welcome to New Issue Day. Exactly. This is exactly why we don't have any more of those plays. Because whether I give them to you or not, I still have to deal with them. And then I want to try something out. I want to see until the election. You know, I have to, if we are going to make some shifts, depending on who wins, I need to test some things out, see how they work. On No Issue Day. And then bonds are coming down, though, so watch out. Vivas on the high, Zillow. Bro, the high-low ticker is hella weird, man. You got random-ass names going back and forth. It's really, really mixed. And then DJT. Let me see. What time is it? It's almost 30 minutes. Give it 9 more minutes. We'll have the first 30 out the way. It is Powell Day. But like I'm saying, the movement is very, very odd right now. It seems like we're very mixed. It's hard to put a finger on what's lagging and leading. It just seems like everything is starting to move around. So, again, I still think some of the jitters there. You didn't have any other data. Let's go. Fed cut 50. What anticipated market move versus 25? That we don't know. So, right now, the market's pricing in 1% for today. But that's why I've been saying how all of this happened is kind of weird because it's putting you in a position where now 25 might be seen as dovish versus 50 kind of being bearish. But we don't know the differences between those moves like exactly. But right now, we're going to move about 1% from Powell. So whatever happens, you could be expected to go 1% higher or lower on the S&P. The report will tell us the rate cuts and the dot plot, which is a lot of info to be able to know whether we got that 50 or 25. Sell the first rate cut, bonds or markets? Both, but usually equities. Will the 65-year trend follow break? It might. Otherwise, the only way to get around it is if by this morning, if it's at like 50-50, then Powell gets to make a decision. So there has been times where the trend never broke because Powell, the market gave him 50-50. So like I'm saying, this is the chart I showed earlier. This is crazy. But like this is showing you the difference in the basis points of where the market is priced in. It's the biggest uncertainty. That's the one. In 2023, you had a certain degree of uncertainty in the 2023 meeting, but literally like 2015 was the last time there was like this big of a gap between what could happen and then the alternative that's being priced in. You see what I'm saying? So one part of the market is here, the other part is here. You don't have a tight, so it's either you're at one end of the market or you're at the total opposite right now in terms of bond pricing. They made the decision yesterday, but as Powell has shared with us over other times, they can adjust it pretty much up until he walks out. You know what I'm saying? It's very, very simple. It's simple because Powell can BS whatever he wants. That's what I've learned that in the last couple years. All right, there's bonds moving a little off the bottom. What do you think they're deliberating? I think they're just, they had to, Bloomberg had to come out and make sure they combated some of my theories there. But I think I really believe Powell signaled, or somebody in the Fed signaled to Tim Rouse and Bill Dudley that they wanted 50. And I just think they're waiting to see if the market will approve it. That's it. That's all. I've watched Powell so many times. He's going to do what the Fed futures say. So I think they want a certain outcome of 50 so that they can go fast without panicking, and then they could blame it on the Fed futures. But when it's all said and done, I do believe that I just believe they're waiting to make sure the Fed futures are locked in, and then that's it. Good to go. Like I said I don't know what's going to happen, but if it comes out today at 2 p.m. and it says 50 basis points, I think that is the kiss. That's the Judas kiss. That's it. So whether Powell wanted it or not, I don't care. Like, my theory doesn't, you could combat my theory and say, well, no, Powell didn't tell the news agencies. Okay, cool, whatever. But at the end of the day, if they start off with 50, as my history has shown, it's a bad sign. So I think if Powell is going to opt for that today, whether the Fed futures or not, it's a mistake, or it's saying something. So I don't think he's making a mistake as much as I think he's just acknowledging that the economy is weaker. And then 25, that's the funny part, though, because now 25 is bullish, but 25 shouldn't be bullish. Again, last week I was telling you I don't even want 25, but now that the crackheads literally have made 50 basis points a likelihood, I have to acknowledge that 25 would be better now in the short term. So it's kind of funny, but in a weird way, this negotiation has made 25 a good outcome when 25 should have been bad. But then now 50 will sure enough, send a signal that things are a little bit more unstable. Have to believe that their rate decision remains uncertain was intentional. Yeah, I don't think it is. The fact that Bloomberg even had to bring people on to disprove, and again, even the lady they brought on, she said 50-50 pretty much, but it's just I really think that the way that the Fed futures moved in these last couple of days, it's so obvious that somebody put something in the water to get this going up. It reminds me of you guys got to realize, the crackheads, remember when this feeling right now, it reminds me so much. And I made the play. Remember, this was the play where I lost like 12 grand and then I ended up making like 6 or 7 grand. But it was the Zaza, the ZQ futures for the ZQZ for 2024. But like I'm saying, it's wild that they came out overnight, and I've watched this so many times, but to go from like I'm telling you, a week ago, I was telling you, no way, a quarter would have been bad, but then all of a sudden they got these odds moving. It reminds me of when the market priced in those 7 or 9 rate cuts. You guys remember that? You guys remember when Powell finally acknowledged that they were going to cut rates? And he lowered the dot plot, and then right when Powell said we're cutting 3, the crackheads came out and started pricing in like 7 to 9. That's what happened in the last 72 hours. That's what I'm saying. I'm like, wait a minute, where did these 2 rate cuts just come from? Out of nowhere. But back then it made sense because Powell said something. Back then, it was Powell actually moving. There was data. There was all sorts of things that factored into it. But this time around, not. It was two people. That's it. So we'll see, man. We'll see. Oh, IRM. Here's oil, and then here's her day today. Chilling, though, in this range. There's still a chance of him doing 25, but as of now, the odds are for 50. But that's just like the funny, weird part is that right now there's just the possibility that Powell upsets somebody. So, again, even if he does do 25, that would be a big shocker. And then, even if he goes with 50, there's going to be people getting left in the dust. So it's going to be a weird outcome, man. CNC, high ticker is trying to move around a little bit. Yeah, give or take, half of the market will be disappointed, no matter what the outcome is. But then that's what I'm saying, that dot plot, there's so much to unpack today. That's what I'm saying, the fact that we're arguing about 25 to 50, that just adds another layer of this meeting that's so dumb if you think about it. Because not only are we now dealing with that uncertainty, bro, you have to look at the statement. You have to see if there's any changes in the statement, the language, what they say about the economy. Then you got to look at the dots, 24, 25, and 26, and everything it's going to be implying. And then how is that different from a whole entire bond curve that has moved, several percentage points in the last quarter? So, hi. But there's a lot to unpack, or many layers. The onion of rates. U.S. SEC poised to allow half-penny stock pricing? So absolutely no chance he does no cut? Yeah. No cut or rate cut, that's just people wanting to, talk. Just to talk. But, if, realistically, it says 25 or 50 today. And then that's it. And that's literally it. The only two options that will occur, 25 or 50. Everything else is going to be about what sort of future is communicated through the summary of economic projections. Well, that's the thing. So 50, I think, is bad, but I think the market will like it for a little bit. So that's going to be the paradox. But in my mind, again, that's what I'm saying. Everybody will celebrate. But in my mind, I think that would be a very bad sign for the next couple of months. Rate cut monitor, you go to investing.com or /ZQ. If you learn to read /ZQ, that thing's dope. That'll teach you a lot. I have some good videos on it too. Yeah, short term it would be bullish. Long term, it would mean you have a recession around the corner. I agree. Strangling SMCI. I mean, not a bad idea. I mean, it's going to be expensive, but it's moved up. It's moved down a lot. There's a lot of meat on the bone on that stock. And then depending on what sort of excitement gets triggered today, I mean, maybe you get lucky. So I see the appeal. You're getting a little green shoot there on the bonds. See if the SPY moves, but first 30 minutes, man, you ain't going nowhere. We ain't. No, you can't see that anymore. 3.57 billion on volume. Bonds starting to move. Let's get a checkup now. Let's see what's holding up here. Yeah, no Diddy. No, yeah, forgot. We ain't. No, cut. We are. No, stop. Oh, what is this? So you have 12 names green on the Dow, 18 red. You have sounds of a blast in Beirut right now. So Dow Jones, 13 red. Or no, so not 13, 17 in the green. Or 13 in the green, 17 in the red. NASDAQ, 52 green, 48 red. And then SPY, 275 green, 227. Bro, this is stupid. So not only Not only are your rate cut odds pretty much 50-50, your whole entire market is 50-50. Yeah. So SPY, Dow, and NASDAQ, half the names are green, half the names are red. There's sound of at least one blast in Beirut, heard by witnesses. Suburbs and ambulances heard. Explosion heard in more than one area in Lebanon. GIS. No DJT player. I had an old one for free from last week. All right, so SPY, see if it breaks out from here again. Oil, it's crazy. Oil's still in the red. My goodness. All right, I'm going to go to the bathroom. Follow me on Instagram, @TheTradingFraternity. Welcome to the first 30 minutes, my friends. Welcome to the first 30 minutes. My goodness. Everything right now. SPY barely green, 0.04. Dow barely red, down 0.15. Russell barely green, 0.06. And then NASDAQ, 0.14, man. My goodness. All right, I'll be right back.
I don't think a correction would be sustained. I think that there would be opportunity to buy particularly higher quality parts of the market. But I will say there are three things that are really overhanging equity sentiment at this point. First and foremost, I would suggest is actually earnings. What we experienced as we went through earnings season for the second quarter was that revenue growth was pretty disappointing, even as companies delivered on the bottom line. And so I think there's some concern that companies may have less levers to use to deliver on the bottom line for third quarter earnings. And I think people are going to be really focused on that top line number, on the revenue growth. So I think that's number one. Number two, of course, is what I'm calling the macro political scene, which includes U.S. politics, international politics, geopolitics, and then policy implications. I think there's a reluctance by a lot of equity investors to make big position decisions ahead of the U.S. election, since there may be some policy shifts. And the third thing I would sort of mention is there is that fatigue around AI, which we've been talking about a lot, right? And concern that if we don't get more use cases or more examples of AI monetization as companies discuss through both conferences and also reporting over the next couple weeks, you know, how they are really making use of their investments, that people will kind of fade that trade for a little while.
It's interesting. We were talking with David Lefkowitz from UBS, and he was talking about, you know, the money being made in AI, at least by those obviously selling, you know, the picks and shovels, is real. Then we talked to Paul Knopf from KPMG, and he said it's pretty much the number one concern for CEOs about their own company is keeping up in terms of the AI space race. But does this look though, Kate? Does NVIDIA eventually look like a Cisco? I mean, they were killing it in '99 and 2000, right? And now some people don't even know what Cisco is.
Well, I think NVIDIA is an amazing innovator, and they have new product coming out, at least on an annual basis. So I'm a little less worried there. I think your point is right, though, Matt. I mean, CEOs, CTOs, CIOs are all very concerned if they don't make investments now. If they don't lay the groundwork, if they don't create the architecture, if they don't retrain their people, then they're going to be left behind. And I think as we move into 2025 and beyond, as some of these investments are more codified, we will see a real differentiation between winners and losers in every industry. People who are effectively harnessing technology tools.
All right. Oh, is that lady? That's BlackRock? Believe it or not. Oh, is running up. That's a REIT. So like I was saying, watch out for that Cisco to NVIDIA. Yeah, everybody has. So again, that whole, like, when people show the chart of like the tech bubble in NVIDIA, they usually compare it to Cisco, because Cisco is the one that had the meteoric rise back in the day. PRTG on the high. What's this? Portage Biotech. Again, you have a lot of things moving, but unfortunately, it is 50-50. So some industries doing better than not, but it's clear that the back and forth that we're getting is kind of wild. So no, there's no chance of a 75 cut. Maybe tomorrow I could talk about it. I don't want to talk about it today because although I do want people to like understand the concepts, it just seems like everybody gets confused when we talk about some of these like ridiculous hypotheticals. So it's very simple. There is the Fed futures. There is a outcome that is historically priced in and has a history that's older than most people in here. So the fact of the matter is there's really only two options for today in the realm of reality. Is there other things that can occur? Yeah, but it's like, maybe Selena Gomez knocks on my door today too. And I'm like, some things are possible but not really probable. So it doesn't matter if there's a letter or anything. That is kind of the politics. A lot of people get their thing, but when it comes to the Fed, they're independent. And they go off of the Fed futures. They go off of these contracts and pricing in, and they have before. So all it is two outcomes, 25 basis points, or it's going to be 50. And that's it. Which trading fraternity? Just the trading fraternity. It's the one that has like a picture posted like 10 years ago. So I have a lot of impersonators and fakes, but they usually post all their pictures on one day and then they'll try to sell you shit. So you should be able to spot me. When do the rates cut? Actually at 2 p.m. pretty much. So there's already some of it priced in, but it pretty much becomes effective the day of or the next day. Well, didn't Trump tell the Fed not to cut rates? Well, yeah, because you guys got to realize, and maybe I'm going to bring it up right now because sadly, this is the bad part about today. I think we stopped caring after the little bait and switch with Kamala and that process, but when it's all said and done, just remember, people don't want the rate cut before the election. So again, you're about to do the Fed is about to take on an action that will spur economic demand and help consumers out, but they're going to do it literally 3 months, 2 months ahead of an election. That's crazy. So that was when it was Biden versus Trump, people were really concerned about that. But after Biden dropped off, everybody kind of put that on the back burner. But unfortunately, it's there. Well, it's not unprecedented. There was one time in I think it was Gerald Ford or somebody. There was somebody right before like the 60s or 70s.
Say another thing.
One of them, they got blindsided by the Fed ahead of the election.
So in a big sense, market
53 months ago, my life changed for the best, baby. Traded
So really,
hey, man, God bless you, man. Thank you.
That the committee,
security guard right there, and congrats again too on the wedding, baby.
All the way down to 2%, and
Buller at
gradually
Purdue.
ease here, but only gradually because they want to get that last bit of inflation out of the system.
Everything you say makes sense. I agree with you. The counter argument, though, that they're using for 50, if you're in the 50 camp, is the 2-year yield is at 3.6. So the Fed is off sides. The Fed is too tight. So why not just make the adjustment now in a bigger way, because it's going there anyway, given the inflation dynamics?
Yeah, in the first half of the year, I actually gave a talk at the University of Miami and actually made this argument that if you use Taylor rule type calculations, the policy rate was too high. They should start sooner, and then they'd be able to sort of glide into the 2% inflation target. They didn't do that. I just didn't have the data in the right position, I think, to make a move earlier. But now that you're here at September, I think going 50 would be very hard to defend. You've also got the SEP here. The SEP probably will indicate 3 rate cuts in a row of 25 basis points. So now how are you going to say, well, we went 50 today, and so we're going to skip one of the other meetings or something? I don't quite see how it's going to add up with the SEP. Sometimes the SEP does not go with the decision on the day, and then the chairman has to dance around that. But it seems to me like people will probably coalesce around 325 basis point cuts and keep in their pocket the option to go with bigger cuts later if there really is some deterioration.
He's kind of saying Fed's going to do a quarter.
About an unemployment rate at 4.2, which
interesting.
Actually
again, he's saying 3 rate cuts at 75. That's the option to go more would be save your 50 for later.
Seems to call for panic.
Yeah, thank you.
Among the more dovish in the 50 camp is J.P. Morgan, Jim. They're calling for 50 and a dovish presser. And their reasoning this morning looks at Cleveland real-time Fed forecast, which they argue implies peace. He had 207. I wonder what you make of this emphasis on real-time mark-to-market, especially in shelter metrics.
On inflation, they're saying 207 on inflation.
Yeah.
Yeah. I don't know. They've tended to want to. The committee likes to use the year-over-year
That's a great
PCE, and there are reasons for that. I think the seasonal adjustment
Apple dripping a little bit
during the pandemic. I'm not sure you can trust the seasonal adjustment as much, and so a real-time indicator like that might be susceptible to fluctuations based on seasonality that are kind of imponderable. So I think they want to look at the big picture. This is, policy is relatively slow moving compared to markets. And so you want to have your indicator, your core indicator, be relatively slow moving as well. And it's still 50 basis points above target and probably will come down only very slowly over the next 9 months.
Yes. It's hitting wires. Bullard says we should cut by 25.
A lot of this is to, how can you calibrate over the next 6 months or 9 months?
This is crazy how
so
Bill
by the
Dudley
time you
and
get to
Tim
the
Rouse
second quarter of next
have
year,
moved the
inflation's
odds.
right where
Because
you
again,
want it
I
to
think
be,
Bullard
and the policy rate has come
Bullard
right
sounds
down
the
to
least out of his
neutral
fucking
rate.
mind.
I guess the big risk here, Jim, is that
every time
we
how
have
he
a
just
weak
explained it
economic
was very
report,
logical.
they only go 25
It
and
makes a
signal
lot
only
of sense to
25.
do.
It's gonna
50
be the
makes
Fed is
no
behind the
damn
curve.
sense. That's
Fed
why
is
it's
not
like,
doing
where did
enough.
everybody
It's
get
gonna,
this
that's
damn
gonna
idea
go
from?
louder, and
They would
financial
keep-
conditions are going to tighten and make it worse.
Yeah. Well, markets have already put the easing in there. So that's if those that are concerned about the path of the economy should comfort themselves with the fact that the market pricing already reflects the easing. So that what the Fed is really doing here is following through on a promised easing path, but keeping open the possibility of moving faster, or if inflation turns around.
I agree.
stickier,
25 didn't make
to
sense
take
at
a
all.
pause, in this
But now that
process.
everyone
So,
wants 50, it makes sense. But
it's
I
a
still don't even
momentous,
like a rate cut.
day. You could play this different ways, but I think it would be hard to play the 50. If you go 50, then you have to say, well, what does this mean for the next 2 meetings? Are you going to go to neutral by January? Is that
The
kind of
Fed doesn't
idea?
follow the
200
Treasury
basis
bonds,
points
but
by
the Fed
January?
has followed
That seems
the Fed futures
awfully fast, considering
ahead of
that
the event.
We haven't made all that much progress on inflation in 2024. Most of the progress was made in 2023. So I don't know. I think it'd be tough. It'd be better to just keep that in your pocket, I think.
Yeah. Even as we're talking, Goldman now taking Q3 tracker to 3.0. Jim, on a day like this, we cherish your insight more than ever. Thanks so much.
Well, I don't know. So his comment moved the Fed futures down a tiny bit, but the Fed futures are being really stubborn. They don't want to move down. So again, as long as if we're above 60, I don't know. The last time was 2019. Last time I thought Powell wasn't going to listen to the Fed futures, he caved. And then the other time in 2022, where I thought he wasn't going to listen to it, they changed it the day before with jawboning, just like they did now. So unfortunately, maybe they do kill the 50 basis point right before the decision, but I mean, that may not happen. So again, even if his comments there, Bullard, I think was very, very logical there. But yeah, it may not do it. Oh wow, there's another set of pager news. A wave of explosions targeted wireless devices in various areas in southern suburbs of Lebanon. So circulating photos of fire breaking out in a car in Lebanon as a result of one of the communication devices inside of it. It's different than a pager. There's something else happening. No. There's something else. It's not a pager. It's happening right now. So yesterday was the pager attack. Today, right now in Lebanon, they're saying that they're saying phones or devices. They're just calling it communication devices now. So it may not even be, it may be beyond just the pager. Yeah, bro, yesterday was crazy. I don't know. It's really weird. So it's like I talked about it with you guys yesterday. There's two, I guess technically there's three possibilities that happened. I mean, one is that they infiltrated the supply chain and that whoever did the attack, it's a crazy concept to think about it. That means they got in the supply chain somehow and have literally implanted explosives into pagers and phones and God knows what else, and still found a way to make everything work. And that's crazy. So that's one theory going around. The other theory is that they sent some sort of message that overloads it. Some frequency overloads the battery and then blows the shit up, which is terrifying. And then you're like, what about my iPhone? What about other lithium-ion batteries? All that shit. But then that's crazy. I don't know if it's possible or not. But then this is the other theory that obviously, welcome to the fog of war and everybody else. Some people are saying it's a false flag attack. So they're bringing up other times in the past where governments have hurt their citizens to justify expanding the war. So it's either two theories of an attack, another theory of a false flag. And welcome to more killing in 2024. Yeah. It's crazy. Well, none of this is confirmed. Not one piece of any of these theories. So that's why we don't know. All that's happened in 24 hours. There's these attacks, and now, even right now, I don't think anyone's claimed the attack yet. There's no real evidence of anything. Like, we have no idea. That's why it's crazy that another headline is coming out right now that other communication devices are blowing up. We've already had we have not gotten rate hikes or cuts at 2 p.m. So you got a decent amount of time. Most people are bullish or bearish. I think bullish, just because no matter what, even if today's bearish, it's not going to be bearish right now. Even like I said, even if I get 50 basis points today, I'm thinking about the future. So, today might tell me a little bit about the future, but I do think a lot of people are, they're generally riding the wave of right here, right now. And then we're going to be thinking about what happens down the road. And then again, everyone, it's hard for people to resist rate cuts, bro. They love it. Can I give you a theory? Let me. I don't know if it'll happen immediately, but usually there is an effect. I don't know if you guys want me to tell you. I don't know if you want me to tell you this. Are you ready? So just think about it. What happens if you cut by a quarter or half? What gets cheaper? Not your typical houses, cars. There's something that gets cheaper. You got to think about it. What gets cheaper? It's not houses, it's not cars, it's not washers, it's not dryers. Yeah, it is debt. What kind of debt? What kind of debt? Margin. So literally, after the Fed, if this should have a trickle down, essentially margin rates are going to come down. It's going to become cheaper to literally buy stocks on margin after today. So, and then if Homeboy does it by 50, it'll be even more cheaper. Yeah, overnight borrowing. Think about it. That's what you crackheads love if you on margin. Yeah, no one's. I haven't heard a lot of people talk about this. That's why people are worried about inflation and other things, because it's just like, wait a minute, why are we cutting, and why are we cutting by so much if everything is so good? Like literally, why are they going to go make margin 0.5% cheaper on top of everything else? Or why is again, by the end of the year, people want margin rates to be down by 1% or more? So 1% on the Fed funds rate, that means margin will come down by like a third, which is kind of crazy. So, ta-da. BRDG, I feel like we saw that yesterday. Issues labor. I agree, Powell. That's what he said the other day. They don't want to see the labor market slow down. But that's like kind of the whole idea here, is just that maybe the Fed sees a different labor market than the BLS shows us. The argument is that it's preemptive or reactive. The argument is that it's preemptive. So that's where we're all kind of debating, though. But I think if you go too big, it may be reactive. But essentially, the narrative that they're trying to put forward is that this is all preemptive, that we plan that inflation is going to be coming down. We see everything working in the right direction. We don't want to fall behind, and we want to go and start cutting now so that we don't. It's all preemptive. But that's where it's kind of like, well, wait a minute. If it is all preemptive, why are you reacting so soon and then so large and abruptly? Would you say would they see the real labor market? Yeah, that's what I'm saying. Maybe that's what I'm saying. If Powell responds too heavily, he may snitch on what the real jobs data is that you don't see from all of the lag data. That's what I'm saying. I'm using today as a signal, amongst other things. But if Powell, if he snitches, he's gonna snitch. I mean, it's gonna be through how he plans on moving rate policy in the future. Because again, why? Like, why are you gonna make margin cheaper? Why are you gonna do all of these things? Again, if it's preemptive, I could see. I don't even think 25 makes sense, but it just a lot of it just like, well, why are you doing this? So although people are gonna like it and get excited off of it, I think it paints a pretty grim picture in the next couple of months. Jeez, bro, are you ready? Yeah, it was walkie-talkies. Yep, you're right. The communication devices that exploded across Lebanon are handheld radios that are different from pagers that exploded yesterday. The radios were purchased by Hezbollah 5 months ago, same time as the pagers. Yeah, so I think they infiltrated the supply chain. I think they made like a fake terrorist supply store. They're like, welcome, Habibi. Don't you worry, come here. Don't worry, we have everything you need, Habibi. I have walkie-talkie, pager. You need an RPG, everything. Come here. Don't worry, you need a camo. You need a helmet, a Toyota T100. Come. Yalla, Habibi, yalla. I have everything. Everything for you. Terrorist supply store. Welcome. You have a phone number? Give me your phone number, 10% off your next IED. Yalla, come on. And then it really was just made by Israel, and then it ended up just being all tainted equipment. That's crazy, bro. That's crazy. You do that so well. Well, thank you. I'm Middle Eastern, so I'm allowed to make that joke before you guys, try to crucify me for being racist. You guys are the ones supporting bombing my cousins. And I actually speak Arabic. So, اسكت يا عبيط. انت عبيط قوي. انت عارف انت مش افهم انا بكلم انت عبيط قوي. So yeah, I got you, bro. تمام حبيبي تمام. We are flagged now? I was already flagged. What did I did? I had Muhammad in here the other day. What was he saying? Muhammad was putting us on the watch list ASAP. I was like, oh no. So yeah, man, it happens. It happens. All I heard was Intel owie. That kind of sounds the same. That's crazy though. So again, it's another round of attacks in Lebanon. But it does seem like they did. I don't think it was just randoms though. So I do think they targeted it towards people trying to buy, certain communication equipment. But that's crazy, dude. And then, you know what? I might as well give it to you now. Do you guys want tinfoil? We've been here for an hour. I have tinfoil. I was going to put it on the watch list yesterday. It's related to the Bitcoin play. So did you guys watch the watch list yesterday? I hope you got it. I kind of like this one's crazy, bro. It's totally random. It has nothing to do with like Hezbollah or the war. So I don't know. I'm kind of coming out of left field here. Are you ready? Are you ready? No. And then the news is there's more news. Yesterday was pagers. Literally about like 30 minutes ago or less, there was another communication attack in Lebanon on their technology here. So that's why we're talking about the walkie-talkies. Are you ready for the tin? I was thinking about this. Oh, crude oil inventories. Minus 1.6 million. Estimate was minus 100,000. So that's a fat pop. It looks pretty bad. Cushing oil 1.9 draw versus 1.7 previous. Gasoline inventory 69,000. Estimate was 1 million. Cops find explosives in car near Trump rally on Long Island after second assassination attempt. You're kidding me. I have to confirm that. And then distillate inventory 125. Estimate was 1 million. So you got oil numbers now. Some people are saying a bomb in a car next to damn Trump again. This is crazy. Oh, and then Bradley Frizzle. What time? What's happening? We got Middle East drama. Man, we got oil numbers super low, oil popping. We're hearing about Trump, and now we have Bradley Frizzle in the peach, baby. My goodness, let's go. Yeah, stand up, Peach Nation. And then we're going to get rate cuts. It's crazy. What a crazy day today. My goodness. It's an unidentified, unregistered car. Shut up. This is not happening again. Are you for real? So let me see. There's no way, though. This is crazy if that's the case. If there's really about to be... Oh, dude, this is going to be nuts. I love you too, man. Thank you for the first one. First timer, baby. DJ Ali. Yeah, 1 minute ago, people have found explosives near New York Trump rally on Long Island. There's not a lot of sources on it, though. That's what I'm saying. People are talking about it, but I don't think it's, like, confirmed. So, see, I don't know. I don't know if that's true yet, to be honest with you. I'm not seeing much about it. And then, again, oil numbers are going crazy. Yeah, the source is a little shaky. There's literally only like 1 or 2 people talking about it. So be careful. That may not be there. Yeah, honestly, so I don't know where that's coming from. Yeah, Daily Mail. Yeah, so honestly, it may be a little bit, I think that one's a little bit more false, to be honest. Yeah, so see, if people start talking about it, you may hear it, but for now, again, I think Israel and the Israel-Lebanon stuff, and then the oil numbers recently, that's caused some more stuff. Yeah, it's not iPhones, it's walkie-talkies. So day number 2. You're getting videos of it? Oh, the war stuff? Waka Waka with his war headlines of the morning. But yeah, we did talk about it before you reminded me, so I'm glad. I'm glad. Yesterday was pagers. There's 2 different attacks. So yesterday was a pager attack, and then today, now you're getting the what's it called? Now you're getting these walkie-talkies, or communication devices is what they're calling them. Yeah, more people are circulating it, but I don't know. Yeah, it's circulating now, but I'd be careful. I'm not buying it for now, to be honest. I need a better source. But that's what happens with these assassination things, sadly, is that there's a lot of, like, you don't know. Like, even with the guy in Florida on Trump's golf course, it was weird. But I don't know how much validity that has. So be cautious on that headline. And then oil futures pair losses after data. Yeah, oil's back to green. That's running. Yeah, it's all the one source though. That's why I'm saying it doesn't matter who tweets it. It all comes back to one source. So there's nothing from law enforcement. There's no official statement. There's no other videos. So again, I'm just out of an abundance of caution. I would rather be late than wrong about it. But I can't confirm another assassination attempt until I see it. And then dozens of people wounded in Lebanon. I'm looking at the futures when I say oil. I'm looking at literally spot price of crude oil. That's usually my go-to. Will the cuts benefit the market? Yeah, it'll benefit a lot of things. We were even just talking how in a weird way it's going to even make, it's going to make things even cheaper for margin. So there's a lot of good and potentially a lot of bad. Was it 4,000? I think it was like 2,900. Ahead of time of the turn. No, you're good. It's a wild headline. I see people talking about it. It's relevant and interesting, but like I'm saying, just when we look into it though, until there's a little bit more, it's still a little shaky. So they're saying sources in Nassau. This is from the Daily Mail. They say Nassau County police officer told One America News that the rally site perimeter was breached and a blue container was removed. Canine sweep, they found an explosive device in one of the vehicles. Again, this is all from the Daily Mail. And then oil came back to red, but still dancing around. Oh, the Beto tinfoil? My bad. There's all those headlines. Whew. All right, are you ready for it? Here it is. I thought about this because I was thinking about the rate cuts, the yen carry trade. I was even thinking about Bitcoin's role with rate cuts because I was like, it's crazy. Bitcoin's expensive, and then we're about to get rate cuts again. And I made my fortune on Bitcoin with low rates. There's only literally Bitcoin and crypto has only had 2 years of high rates ever in its history. Every other time, Bitcoin was a low rate environment currency, and you see how it proliferated. But are you ready? Are you ready for this? This is what I'm going to tell you. Here's my tinfoil. I know who invented Bitcoin. I think I figured it out. I don't know. Maybe I should write a book on this. Maybe I shouldn't tell you at 9 a.m. on the day of rate cuts. No, I know who made it. No, it's not CIA. No, I know who made Bitcoin. No, it's not the NSA. No, I know who made it. I finally know who Satoshi is. I know. It makes a lot of sense, actually. I bet you it was Camelot. They say nobody knows, but I think Josh figured it out. If not, he'll tell you. If he dies later, you know. If he dies, you better repent. That's all I'm telling you. If Josh tells you and they kill him, you better repent. Are you ready for it? Are you sure? I cannot say it, though. Maybe I don't say it. If you don't want me to say it, I won't say it then. Apple's still running. Yes, you got it. It was Terrence Howard. He has the patent. Damn it. No, it's not Terrence Howard. Okay, well, if I die, just give your life to the Lord. My tinfoil is that Bitcoin was created by the Japanese. Bitcoin was created by Japan to escape the crisis of their currency. Even then, Satoshi Nakamoto, again, the money supply, the low rates, the differentials, all of it, bro. Yeah, I think I really, I'm starting to believe it. Japan made Bitcoin. And they made it after '08. And they're, again, because if anything happens now, think about all the money in there. You have a the nature of even Bitcoin, it kind of operates like the yen at times too. Well, no, I was just thinking yesterday about what's going to happen today with the rate cuts, and then I was thinking about the crypto, and then I was thinking about Japan. I was like, wait a minute. So it's a crazy theory, but yeah, they banned Bitcoin. Yeah, that's exactly. They don't want to expose it. But yeah, that's my 10. It's been an honor knowing you. Thank you. Thank you. Many yen. Many, 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 many yen. No, I think you'll see this video. I haven't said anything crazy today, to be honest. So you should be good. Woj just retired. The sports guy? Asked about pager. Lebanon Chief Gutierrez says it's very important not to weaponize civilian objects. Lebanese army, we ask citizens not to gather in places witnessing security incidents. Jeez. Spot on. Samsung, Toshiba, Nakamichi, Motorola, Satoshi Nakamoto. Oh my gosh. That's kind of trippy. But no, yeah, that is kind of crazy. Samsung, Toshiba, Nakamichi, and Motorola is Satoshi Nakamoto. That's wild. But yeah, that's my 10. It's Japan. Maybe Bitcoin will be, if the Japanese yen ever like fails or whatever, or depending on what we need with the shift, I think the yen and Japan, or the Japan and the Bitcoin, just, yeah, I don't know. Something to think about. It sucks. We have not moved. I mean, right now, again, the jitters are real, but we are definitely doing nothing ahead of Young Powell. But give it like an hour prior, it's probably going to go crazy. What time? So 7:43, 11, 12, 1, 2. So we have 11. You got a couple of hours. We got like an hour, 2 hours, and 15 minutes, and then maybe 2 hours and 30 minutes. And then we'll start getting into the previews, and then 30 minutes later, it'll be Powell. Yeah, so you still got a lot of time. Well, IWM should benefit off the rate cuts. That was what everybody's been saying since last December. But the problem is that it's been 8 months, 9 months. And then low-key, like a lot of the companies on the Russell are still unprofitable. So this is what happened last time we were planning in rate cuts. It started the wave with the Russell, and there's definitely some upside on the Russell, but you need to confirm the profits. But honestly, I do think this could be a good play for today, even the fact that it's trading lower, because the Russell is the only one that is not broken out from all-time highs. But there's a couple of speed bumps in the whole Russell logic. Honestly, the big risk of today is that I think the big risk on a lot of these news is that everybody, oh yeah, why is PayPal rocketing like that? The big risk is that if everybody just goes back to buying individual names, like if today, following the report, if this just becomes the NVIDIA show, then all the reactions are going to be messed up. So hopefully you get something that's broader when it's all said and done. I don't see anything. I see stable coins. No, I don't see anything on PayPal. It's a pretty big one. "23 months of greatness, baby." Shout out to the chat. Amen. Amen. God bless, baby. Welcome to the rate cut day. Yeah, I don't know what's going on with PayPal. There was stablecoin PayPal news earlier. I don't see anything now. I see a Barron's pump the other day. 111 Republican former officials endorse Harris, say Trump is unfit to serve America. And then YouTube testing communities on mobile devices with a small group of creators to test communities with more creators before expanding to more channels in early 2025. Zero Hedge posting about Trump explosive now. Let's see. Honestly, I might do it, or someone just go call the Nassau County Police Office. Say you work with Stock Market Live, and call them and ask them. Just like, are these reports unsubstantiated or are they true? Thank you. Is it possible that either cut doesn't matter and we have euphoria and rip? No. There's a chance that we don't do anything. That if everything is within the dot plot and priced in, then that's it. That could be the situation. But other than that, I don't think it's like that crazy. But whatever PRTG is, that's going nuts. Mara Beto. I forgot about coin. I like PayPal. I like certain fintech. I think, again, with AI and a lot of things, it'll be good. But, I mean, some fintech like Affirm and shit like that, I'm not a fan of. But I mean, financial technology is great. MSTR, they had an offering today. Let's see. Jeez, this expense, Habibi. Will that work? PayPal's ripping. Alrighty. PGHL, JCap short report. I don't know what that is. PGHL. Well, you could. I was thinking of double dipping on TLT. I was thinking of doing. I was going to do $100 every hour until. But then I had a different idea. I just made a play right now, so that's the one. I'm going to go with the small one for now, and then I do think I'm just going to hold and then play around right before. The TLT plays, I explain what I'm looking for on last night's watch list, and then if you go to the one before that, there's an idea on the TLT plays, and then even the Thursday from last week. Otherwise, I don't plan on going over any more plays. So what I'm changing the stream around a little bit. We'll still have plays, but I'm going to cover them on the watch list. So pretty much is going to have a 24-hour delay. That's all it is. I don't know. You know, some people wanted to freak out, but just be on there for the watch list. But that way, so we don't get distracted with all the news and everything else, go hit up the watch list, and that'll have everything for you. So if you have any questions, you let me know on that. But I don't want to go through hey, are you holding this? Do you have this? Should I buy this? Should I sell this? If you really care, ask me for the watch list, and I would definitely answer it. Watch list views must be down too. Watch list views have been down for years now. That's not anything new. I just don't want to deal with it. And as there's more people coming to the live stream, I don't want to keep dealing with it. You know what I'm saying? You guys can buy the stream alerts. I don't know. Y'all talk a lot, but you know what I'm saying? If y'all want to throw your little side-eye shade about what I'm doing, I mean, you could always buy something. I don't know why you're ignoring that. Otherwise, pay attention. Take the plays as they are in writing, and do your thing. Otherwise, that's it. I don't know. Like I said, I have some potential changes I might do coming into next year, so I got to even test out some things. You can go first link in the description. First link in the description. Amazon. I like Amazon a lot in the long term, but I would want it at a much lower price. So that's the thing. Can't afford it. No worries, man. Get the long term. Watch the watch list. They'll still get everything. If anything, I think it'll probably save you some money. So, amen, man. If you can't afford that, I would opt to put all my money towards the long term till I could afford something like that, if that makes any sense. Would you take your money off the table if it's double? I mean, come on, man. You really want me to answer this? So I've held Amazon since like 2014. I never sold it. So you could sell whatever the fuck you want. Go ahead. But yeah, I know what you're doing, man. So unfortunately, you're going to have to sit out a little bit. You know that's why you're asking? No, it's a waste of time. You know the answer. You know the damn answer. I don't know why. Honestly, I only timed you out for 30 minutes, but now that I say it out loud, I have to turn that to 24 hours. Because I'm like, there's no way you asked me that. And you already know damn well. I think you've even asked me before. So yeah, man. Newsweek, despite online reports, no explosives were discovered. Womp, womp, womp. I think someone called the police station by the time I said that. Because, yeah, there you go. If you're getting confirmations now. Josh brutal nowadays. Yeah, man. Hell yeah. I mean, it's not even brutal. Just a little bit of Yosh and straightforwardness, you know. I gave y'all like 4.5 years of fucking around. So now you guys are going to have a couple months of chattitative tightening. So get a long term. Enjoy it. Watch the watch list. You know, don't be entitled. Because that's all. Just some good principles in life. You could avoid the wrath of Josh if that's the case. Still love you. Gonna ask you, talk to the Lord if He could put it in my heart to be nicer. Amen. I appreciate that. I like it when people pray for me. So, amen. That's kind of petty. No, it honestly got distracting. So, I mean, I don't know. You guys, I get why some people don't like it, but like, I don't know. I think some of you can be, if you truly are real with me, it's been very, very productive. I don't know how to describe it. The chats have been great. The discussions have been great. The plays have been on the money. There's been so many good things that have happened since I started acting like this. So although I understand, you might get sad a little bit. It may not be as fun. You're not going to get certain things. I really truly can see evidenced that the productivity has gone up through the roof. The discipline is high. The productivity is high. So I don't know. I like it. It's kind of bittersweet. So pray for me. That's what I'm saying. If we could find a nice balance where productivity remains like that, and you know, I hope I could act a certain way, but you know, I do appreciate how well we have done and how well the chat is. It's a nice community and it keeps it clean. Life different after taking this stream serious. Let's go, baby. Been unburdened by what has been. Load halted pending news. What was the thing that caused it? Don't trip. Just pay attention. That's all. Just better your life. Get a long term and act on it. And just remember, like my PHILOs, nothing is guaranteed. You know what I'm saying? Act now. If you have an opportunity, use it while it's still there. You don't know what will be here or won't be here. So make sure you don't live with regret. Act how you need to act with the moment and treat things how you are in the moment and pray for me like you said you will. That's it. And we'll get there. But that's really what it. If you really don't really see it, man, it's right there. Just don't regret anything and act while it's there. If you have opportunity, use it while it's there, and that's it. Yeah, the news there. People are saying that there wasn't a bomb at the Trump thing. So I'm glad I told you to approach it with caution, because I don't think that headline it didn't have the makings of breaking news when it came out. Halfway to day trading, VIX. We're getting close, man. You're getting close. Couple more 1,000 people. The market will be ripe for the trades, but it's getting there, bro. I mean, that's it. It's crazy how we're barely moving, but clearly this is the jitters to one of the biggest days in years, my friends. It's kind of crazy. It's kind of crazy. Powell is in the title, my brother. For the Fed watch? Well, what do you mean? I'll be here for Powell. If there's something else, I didn't know there was more. The suspense is killing you. Yeah. I'm really excited, bro. This is it. And then it's crazy that we have to deal with the new risk of people not knowing 25 versus 50, but yeah, it's gonna be good. Would you say it's smarter to trade after the SEP? Yes and no. It's very, very simple. But like you got to think about it. Like you're not moving right now, so it's like you could trade right now, but what are you gonna get? And then after we get the SEP, that's going to give you a lot of data to react to. But then, like I said at the last time, think about it. If you get this market move and like we're going to be priced in 1%, sometimes playing ahead of time, that might give you, you're more likely to get the initial move than going and chasing. So long story short, I have a yen future, and I want to sell out of it before the event, but then I'm kind of thinking, well, fuck it. I might just risk the 1% off the move because I feel like if you're going to catch any move, it is going to happen right when the data comes out. Are you following? So that's why it's like risky and not risky. After the SEP, we're going to get more data, but then sometimes ahead of it, if you're willing to take the risk, and if it has a certain floor, you could get more off of the initial move than you'll get off of anything. So it's a weird catch-22 that you got to find the answer to. Fed futures, go search Fed Rate Monitor Tool investing.com. Type that into Google. Fed Rate Monitor Investing. Those words will bring up investing.com, and then boom, or /GQ will be the Fed futures. All right, I need to go to the bathroom again, bro. I might even go get a car. I'm kind of excited. I remember I drink a lot. I had caffeine this morning, too. I'm telling you, bro, I get hyped on Powell days. They don't feel me, bro. All right, I'll be right back. Follow me on Instagram, at The Trading Fraternity. I love you. Good morning. This is the day that the long term pays, that the long term pays.
Of a 50 basis point cut. This would be one of the first times this has happened in a non-emergency capacity, perhaps raising questions of what are they seeing? Why are they going to make such a big cut if it happens? Not so long ago, former St. Louis Fed President James Bullard did tell CNBC he thinks the chances of a 50 basis point cut is actually overblown. So we have seen this probability come in about 5% since those comments at the highs on Monday at 70%. But the main point is more than 50%. What has this done for stocks? Well, over the last couple of months, since we have seen some of the sectors, in particular technology, peak, we have that magnificent 7 in the bottom panel of this chart that we're looking at, down about 5%, whereas you have some of the rate-sensitive sectors, utilities, real estate, staples, healthcare, defensive sectors doing better because their dividends will look less attractive. That is not the case, though, since the Fed started hiking. Let's take a look at technology since that time period. It is clearly the top sector, up 60%. In fact, all of the sectors a nice rally, except for real estate. Higher rates, of course, lower the values on real estate. So that is the one lone sector over the last 2 years that has done poorly. And then finally, Ed, this is mind-blowing in a way. NVIDIA, over the last 2 years, since that Fed hiking cycle had started, up more than 770%. We have the likes of Meta up nearly 300%. Microsoft and Apple, not to be left out, both up about 50%, 75%. Big rally for tech. But more recently, as we've had this rotation into other sectors, tech cooling off. But you can see those investors over the last couple of years doing quite well.
Bloomberg's Abigail Doolittle, thank you. Let's keep the discussion going with Megan Horniman, CIO of Vidence Capital Advisors. And we start by asking, how significant is today's Fed decision for the technology sector?
I think it's definitely very important for the tech sector as well as the entire market. I think that if the yields keep moving higher, as we've seen here as of late, then that's negative for technology. And technology is rallying on the anticipation that we're going to get 50 basis points from the Fed today. If that doesn't occur, I think that that's going to put this rally in technology at risk.
There is a part of the Mag 7 story, Megan, where those names are performing in isolation of everything else that's happening in our world because of the commitment to invest in the infrastructure supporting AI. How closely tied are the two stories, that and central bank policy?
Well, I think central bank policy and then the story around technology, they're separate things. The infrastructure with technology, the advancements that we're going to see, this is going to evolve over time. But the valuations that you're seeing on these stocks is linked to interest rate policy and as well as yields. If this interest rate policy does not deliver with what these heightened valuations are anticipating, then you're going to see some valuation correction in these names.
Is that limited to the big caps or more broadly across technology in and of itself, Megan?
I think it's broadly across technology and even some of the communication services, any of these growth type of names that you've seen with these very high valuations. These high valuations are pricing in perfection. They're pricing in that the Fed will come in, deliver with these interest rate cuts. They'll come in, save the day like we've been used to over the past couple decades. And they're also pricing in perfection for the economy. These things, none of this is set in stone right now. So I think that there's a big risk here for some of these growth and high PE level tech sectors.
Is that just in the US, or do we see the wind taken out of the sails of European tech too, Megan?
Well, we don't have as much technology in some of the European indices.
She sounds like a principal. Like, I feel like if I got in trouble in school, I would talk to Megan, Verident's CIO. Wow. TLT and TX. Oh, I never said I like TXT, so don't put that devil on me, man. Yeah, I don't know. Just look into bonds. I've covered many videos and ideas with how to play bonds in different durations. But yeah, I've never said I would buy TXT, so strike that from the record. Thank you. Nothing has touched that day. Honestly, bro, August 5th this year. Do you realize a month ago, that morning after the Bank of Japan, that was the closest you have been to the COVID crash? That was a flash crash. We almost had a limit down on the futures. On June or August 5th, August 6th, the futures almost had a limit down. So low key, the only other time we saw that was then. Otherwise, it was 2019. Loretta? So, bro, this is huge. What's her name? The lady.
What do they need to do with policy, monetary policy?
So
to
Loretta retired.
Goals over time.
So her replacement is going to vote today.
Is trying to do.
So technically, one of these dots is going to be a brand new dot.
Concerned about it.
And it's because of her.
But
she's no longer in the Fed. It's really weird. If you guys don't know, this is what I'm saying, bro. All of this is nonsense because you got to think about it. It was the past. It was a Wall Street Journal reporter and an old Fed member from years ago who got everybody talking about 50 basis points. And then now CNBC, they throw on Bullard, and he's the old Fed guy who just quit. He says 25, and now Loretta, she just quit. I'm pretty sure she's going to say 25 too.
Has been saying in
so
terms of
welcome, man, but it's a lot of nonsense.
Positioned. Typically, they would like to start a change of
But yeah, I think her name's like Beth,
25s,
is the new lady.
which seems appropriate. Fed likes to be deliberative. And they can always move faster if it turns out that the economy evolves differently than anticipated. That said, you can make a case for a 50 if you frame it as we're taking out insurance. I do worry about the signaling that a 50 would do in terms of one, would it signal that the Fed believes things
So let's see what the Fed rate monitor does.
Faster,
but they're sending all the other former people on the rounds. And now they're all saying the opposite to what the Fed futures are pricing.
And if they do, then maybe the market's
This is very interesting. They're trying to engineer something.
So I think
now it's at 58%. Holy
for the
fuck.
future, being very
bro,
open
this is
to
weird.
doing that if the economy
This is going to be weird as shit.
And starting with 25.
No, bro, this is going to be weird as shit. It's at 58 now. So now there is no probability.
The Fed has been giving even right before the
bro, you're watching this in real time, bro. I'm telling you. I told you it's bullshit how they came out with 50 and then literally now then you have Bullard now saying it and now Loretta and now if it's 50-50 it's just going to be up to Powell. There's no history that we're going after. You know what I'm saying? Yeah, it's on the wire. Loretta calls for 25.
Whether you start with a 25
and then PayPal announces partnership with Amazon Buy with Prime. That's why PayPal went up.
I don't see them.
I think that's old, but now I have the headline. So yeah, Amazon
really
partnership with
dissent
PayPal.
because it's 25 versus 50 or 50
But yeah,
versus
homegirl,
25. I think
homegirl saying 25, and now the Fed futures are below 60.
Thing coming out of the
This is
meeting
insane.
It's time to start a new phase of monetary policy.
Everything you say makes total sense, and I was just going to bring that up, whether he has the votes to even go 50. Because I'm not sure Governor Bowman, based on her
Yeah, PayPal's popping even bigger now. Hold up.
I know there's a new voter.
So again, I'm giving you that confirmation on the headline. PayPal's actually reacting.
So I don't know which way she's going to go, but even if he pushed for that, would he have the votes?
This is disgusting.
Well,
Shame on
again,
you, media.
I think, given that the big
Because I don't even know what are they trying to accomplish
or
now?
the big message is we're going to be able to start a new phase because
I think they're trying to make it where they don't know.
Sustainable path to 2%. That's the big
That's
thing.
all, Mike.
Yeah.
If you're already
We'll
in
see.
favor of moving rates down, and it'll be a series, it won't be a one and done. It's hard to argue that you would dissent on 50 versus 25 at the start. But you're right. There may be people who aren't comfortable yet in starting to move rates down, and there you might see a dissent. But I don't think people would really, given it's
weird.
a close call on 25, 50,
No,
dissent just on
Bloomberg
the
did this
size,
too. This is
if they're
fucked up,
already in
dude.
the camp that it's time to start
I'm
moving
telling you, I
rates
think
down.
right now, I
Finally,
think they're
wanna
trying to
read you
make
what,
it
Harvey
where
Schwartz
Powell
at
has a
said on our air this
50-50.
morning. He said whether it's
That's it. I
one
don't
or
think they
two,
even want
meaning Fed
anybody
cuts, the most
to.
important thing is
They don't want
monetary
anybody to
policy has
front
worked.
run this
Inflation
now.
has come
But
down.
now you have
The
people
Federal
positioned
Reserve
on
has
both
done
sides.
An amazing job
And
with
then that's
complex
it. Because remember, I was
circumstances.
telling you, I was like, I
wonder
bet
if
you the
think
Fed, the New
committee
York
gets
desk probably
appreciated,
made
or
a
if this
bet,
kind of
but
work is inherently
people got mad
thankless.
when I said that. But
No,
now
I
it's like,
think the
dude, we're
committee
literally,
feels good, and I
there's
think
no
they should,
majority
that inflation
being
has come
priced
down.
in on
the
the
job isn't done yet, of course, and I don't expect
on the
Chair
Fed futures
Powell
right now. It's
to
wild.
pat himself on the back at all. I think he's going to be very realistic that a soft landing may be in view, but it's not assured, and the Fed is going to stay on the job until
It's all in
inflation
Powell's
reaches,
hands.
2%. At the same time, managing the risks so that labor markets remain healthy. So I think this is an important day in the sense that a new phase of monetary policy is occurring. But I do think the Fed is going to be very cognizant of the risks on both sides of its dual mandate and do the job that Congress has told it to do, which is achieve price stability and maximum employment.
So since you just stepped off, you can be really honest.
There's
with
many
this question.
ZQs. There's ZQZ.
I know they don't talk about politics.
ZQU.
but
I'm
if-
in ZQU.
if
So I'm
you
in
were
a Fed future
Wouldn't it
play.
cross your mind that going 50 at a sort of questionable
This is
time to go 50
Crazy.
with less than 2 months to go before an election would
Powell's.
look really
I
bad?
think Powell. I think is the one who
Absolutely
started all
not.
this,
I
man.
honestly nothing is framed
That's it.
that
They're
way.
just tossing
I
it
never
up to
was
Powell now,
thinking
but
that way. I was always
this is
focused
ridiculous.
on what's the best thing that we can do.
This is
for
absolutely
the US economy
ridiculous.
at this point, and position monetary policy to
then
handle
oil
the risks,
breaking out.
no matter which way they play out. So to my mind, really what the job is now is to make sure that monetary policy stays very well positioned given the risks around the outlook to our dual mandate goals. And that's always the
Okay,
way
now
I've
you're at
always-
60. It's
and
hanging
I would
on there.
submit that that's the way the Federal Reserve thinks about monetary policy. Politics do not enter that room.
It's fair.
Loretta,
That's what they say.
Yeah, Loretta, you've always been candid, and it's nice to be able to pose even tougher questions to you now. Thanks for everything today, Loretta Mester.
Now we could ask you tough questions because you no longer work at the Fed, and we'll admit that on live television. Thanks, Loretta. We'll talk to you soon because that means the last 4 years we haven't really been talking to you. Thank you for that implication. And now, just as the market is ready to price in 50 basis points, every Fed member today that used to work for the Fed is now telling you 25. And now the Fed futures are on the cusp of pricing in nothing. Absolutely nothing. That means it will be up to how Powell feels in 2 hours. Thank you. Thank you. Wow. Wow. Here's a message from our sponsors. Oh my goodness. This is kind of crazy. So yeah, that's I think it's kind of funny, but we'll see if we get any more. But now all of a sudden, everybody is going back to they're going back to talking about, well, maybe we do 25. We'll see. I think the Fed rate monitor is going to move around. But that was crazy. It went down to 58. Is it back at 61? I'm at 60. So yeah, it's moving around. Moving around. Well, not TL. Well, no. I mean, honest, I don't know what's gonna happen now. This is gonna get awfully volatile because if you're not realizing by now, you're really gonna leave half of the market behind now. And I think they're confusing everybody on purpose so that nobody could front run it. That's it. I think that's it. I'm telling you, my theory was that Powell orchestrated all of this. And then, like I said, some people got mad. And then all of a sudden now they're trying to tell you the exact opposite and then get you to a very unique scenario that hasn't happened, I want to say, in like 20 or 30 years. Or maybe 2015 was the last time the odds were 50-50 as opposed to 60-40. So it just seems like they want a high level of strategic ambiguity and leave it 50-50 so that Powell could make a decision, and then they don't want anybody front-running it. Because now that's it. Half the market is going to be off sides. Do you get what I'm saying? How can you front-run this move now? You know there's going to be a rate cut, and you know all of this shit, but now if you can't front-run anything because half the market's on 25, the other half's on 50. So, yeah, you don't know really how to front-run this anymore. That's kind of the problem. And then now you don't even have a signal from the Fed futures barely. You thought a 60 meant 100% historically. Yeah, but that's the problem. Like literally 60 seconds ago, 60 fell to 58. And then what happens if that goes to 50 by the time it comes out? So literally, I'm sure Powell is watching right now. Like now it's falling below. So now if it goes below 60 and there's no majority, it is up to the discretion of the Fed chair to bang the gavel at whatever he wants. That's what I said yesterday on the watch list. It's either going to be a guaranteed 50 if the Fed futures hold, or Powell, it's up to him. I don't know. I don't know if anybody else is going to come back down or someone's going to come out, but if they get one more Fed speaker, that might do the trick. Yeah, where's Barkin? Where's Goolsby? Bostic? It's so funny because today we heard from a former Atlanta Fed chair. I'm like, why don't you tell me about the current one? They don't want to say his name because we still don't know about his punishment. The new dot is Beth. So that lady we just watched, Loretta Mester, she retired. So she no longer works at the Fed. And now her replacement, Beth Hammock, that's the lady who's taking her spot and will be voting. And why that's important, because ironically, we're all like hyper fixated on the dot plot and like where the Fed's going to be at. But like literally, Beth is a new voter. So we have no idea how she votes. We don't know if she's bearish, bullish, dovish, hawkish. We don't know if she's going to have a high terminal, a low terminal, so she's going to kind of be an X factor. That's what I said. It's a kind of a variable because she could skew things depending on if she's a cluster in the middle, she could change the median, but if she's an outlier, then she'll just be an outlier. But it's kind of important. And then even then on the statement too, we still got to watch out for that. But yeah, it's a new voter, a new Fed lady, new Fed voter. And yeah, the dots are anonymous, yeah, but the whole point is that you have like a new voter. There's no real, you don't really have like behavioral analysis, if that makes any sense. Because you could go back to the other dots, and if you know the members, you could kind of assume who is who and have an idea of where certain dots would be. Like, remember when Bullard used to work for, again, and Bullard was the first guy we heard. When Bullard worked for the Fed, you knew where his dots were. But that's why when he left and someone replaced him, that means that dot that would be on top now could end up in the middle or somewhere else. So it could be there. So if I understand, if it's over 60, it's actually guaranteed that's what's going to happen. Like it has to, but anything under is discretionary? Yes. I mean, can they do something different? Yes. But it's been about like 65, 70 years of history that anytime the Fed futures have been above 60%, the Fed has gone with the majority. But 60% is a majority. Anything below 60, it's usually at the discretion of the Fed, because then that means the market is truly undecided. Yeah, that's why it's a very cool fun fact that I've always shown everybody, and we've made a lot of money on it. This is how we made a bag on the first 30,000% TLT by understanding this in 2019 because it was a similar situation. Yeah, exactly. It's credibility, and it's both not only Fed credibility. That's why when people say Fed credibility, that's what it's talking about partly. But then also they don't want to upset and disturb the market because, again, if you have 60% of the market piled in and then they get the legs taken out, you're going to get that volatility. City saying 125. Well, that's the thing. We're already at 125. That's what you guys got to realize. We're already pricing in 100 basis points. So the market already says we're getting 100. That's why they're so adamant on 50 today. Because if you don't get 50 today, you only have 2 more meetings left. So how the hell are you going to get to 100 if you only have 3 meetings? That means one of them has to be a 50. So no, that's for 2024. So look, here's the other chart. So here's the dot plot. Like this is the dot plot and the curve of Powell and the Fed futures. So here's the dot plot. The medium rate is like right around here, 5.1, but the Fed futures in white, they're below. Do you see that? So the Fed is higher, the Fed futures are lower. Then you go out to 2025, and then the Fed and the Fed futures are matched up. And then you go out to 2026, the Fed futures are higher than the dot plot, believe it or not. So do you see there's some differences in this whole curve, but that's what's going to change. But pretty much the market is ahead of the Fed for this year, matched up with 2025, and then behind the market, behind Powell on 2026. Ta-da, the dot plot is on federalreserve.gov, and then go to projection materials. If you watch yesterday's watch list, it has that info. So second link. Oh, yeah, everyone's waiting for this move today, man. This is big now. And then not to mention just this wild uncertainty that we have to deal with that makes it all the more wilder. And then oil's still breaking out. My goodness. Would 25 compared to 50 be bearish for the yen? Yes. The more tightening or the more cutting we get, the more the yen will probably run. Because, again, that differential is going to collapse. Well, yeah, September after this is it gets wild. So after today, I mean, the seasonality gets pretty ugly. You passed the SIE. Wow, good work, baby. Congratulations. And good luck at the start of a new career, hopefully. All 7 members of the 23andMe board resign. Yeah, they were supposed to get a buyout, and then the people who are looking for the buyout, they quit because they're like, you're not really trying to get us sold. Mulan on the low. Coin on the low as well. That's coming down. SPY's even dropping while the bonds have came up. The Fed to keep the dollar strong? No. They don't. The dollar has an effect, but ideally they want the what's it called? They want price stability, not necessarily the dollar. Nightly watch list around between 5 and 7. I've been changing my schedule around. So yesterday I think it came out at 6, but in between 5 and 7 p.m. Pacific time. Odds are down to 57. Yeah, bro. I'm telling you, though. It reminded me of the 7 rate hikes and then BS conversation. Everybody moves for no reason, and then everyone gets really confident, and then right before you know it, it's like that Kermit meme fading into the back. That's funny, though. If this is at 50-50 ahead, it's going to be wild. The bomb at the Trump rally. We still don't know. Again, it seems to be both confirmed and unconfirmed. Some people are saying it's happened, some aren't. So I don't know if it is technically true. Yeah, someone said the Nassau County Police Department confirmed no threat. A spokesperson can. So yeah. So a reporter is in here. Thank you. But yeah, I told you guys to go contact the police department, and then literally 10 minutes later, there's reports that people contacted the police department, and it's not. They said that it's not there. Yo, SYY Symbiotic dying. Yo, SYY or Cisco, excuse me, down 1.5, 1.2 in one candle. SYY flush. Cisco. Yeah, the food Cisco. Heard on the street. Kroger antitrust case. Oh, this is earlier, but they could be tied into it. Interesting. And USFD is moving. Okay, so then it's bigger than that. But like I said, there's the Kroger deal. Yeah, U.S. Foods is moving. Weird. So food companies are all moving. Maybe there's no, Tyson's not moving. Are we feeling the other way? No. I mean, we just need to figure out what Powell's going to do. But at this point, I really think Powell is going to surprise the shit out of all of y'all. I think now it's just up to Powell, bro. This is fucked up, man. Dude, it's been a very long time since we've had a Fed meeting like this. So I was already excited, but now it's just getting more funnier and exciting at the same time. Let me see. Where's the picture? Yeah, I'm telling you, bro. The last time you were like split where one outcome sends you one way or the other, it's, again, 2015 maybe, but we haven't had a meeting like this in a very, very long time, bro. So now that means you're just going to be in the middle. Well, I know he has. I don't know. Maybe he doesn't cut. Fuck. I don't even know how that works now. But low key, it's going to be wild. That the fact of the matter is Powell could do whatever he wants. Like literally. So he could go 25 or 50, and this time now everybody, it's going to truly be a surprise when it comes out. If it's up to Powell, then isn't it going to be? I think if it's up to Powell, it's going to be beautiful because then you'll know what he really wants to do. If it's 25, then I think Powell has confidence in a soft landing. If it's 50, I think we're about to have a recession in 3 to 6 months. I think it's very simple. This is going to be a snitch. If Powell says 25, if he has the choice to, so if Powell has the freedom of the Fed futures not bullying him, then that's it. I think 25 is, that's his confidence in a soft landing. 50, I don't think he has confidence in a soft landing. Tinfoil, the Fed will move it in the direction they want last minute, as they always have, which I could kind of agree. But I also think this time around they may want 50-50. I don't think they want anybody to front run, but definitely last second. That's always in the cards. When is Powell's term over? Next year. But like I said, if you make a name like Finger to the Sky that was just created and it's your first message, even though I agree with Finger to the Sky, I'm banning you. Don't let me know that you've been banned and are circumventing the rules. So please make a new name and try to fit in normally with who you are, but don't try to stand out. Thank you. Yeah, I had to ban him. That's the rules. Go read the rules. I don't know why we get so confused. I don't know. I kind of liking the Russell. I think the Russell might. I'm just kind of scared because there's been a lot of doubt introduced in terms of things holding up, but that's about it. Like it has to. It's still the leader and it still hasn't hit all-time highs, but we'll see. That was mean? No, it'd be mean for all the people. It would be mean for the people that I banned and I didn't enforce the rules equally. The premiums on the Russell are insane. I just think the Russell itself, and the SYY, Troy said there's a conference. So they made some statements. That's why they're dropping. And then SPY, then bonds even popped up here. Still washed them. The rules are in the description of the video. They've been there for about like 5 years, give or take. Yeah, TLT's getting up there. They're working their way up. I mean, we have a couple of hours. Again, that USFD is really, really bad. That's the new, I think they probably gave a guidance update at their conference. Seems to be it. The yen staying stable. Oil came down from 70. Everybody in the TLT. They're going to get robbed by the FED. Microsoft inflection deal below EU merger review does not need approval in EU countries, regulators say. And then that's SPY. You just got it. Literally, you just had a big green, and now you got a big red. Hot dog. The stream alerts after signing up within 24 hours. Sometimes it's like almost immediate. Sometimes it just takes a while, depending on where you're at in your phone and all that shit. And then bonds, I mean, they may break out here on the day. We'll see. Yeah, the walkie-talkie thing is confirmed. That was earlier in the morning, believe it or not. That was, I want to say, like an hour ago. People losing their mind. Well, get ready, man. It's going to be weird because, again, if they cut by 50, you're going to have a very weird environment of, like, crackheads all running to buy the dip and be like, oh, my gosh, bullish. And then you're going to have a big group of people like, recession! It's going to cut you. So it's going to be funny. But just get ready for that. So if people were freaking out on Monday, I could see why. But just get ready for this dynamic of bullish in the short term, bearish in the long term. It's going to be very, very, it's going to be a very weird middle ground. And I think it may confuse a lot of people. So I hope you're ready for that. GME Ryan Cohen news. We'll see. Let me know if that pops. Penalty to settle antitrust law violation. If they cut rates, TLT goes up theoretically, but that depends on how much in the plan moving forward. If you really want to understand that, I would go watch the watch list before Powell comes out. Otherwise, good luck. You watched the last 4 videos on the trading fraternity and the TLT play was not there. Okay, so if I find it in less than a minute, I'm going to ban you. Okay, let's go. Count. Go. Count a minute. Go trading fraternity. We're going to go to the videos. We're going to go Monday's video. Yesterday was Tuesday. Monday. Okay, hold on. I'm going to get, is it a minute yet? Plays. No. No. Okay. Stop Monday. Okay, we gotta go back. Oh, we're gonna go live. We're gonna go here. We go live. See, I tried. Oh, I found it. TLT. Whew, that was close. Is it a minute? All right, hold on. I still going through. Let me go. It's probably earlier on the actual chart. That's TLT on Powell. That's too much. Great example. FXY better than TLT. I think I'm past the minute, so I won't ban him. But, yeah, it's on this one right here. Yeah. There it is. I think we talked about it a little bit more there. 42. Nah, we'll let it slide. We'll let it slide. But, yeah, go to the live one. I do think worst one. Or no, is this the Monday? Oh, shit. Oh, I guess I was wrong. TLT. Yeah. So I think I explained the one play. The one that we got. Yeah. He survived. I'll let it. It took me longer than a minute. I did delete the Friday video. Yeah. So unfortunately, if I have a truth dump on you, I have to delete the video. Because I'll get reported and banned. Like you guys have shown me you will do already. So unfortunately, that's just how we have to live in China. 105. Well, listen, man. I told y'all yesterday, don't post the plays in here. I'm going to ban you as well, too. So you guys need to just get people to watch the watch list or not. But I'm not tolerating none of this nonsense anymore. So stop the game. Stop sharing the info. I ask for something very simple. So don't get banned on Powell Day. Thank you. You want to send me a pager as a gift? Dude, that's fucked up. What the fuck's wrong with you? Why would you say that? Jesus. You're fucking weird, dude. Ugh. Even your chat fax is even weirder. Yeah, I banned that shit right away. Oh, man. Now, dude, your chat facts reads so much weirder now. Oh, creepy. Creepy. Read the room. My social credit score. Oh, it's already pretty bad. T-Mobile and OpenAI join to revolutionize customer experience. It sounds like what's it called? Sounds like a fluff piece, but I like T-Mobile, man. I've been liking all this stuff they've been doing. I think you're sucking the premiums out, but literally, like right before the event, you might get a bigger move. Like I really wouldn't be surprised by that, to be honest with you. Actually, what time is it? 10, 11. Yeah, we still got a little bit more. It's only 8:30. Oh my gosh, it's push-up time. So chat, Adonia. We are live Monday through Friday, 30 minutes before open. Drop your thumbs up on the video. You're on mobile. Press hot chat. X out the chat. Hit the thumbs up button. Second link for the nightly watch list and main channel. First link for the Scream Alerts boot camp and real estate costs. But ladies and gentlemen, boys and girls, you're here right now. You've been here for 2.5 hours. Sitting is the new smoking. You need to get beside your desk and do 10 push-ups. Just move around, bro. I'm telling you. I would stand up and I would move around ahead of Powell. You want that blood pumping. You want to be ready, bro. You don't want to be all looking like a shrimp. You don't want that nerd neck leading into it. You need to be free and ready to go, baby. So let's go. Get the body moving. Chest to the sun. Flex the core. Tuck the hips in. It'll be good. You just got off work? Nice. Let's see. Chat has to ban me? No. I didn't like your comment. You made me put down my resistance band, so I had to ban you now, Joel. Sorry. Don't play with me, y'all. Come on. Have a good day. Thank you. That's it. You could be on the watch list, buy the stream alerts, or you could just have good behavior. It's up to you. Otherwise, I'm not talking to y'all. Stay in the game. This is game time. On new issue day, bro. Oh, this is probably the most important Fed day in the last 4 years. Like, if we didn't have, like, if 2019 and 2020 weren't so crazy, I would say this is the most important in 10 years, but at least in the last couple of years, this is important. At least since 2020 and 2020. or 2020 and 2022. This is probably the most important Fed day. And they have bands? Yeah, no, bro. I my resistance bands are like $7 off Amazon. They're good ones. Oh, your clients picked to come in today at 2 p.m. Oh man, it's a dilemma. They're like, yeah, I'm down to meet you today at 2 p.m. 2 p.m. exactly would be lovely. And then you know what's going to happen? You're going to agree to meet them at 2, and they're not going to even show up till like 2:27. So you're going to be sitting there waiting somewhere, and then you're going to still be watching the stream, but then they're not going to show up till 2:27. And then right when Powell's going to come out, then they're going to show up, but then they're not even going to be like, as Powell's speaking, you got to do the talk. Everything, bro. You're like, oh, yeah, I love you today. Oh, man. So good luck. What the Fed is going to do? Yeah, that's good. I mean, not a lot of people know, man. Oh, dude, this is crap. I don't even want to tell you this. I almost slapped a lady. You know that? I'm not going to lie to you. I almost slapped a lady. There's a grown-ass lady. This is one of my girlfriend's friends. Do you know what she asked me? At one point, bro, I thought she, like, at one point, I'm like, are you just trying to be cute or something? Like, what's wrong with you? Do you know what she asked me? My girlfriend's friend asked me who Warren Buffett is. I swear she was just trolling. But no, like, the look in her face looks stupid. You know what I'm saying? Like, I could just tell, but, like, I didn't know, but I'm like, oh. I was like, no. Do you know anybody who doesn't know who Warren Buffett is? Because that was the first person I've ever encountered in my whole life. That's why I was like, come on. Come on. Your wife doesn't? You know plenty? No way. Ever since I tuned in the stream, I look at people and I'm like, damn, they have no idea what TLT is. You don't think your wife does? You'll ask tonight? Oh my gosh. Go ask then. We might all find out then. That's crazy. Your wife doesn't, but she's Hungarian? Yeah, I guess. You just texted your wife and she said the stock guy? That's good. She's on the right track. Because I was shocked, bro, when I heard that. I was like, this is crazy. Your girlfriend definitely asked. All right, let me know. Whoever sends me the funniest reaction, I want to see a good one. It has to be real, though. Don't orchestrate one. I'm not going to give you anything. I just want to know. Because it seems like my mind was blown, bro. I was like, I've never had this. I've never encountered anybody like this. Why is CVS popping? And then NVIDIA flushing bonds, they topped out a little bit there. The sources we're using for the basis point prediction is the Fed futures /ZQ is the literal asset on ZQU, I believe, for September. But that is what we're looking at. The Fed futures, you could go on investing.com, and that'll also give you that info as well, too. So it's something we've showed in a lot of our videos. And where is it? Is that 60 for now? Mine says 60. You're with your girl in Spain. She does not know Warren Buffett. That's crazy, bro. Offside with no cut. So a cut is going to happen, but I actually don't know considering the odds, but technically a cut should happen. But it is going to be, at this point, either way, it's going to be shocking. There's no other way to put it. That's it. After the back and forth with the media, the odds, and how it's moving now, I mean, it's clear we're gonna get we're gonna get a volatile reaction because it's just impossible to price. Not to mention, you don't even know what the dot plot's gonna say. Was it CNK on the low? A lot of names on the low, honestly. Bond just gave up half of that little rally there. Yeah, Cinemark dying. You asked your wife, she said, President of the United States. Your girlfriend knows who Jensen is, but not Berkshire. Wow. Isn't that weird? I'm like, I guess we are just blessed, and we think what is important to us. Nobody gives a shit, you guys, okay? So that's why it's amazing that there's 5,000 people in here, because do you realize how weird you are to watch the stock market when the rest of America does not give a shit and they have no idea, and this is all of the money in the world? Isn't it crazy? That's kind of nuts, bro. I'm blown away now. I thought this was going to be a one-off experience. You're like, no, my girlfriend, my wife, they didn't. What? I asked random people if they knew who Jerome Powell was. The cops didn't even know. They were like, John Powell? I'm like, oh, no. Oh, no. And they punish the daily watchers. Now, they only punish you if you daily trade. But if you hold the long term, you're good. Oil flush? No way. Yeah, it hit 70, then flushed to like 69.80, but now it's about to go back to 60. Damn, about to be negative. Oil was literally up by 1 point something, and then now it's literally down. So oil's back to red. Remember, you had oil inventory numbers that made it go up a lot. Prayers for your brother? Oh, shit. Yeah, man. I got you, Marcus. My prayer warrior. Show some love. And SPY's going lower still. Oh, you got the SYY? Nice. So, again, that was from the little conference, but that moved a ton. Yeah, the premiums are kind of juiced oh my gosh. Yeah. People are going to get robbed on this. Be careful. Yeah, those dailies are juiced. It's kind of crazy. The dailies are like up for the last like 4 days. Yikes. All right, you're getting a flush, and then bonds are going green. Or again, they're getting a little bit of a green wick, maybe not going green. No, but the short-term premiums are still like mad elevated, which is wild. Yeah, it is. So that means I think you could get washed, and it's not going to even be a normal wash. Like essentially, you're going to lose. You could lose a lot faster on these dailies. I think there might be an opportunity for a daily, but I don't know if going early is going to hook you up unless you're perfect on your timing. But it's wild. They're actually up. The odds, I mean, right now I think it went back to 60. So literally ever since Loretta, the last like hour, the odds have been swinging between like 60 and 57 or 56. I see 60, but give it a couple more minutes. It should update every like 15, 30 minutes, or just go look at the Zaza, the /ZQ. NQ SPY just took a big one. Again, NVIDIA is a big deal, you guys. Remember how many times NVIDIA has literally moved the whole entire market, and then that's dumping now. Southwest popping. Again, they had Elliott news here earlier in the morning. Intel. Oh, yeah. Intel's doing that whole sell off the good news. Microsoft even down. Amazon is down. Where's Meta? Yeah, all the big caps are down. What time is it? 11:48. We just did push-ups. So not bad. Again, we'll do the preview at like 10:30. So, again, the release comes out at 11. I'll go over the watch list in the preview at like 10:30. And that's, honestly, I don't really have much. I wish I've showed you a couple of the charts. I could go into it with more depth. But pretty much the preview is just going to be the watch list. I went into great detail on the watch list last night. But the weird part about today is, like I'm telling you, man, you guys got to realize that this isn't your normal Fed meeting. We have so many things happening today where the odds are volatile, the statement is volatile, the press conference is volatile, and the summary of economic projections is volatile. You know what I'm saying? We don't usually have to deal with this many things coming into a Fed meeting. Usually you don't really have all of these things all at once after 4 years presenting themselves. So, yeah, I do believe a lot of you should be more prepared. Hell yeah. So, but it's a lot, though. So that's, like, what I'm trying to say is I will go over the preview and we will know what to look for, but anything can happen today. You know what I'm saying? What happens if the statement reads different and then the dot plot, or if it's just the dot plot? What if he does 25, 50? All of these things, there's going to be like 30 different combinations of how today could play out. You get what I'm saying? Because you have to plug in one source and then another. Is it going to be dot plot and rates? Is it going to be rates in the statement? Is it going to be the SEP in the statement? Is it going to be all good and then Powell shits in the can? You know, like all of these different. It is going to be a lot of opportunity, and because right away people are going to lose money or make money right away, right off the bat. I'm even going to be one of those people. I have my Fed future plays and I have the yen. So we'll see how that goes on. But the fact is, like, people are already positioned, and that's why it's kind of getting, like, hyped up. But there's a lot to digest today. So we'll go over the preview 30 minutes before 11 a.m. Pacific time, which is around, 1:30 Eastern. And then it's pretty much the watch list, second link, so you could get ahead. And then we're going to go from there, baby, and then see what's up. Well, you can make money, and, I mean, here's the deal, bro. None of you have to be scared about today. That's the beauty. Like I said, I think it'll be tough if you're trading. I'm not going to lie to you. I think the midterm, long-term updates from today are going to be money. But even if you want to trade today and you want to get involved, the answer is to trade small. That's it. All you got to do is trade small. Why? Because if there's big moves and then surprises, as long as you go small, just minimize your downside. That's all you got to do. If you really insist on it, all you have to do is minimize your downside, and then it's not that scary. So like I said, the Zaza, after we get the reaction, I think playing the Fed futures is going to be really, really cheap. It'll be very low risk to reward. Again, if you trade small, lose small. Exactly. If you can find certain TLT, gold, Bitcoin, yen plays, whatever it may be, as long as that sizing is small, you're going to be fine. That's it. The only way you're going to get smashed is if we get back and forth 0.5%, 1%, and you keep going big on short-term expirations, or you're going big enough where you're panicking, and then now every move is costing you a couple hundred or a couple thousand or a big portion of your portfolio. That's where you're going to have to pay for it. So that's what you got to watch out for. As long as you keep it small, though, I would be excited, because then I think small offers you upside while offering you the ability to play without having to break anything in trying to chase too hard. So as long, again, MES, small options, small amount of budget, you're gonna be good to go. That's it. But if you're going big on ideas that aren't confirmed, I mean, God bless you. It's either gonna work out or it's not. You know what I'm saying? It's gonna be a really painful or successful day for you if that's the case. So just gotta find a happy middle ground and you'll be good. It's hype, baby. It's getting close, man. It's getting close. We got like 2 hours. It's literally about to be 9. And then 11. 12, 1, 2. Did I see your last message? I may have. There's been a lot of messages today. Oh, I thanked you 1,000 times, but 1,000 isn't enough. Hey, man, God bless you. I did see that. I think I was middle of the rant, but I appreciate you, bro. Amen, man. And you show that thanks by getting a long term and you becoming a boss, baby, who knows how to present themselves and could withstand the Chad without getting banned. You know what I'm saying? Imagine you could sit here with Josh 7 hours, not get banned, and have a long term. Oh, my goodness. If that's not an accomplishment, I don't know what is. I don't know what. Do you see what they don't feel me, bro? They don't feel me. Still not banned. Amen. Amen. There's a whole gang of y'all. That's the still not banned gang. What's up? They say we really out here, bro. We really out here. I'll check the Fed. Bro, the Fed rate monitor tool trips out my my Google Chrome. Holy shit, it's at 56 now. Yeah, bro, I don't know what to tell you. So now, technically, there's nowhere to go. So now, technically, there is no majority that the market is deciding on. So now we're in Powell's territory. Now you're in Powell's turf. 56 means that it's up to Powell, and the market's not pricing or communicating a guarantee. You're on Powell's turf now. So as long as, if none of these numbers say 60, Powell could do whatever he wants. As long as if one of them says 60 or higher, then you know that's going to happen. And that's why we're saying, holy crap. Because remember, last week, the previous week probability was 16%. You guys do you not realize that? That's almost 1,000% gain from where we were at one point. Last week, we did not have a probability of a rate cut of this magnitude. So now, all of a sudden, everyone went excited to now we're getting back to reality. But if nobody is guaranteed a majority, then unfortunately it's up to Powell, and then we don't have any. We're going to be flying blind into the meeting. If this number goes 60, we're going to have an idea of what he might do. But as of now, you're on Powell's turf, and you don't really have any signal on which way it'll go. So that's pretty mind-blowing, you guys. But it's here. Welcome. This rate is the risk-free rate? Yeah, technically. The Fed funds rate is the risk-free rate. That's usually what you're able to collect without any risk. At 52 on Monday, it's close. Well, if that happens, it's just going to be up to Powell. That's it. So it doesn't, like I said, it doesn't give us insight, and then it's up to Powell to go a quarter or 50. The bonds will probably move more than the SPY. I'd say TLT can move at least 1% today in the right scenario. And then again, if that dot plot moves more than a quarter or 0.5%, then I think the range will be a lot larger. I think every reaction, again, don't underestimate. People are going to like the cuts. That's why I think it's going to be weird. You're going to have a lot of crackheads who like the rate cuts, and they're going to be very excited about it. And then eventually people are going to start talking about the economy and recession and all of that. So above all else, I think everyone's going to like what's going on, assuming the dot plot doesn't turn bearish. Any cut will be good, and then people are going to talk about the economy and then heavy data watching. 7 days, 1 year anniversary. Almost 4 years for Greg, and then Gary. Not banned, gang, 53 months. Tell him, baby. Ain't mad, nah. Happy Powell Day, baby. Happy Powell Day. The adrenaline will wear off shortly. Pretty much. That's what I'm saying. Exactly. That's a great analogy. I'm glad you said that, because it really will. The rate cuts is adrenaline. It's going to feel like adrenaline. Everyone's going to like it. Everyone's going to get excited. And then it's going to wear off. And then we're going to be heavily watching the data. And then we're going to be worried about the recession and all of that other stuff. Pony, 24 months. Bro, I remember when Pony was like the highest in here. And now we're about to have a 60-month badge. That's insane, bro. God bless Chattadonia. That's crazy. Powell Day. 50, 25 don't matter because long term. Hey, man, Boeing says furloughs will affect tens of thousands of employees. Bonds better than equities. Yeah, I said it earlier. Like, you got to realize, like, the risk is what happens if the data comes out and then everybody plays the game of ignore everything and only buy NVIDIA. If that's the case, your market moves are going to get fucked. Do you understand what I'm saying? That is a risk. So after the cuts or not, if everybody starts moving towards this ideology of going back to the heavily concentrated tech stocks, then your index is going to move a lot different than how you would think. So then if that's the case, I think that would go a long, long way. I've been lurking since you had 100 subs. 100! Oh, man. Shout out to real ones, baby. Shout out to real ones. Let it be shown with a long time listener, 4th month member. Let's go, baby. I appreciate all of you, man. And again, too, man, let it be known. By not getting banned, that says a lot. So thank you. You know what I'm saying? Especially under chattitative tightening. Meanwhile, look at you guys are like, I love it, Josh. Wow, let's get it. Let's get it. Meanwhile, they're like, why are you so mean? Nah, man, you got to stay in the game, baby. It's game time. 57 months. No ban, gang. 48 months. Come on. Hey, man, what's the best case scenario? I'd say best case scenario, you get a quarter point. And this is my opinion, though. That's the thing. I don't think there's a way to answer this without being very opinionated, because everybody has an opinion that's either a quarter or a half a basis points. In my opinion, I think best case would be a quarter point rate hike and no problems. And then everything stays in line with the dot plot, and maybe you imply a little bit more rate cuts, and then nothing changes in the future by much in 2026 or 2025. Quarter point, not much changes, slightly more rate cuts. I think that would be best case scenario. Some people would think that would apply with 0.5. Did I say hike? I meant cut. My bad. Cut. My bad. Yeah. So that's what you got to think about, man. Chad. No band gang, baby. Let's go. Easy to be negative. Take to heart what's positive. Tell them Benny Silverio. Following since 2020. I did not know I could sub till 6 months ago. Making up for it for donos and gift subs. I'll take it, man. I'll take it. Either way, man. Let it be known with the long term. With your behavior. You know what I'm saying? Let's go. 2 hours. Yep. It does not feel like 2 years, man. I know. It's crazy. It's really crazy, bro. The fact of how many hours we've been here live, Monday through Friday, like every day. You know that? I be waking up at 5 a.m. shitting myself. Like, you have no idea, bro. It's crazy. It's we out here, man. Let's get it. It's crazy. It's culminating until today. So, again, like 4 or 5 years ago, we hit the first ever TLT play. It was a similar situation to today. That's why I'm like, wow. And there's only 100 people on the stream then. So it's kind of crazy to where we're getting right now. So I hope y'all ready. Y'all ready for this? Bow now now. Bow 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 bow. Yeah, today's fine. Why are they moving like there's no rate cuts? No, just for now. That's it. It just the big moves were ahead of it. And right before, like, imagine, look at how much you moved the 2-3 days prior, then even the last 2 days, you gapped up and hit a new all-time high. So now this is just like the intermission. This is like, I don't know, it's like, have you ever been to like a theme park, like a SeaWorld? And you know how there's like a big line outside to get in the rides? And then there's like an indoor area, and it looks like the line goes inside, and you think that's when you get there? But then you really just enter the inside line, and now there's even a bigger line indoors. That's how I feel like it is today. There was the line to Powell, and then we're like, oh, it's here. And then we think we're about to get it all, but then you just walked into another line, and that's today. So now we have to wait till Powell comes out, and then we get to board the roller coaster, my friend. Then we get to board the roller coaster. What's priced in? That depends on the dot plot and what we actually get. It's 53.40. It's crazy, though. But you guys, I'm telling you, and Bloomberg shit on me this morning for telling you guys this yesterday. But, like, bro, if the odds go 50-50 today, this is some nasty work by the Fed and the media. You know that, right? Because that means in the last 4 days, they went from virtually no odds and then poisoning the well with this idea of 2 rate cuts, and then the day of the damn meeting, come in and try to jawbone it all the way back. You know what I'm saying? Like, it's actually kind of crazy. Like, it's nasty work by all of them, bro. Dude, because it's like, it's both the Fed and the media, but I can't believe that happened, because that's literally what you have gotten. So that's why I'm like, and that's adding a whole nother element of today. And it's just, once again, remember I was telling you a couple years ago where the Fed, they did that right at the last minute and they used the data to pivot? You kind of are having that happen right now, just in a different fashion. So I don't know, man. We'll see. Libya aims to double nat gas production to 4 billion cubic feet over the next 4 to 5 years. Odds are at 56. I think 56 to 53 now. But it's coming back in there. I think it might be at, it may not show 60 by the time Powell comes on. And then at that point, it's up to Homie, and then y'all better be here at 2, because it will be fireworks. Mm-hmm. $11 million. It's kind of low, yeah, because you're almost at 3 hours. That's like, what, $3 million an hour? Boeing to temporarily furlough white-collar employees for 1 week out of every 4 of the strike. I don't know. It sounds like the old news, but it's showing like it's new. Furloughs to affect base executives, managers, employees. At what point is the decision made and the odds irrelevant? So a couple years ago, I would have told you yesterday. This is the beauty. I learn every day alongside of you, because a couple years ago, I would have told you yesterday would have been the final decision. But in 2022, I've witnessed Powell pivot at the very last second. And he even addressed it during a press conference and said that we could change our dot plot up until the moment he walks out, or up until the moment it's released at 2 p.m. So theoretically, they could change it up till 2, and I believe them. I believe, with what I've witnessed in the modern era, I have seen the odds go literally 100% in 24 hours from the day before the meeting till the day of, and then Powell act on that. I've witnessed it, and thousands of you have with me as well. So unfortunately, up until 2 p.m. today, nothing is finalized. So at 2 p.m., once it comes out, that will be the final decision. But borderline, you could argue Powell and the Fed boys are still trying to make that decision right now. He might have. That's exactly. Yeah, he might have 2 press releases prepared. Oh, easily. Just because, remember, if you see the analysis that we do on the statement, I could pull up the statement and show you which lines are going to change, right? So the statement doesn't change a lot, and so does the dot plot. So they probably have a couple ready to go, or depending on who's the deciding vote. So let's say Powell and the rest of the Fed members, they're in one area, and then Powell's final dot, that will be the thing that pushes you below or above or over the edge. So, yeah. But pretty much he has until 2 p.m. to finalize it. You would think the SCP would be the cutoff. Yeah, but they're saying, but Powell said it, any member could change their dots up until 2 p.m. So they should be fine. I used to believe it was done the day before, but what they showed us in 2022 was clear that any member can change their dot the day of, all the way up until it's released. Nothing is finalized. He has to watch. I don't think he's watching the market. I think he's watching the bonds, and then again, I think they're communicating, and then I think they leaked all of this, bro. I know Bloomberg tried to say it's conspiracy, but no, man. I think it's a valid claim, And I think that from the end of last week, somebody started slowly feeding the market this idea that 2 rate cuts is even an idea, because you don't go from less than 10% to 90% odds and then back to 50 or 6. That just does not. That's a really, really, especially with no data. It's not like the data was done. Again, if you were going to have that happen, it would have been on the ISM manufacturing. So you mean to tell me no ISM manufacturing, no nothing? We start moving more than the ISM manufacturing? It's not believable. If you know enough, it's just not believable. That's why I'm like, sadly, I do think somebody was a silent whisperer, whether it's Nick Timmerhouse or Bill Dudley, but somebody wanted they started feeding this to the market and money started following it, which is wild. Because I'm saying, you just don't watch that happen. And that's why it's like, before you know it, now this is the most undecided meeting in decades, just because of what went down in the last couple of days. Otherwise, it just would have been first rate cut and everything else, but we would have just been all debating 25 and then what that means and everything else. So now there's just another aspect of it. No one needs to go to prison. That's what I'm saying. That's why it's funny when like Bloomberg try to call it conspiracy, because like this isn't like unknown. This isn't like it's a crime or anything, and it's not like the Fed hasn't done this before. So I don't know why people get so offended by, you know what I'm saying? Like, understanding some of this stuff is just simple. If Powell wants to make his job easier, or if they don't want the market to be caught off guard, they have been known to strategically leak stuff or get info to the right people. That's why Nick Timmerhouse has the reputation that he does. Where did the Timmerhouse Fed leak? That didn't come from nowhere. That came from a consistent history of using media to slowly inject ideas that you want to happen. And that's so it's not crazy. It's just the sad reality of how the Fed and the media can work hand in hand when they want to. Yeah, Cart's up a shit ton. And then SPY's running. Oil chill. The yen's still down. Vivos. My brothers don't dance. They just Vivos. Yeah, Vivos Therapeutics, big pop. SPY even off the bottom. Bonds are already near the open. They're at least off the bottom too. Wouldn't that be insider trading? No. Because I said this yesterday, bro. You guys know the Fed has a trading desk, right? I said this yesterday. I was like, I wouldn't be surprised if it was the Fed trading desk in New York that bought the Fed futures. That's why when Bloomberg and everybody's like, investors pile in to the Fed futures, now people will make and lose money. It's like, I think it's the Fed. It's like, again, I know this sounds crazy to some people, but again, the way it's all playing out, I really think it's the Fed. I don't know. Again, I could be wrong, but I do think that is I think that goes hand in hand. Yeah, they could start the trend or just add to the margin. That's it. Yeah. They just think about it. You get Timmy article. You get former Fed Bill Dudley talking. You go buy 30% of the contracts. You roll the ball down the hill, let the market do the rest, and then depending on, you could feel it. You could go up and down with it, and that's it. I mean, they're not going to lose. So, yeah. Yeah, literally, I said this yesterday, and then some people got really mad at it to the point they had to get an interviewer on Bloomberg at 5 a.m. It's not even like manipulation. It's like political strategy. Do you guys get what I'm saying? That's why, like, I know how people try to downplay it and like they want to like view this like kind of crazy and it's like some scheme, but not. It's just strategic. Do you guys understand what I'm saying? It's not even like, yeah, it's like politics at its finest to a degree, but it's like less political. I guess it's acceptable manipulation then. I guess you could say strategy is manipulation, but it's acceptable in the sense like it's been like this for like 100 years. Is what I'm trying to tell you, is that the Fed and all of these movements, and then, you know, again, every time they throw out an idea and they don't do it, they're just trying to see how you react. So, but it's not like, I don't think it's insider trading. No. That's where I think it's really different, because they're not trying to profit off of it. You know what I'm saying? They're not trying to make money off of you. They're just trying to establish something. I guess it's just one of those things that I guess was it Henry Ford says that if everybody knew how the monetary system truly worked, they would revolt in a day. Because maybe that's why people don't like this topic. Because they're like, what do you mean this is what they do? I'm like, yeah, unfortunately. That's literally the New York Fed's trading desk job. Yeah. There's somebody literally is employed to do it. It's actually kind of wild. And then SPY's running here, man. I know some of you wanted those dailies. They're still juiced, bro. I got a couple I'm looking at, but I don't think I'm going to take them. I'll let you know if I do make a play. Or actually, I'll put it on the watch list. I forgot. But I am looking at some of them, but I don't think I'm going to take those. And like I said, yen, bonds, gold, Bitcoin, those will probably be the ones. Even, I don't know, I'm kind of considering the Russell too. I'm not going to lie. TLT will get killed if it's 25. Well, not necessarily. That's what you guys got to realize. No matter what happens, if it is a quarter point, but then the dot plot is really aggressive, your TLT is going to move big. But then vice versa. If it's a 50 basis point cut, and the dot plot is a puppy and it's nothing, you might get clapped on TLT. So you may get a bigger front end cut, but then if they lower the expectations down the road, TLT will get clobbered. Or if you get a smaller cut, but then they're aggressive on longer term cuts, like 2025 and 2026, TLT will run. That's what I'm saying. So it's not as clear cut as you think. That's why today has so much more coming into it. It really will come down to interpreting that terminal rate properly and interpreting the SCP. You could watch shy or make a play on it, yeah. So again, 2-year, like I told you this on the other watch list, the 2-year will benefit off of immediate rate cuts, and you get more protection in a sense. But if you want a soft landing, go to the 2-year. If you want hard landing, go to the TLT, go to the long end. So I guess here's a way to put it. 50 basis points, I would play TLT today. A quarter basis point, I would play shy. But then, depending on the dot plot, that could change that logic. Are you following? So again, short-term rates, soft landing, go to the 2-year. Hard landing, they cut by 50, go to the long end of the curve. But then if the dot plot insinuates more long-term cuts, play TLT. But if the dot plot insinuates less long-term cuts, go to shy, go to the short end of the curve, or maybe don't touch it at all. So 10-year TLT is the same thing. In my case, they're going to work the same a little bit. But TLT will, longer than 10 years, will make you more money. There's more range to get off of it. So that's why I was saying if there's a hard landing or we're talking aggressive rate cuts, there's way more room to get yield on the long end of the curve. So 10 years plus, that's going to pay you out very nice in that event. And then vice versa, if it's not, then you want the short end of the curve if we're not getting as many cuts. Yeah, the dot plot comes in right away. You will be getting new voter, Beth Hammock. So she could throw things. That's another X factor. I'm not riding on it too much, but that is something we will have to consider. So pretty much if you get a weird dot plot, I'm going to blame Beth. But if the dot plot isn't too weird, no one's going to care about Beth. Again, a couple days ago, I thought 25 was ridiculous. Do you guys understand? So at one point in the last 7 days, I thought a rate cut of 25 basis points was dog shit. I even put it on the watch list. Why? What do you mean we are cutting rates when a majority of inflation targets have not been reached, and although we're coming close to them, they still may never be met? Food and food away from home is almost double the rate target. The price of real estate and owner's equivalent is double or triple the current rate. Car prices, gasoline, insurance, there's so many things. If you truly believe inflation is coming down and that we are going to get a soft landing, I believe that Powell and the Fed would have done absolutely nothing and let the real interest rate do the work. And once real interest rates highlighted the evidence that inflation is truly dissipated, then we have our soft landing. Then we could do a cut. So in my opinion, 7 days ago, I think rate cuts are ridiculous. So fast forward after this little rate effery, I now believe 25 is at least more indicative of a soft landing. I still think it's nonsense, but 25 is a more likelihood. Hubs. Yeah, Hubs is also buyout with Google. Remember that. Yo, Hubs, 1.7 on that. That could be interesting. What's the date today? The 20th? Let's see. Oh, yeah. Yeah, so remember, I don't know if it's earnings or not, but they've also had the Google. Remember, Google backed out of the deal. Yeah, that's already ripped. Is there a conference? All right. Oh, inbound event. Oh, that's what the other. I thought you were saying something. I was like, what do you mean? So yeah, they have an event. That sucks. I want a buyout offer. That's what popped it up last time. Well, we'll see. I'm in co. Hey. If you think the market would be bullish short term with 50, then why not? Why short expo on TLT? I mean, did you just read it out loud? So yeah, if it's bullish short term, that's exactly why I did short expiration on TLT. I even said it the other day. That's where we could be wrong. Where if there's any sort of lag, that's how we could get clobbered, and then it still does the move, just not on the time. But that's exactly why I went with short expiration. Because I think it's short-term bullish. I think it's going to be a shot of adrenaline, and then when the adrenaline wears off, you're going to realize how bad your leg is cramping in the market. Yeah, I'm still going. Well, no, this is supposed to happen. There is supposed to be buyouts. There is supposed to be buyouts on the... at the end of the year. As we get ready, people want to finalize. Even with rate cuts, too. Think about it. Interest rates are going to change. So if you want to finalize things, I mean, it would be good. Honestly, you might get, if the dot plot is big and the rates start coming down, you might start getting more buyouts. Remember, buyout activity goes through the roof when money's cheap. So that's another thing to think about. Big crab, baby. Tell him, Patrick Picardi. How's the listing in LA going, bro? Did you get, how was Everett? You know that? I don't know. If anybody in the market for a $2 million LA crib, Patrick got one. This spread. I like the spread spill. Closing? You already sold it? Nice. I love it. That's hype, bro. Congratulations. Well, never mind. He already sold it, guys. Oh, it's a beautiful house in Beverly Hills. I showed it. I loved it. It had a gate. It had everything, bro. It was nice. That's crazy. You already sold it? Good work, Patrick. Nice. Nice. I can't post any plays. No, you can post plays, but if you try to post my plays on the watch list or like be shady about it, I know what you're doing. I'm gonna just ban you. But yeah, feel free to post your own plays and what you're in. But that's what I'm saying. I don't want it. Just like I say, if you really want my plays and all that shit, just go to the watch list, and I want it in an organized way, and that's it. But that's how I kind of want to rely on it. Either 25. Well, I'll say it again. I think it's bad. I think 50 would be very, very bad. I'm telling you. I don't know. Maybe I could be wrong on the timing, but I think if we get 50 basis points today, I think in 3 to 6 months, maybe more, maybe less, we will have a hard landing in a recession, if that's the case. Okay? That's it. Very simple. I've said this for a while, and I've said it very straightforward. I will eat my own words if I'm wrong. I'm fine with that. But I'm going off of theories I've outlined a while ago. It has nothing to do with Jerome Powell. If anything, I believe in Jerome Powell. I'm using Jerome Powell today to talk to me. That's what I'm saying. If he goes, you guys got to realize, after all of what we've been through, if they open up this rate cutting cycle with 0.5, that is Powell telling you, yo, something is about to happen. Do you know what I'm saying? Like, I don't know any other way to tell. It's a communication of Powell saying, yo, something is about to happen. Otherwise, 25 or less, I think that's according to plan, or, he's just doing what he's doing, but I don't think he's panicking. I don't think he's worried, but he's sending a message. And again, any other time in history where the Fed has opened up with 50 basis points of cuts, the message has usually been negative. Yeah, 7 days, 01 and 07, they cut by 50. And here's the thing. This is the problem I have. This is where I'm saying Powell, if you've really listened to Powell, there's a major contradiction if he goes by 50 today. Do you guys want me to share it with you now? T-Mobile popping. So remember, they announced that partnership earlier. Damn, they've been running since then. But big pop T-Mobile, they might be at the conference. They announced some AI shit earlier, OpenAI and T-Mobile. But, yeah, OpenAI with customer data to boost user experience. That was 20 minutes ago. But you're getting another pop. Let me see. But do you guys want it? I'll tell you right now. It's a major contradiction. It's a major contradiction if you've really been paying attention. I don't know. I should charge you guys likes for this. I think I've already said it, but yeah, I've already said it, so I'm going to just charge you. You got to pay with likes because then you're making me repeat it. But you would have had it already. What are the likes at? Are we even at 1,000? Just give me like 10 more likes. I'll just take 10 more likes if you got it. Comcast dying? Oh, then that has to do something with T-Mobile. Yeah, Comcast dying, T-Mobile popping. Something's going on in telecom land. That's either guidance or a deal. All right, did I get my 10 like? I just wanted 10, bro. I just wanted 10 people to like the video. Just 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. So if 10 people can hear me, just hit the like button. You know what I'm saying? Just 10 beautiful souls. 1, 2. I think we have 5,000 people in here. Oh my gosh. So yeah, we should be able to get like 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Do you think we could? I think we could get 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Oh, you got me? All right, thank you. Nice. We got 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Nice, we did it. See, you could count that fast. Mm-hmm. All right, perfect. So here's the deal. This is the number one most contradicting thing ever. Because from 2022 till today, your boy Jerome Powell, in a lot of his justifications, even Goolsby, they have all justified trying to replicate the early 90s soft landing. Does that sound familiar to you? If I told you there was a soft landing in the early 90s, does that sound familiar? And does it sound familiar that Jerome Powell and Goolsby and Bullard and all of these people, they all said they want it? And they said, yeah, well, this has been a justification to say, oh, yeah, it's possible. Remember, in the beginning when everybody was like, oh, yeah. We're going to get this. We're going to get that. Soft land. Is it possible? Where was the evidence that it was possible? Was the 90s, the early 90s. So here's what I want you to see. In the early 90s, they never cut by 0.5. So even when the rates were at 8, they started with a quarter. Even when they raised again, so they lowered the rates from 90s to 94, and then they raised them again. But they started with a quarter, ended with a quarter. And then again in 1995, after the rates went to 5.7, where we are at right around here, they started again with a quarter. And then in 97, a quarter. In the whole and 98, they did a quarter again. What I'm trying to tell you, the whole 1990s, they never did half a basis point. That's why it doesn't make any sense to tell me you want the 1990s soft landing and that they're going after it, but then they're reacting way, way more panicked, even with the interest rates the same. 5.7 is the same as 5.5 pretty much. So it is very, very, weird. That's why I'm saying like 50 basis points is a negative signal to me, because even in the last soft landing scenarios, you never responded like that, even if the rates were very, very high. Even though you think 5, 6 is high, we were at 8% and we didn't go by half a basis point. You know what I'm saying? So then, especially if you are trying to really mirror the 90s, you would have done 25, but even then 50 is kind of unnecessary. The point I'm telling you is in the decade of the 90s, you had the ability to avoid financial collapse, avoid inflation, avoid everything negative, and you did it with a quarter point of hikes. And you're telling me they have better data, were more advanced, and could do it better than us today? Huh. Weird. Why do they need 50? It doesn't make any sense. So that's why I'm saying if they do 50, it's a snitch. I think 50 is saying recession and economic slowdown. Won't be able to do so in the future. You don't need to do 50. That's the whole point. As the 90s and I could even go back before the 90s if you really want, but especially because the 90s was your only soft landing, the whole point is you don't need 50. You could just do a quarter every month, and that's it. You could do a quarter today, the next meeting, the next one, and yeah, even if it's only 75, you could go into next year and cut again, and then cut again by a quarter, and you could go gradual. You could do what they did in 2019. You could be very gradual, set out the plan, and go gradually. But if you start going aggressively outside of a range, it's like clearly something else is going on. So, yeah, man, that's my contradiction. So we'll see, though. We will see. T-Mobile has a bunch of headlines. They said something on like 5G, and then Comcast got murdered, and then they announced something with OpenAI earlier. That's why they went up. Learned a lot. I'll start with your opinion. We see 25 today and another 25 by year end and 2 more. Yeah, that I don't see a problem with that. It's like, again, I don't think they should cut rates, but that's more confidence inspiring. If they go back to what the Fed usually does, slow, steady, gradual, nothing's wrong. Again, even in 2019, the first TLT, it was slow and gradual. The mid-cycle adjustment was 25 basis points. Any sort of adjustment that is not because of a panic or economic decline or a big thing out of your control, you're going to go with a quarter every damn time. But that's why I'm like, it's very odd that they would even want more than a quarter and are down with supporting it. So we'll find out. I think this is Powell's way to prevent the front running if it's 50-50. The Fed does is act way too late. But that's what I'm saying, in a weird way, if they just go a quarter at a time, I think they'll be good. Bro, T-Mobile just got washed off of that. That's crazy. So I think Comcast went up and now T-Mobile's down. What a day. Bro, T-Mobile just got washed. $6. Jeez. The politically motivated. Unfortunate, like I said, everybody was talking about how politically motivated this was when it was still Biden. But then right when Biden dropped out, I said it. I said the odds, right when Biden dropped out, the odds of Trump skyrocketed. So at that point, a lot of people were just, myself included, were like, it doesn't fucking matter. Who cares what they do now ahead of it? Because that's it. The race just changed dramatically. But then all of a sudden, your girl Kamala, and then the way it's all playing out is kind of getting a little weird. So it shouldn't have been politically motivated, but unfortunately, it is going to be. It's just going to be hard to ignore. That's it. I can't really give you an answer, except for the fact that there's no way to ignore it. That the question is going to come up. The legacy of it. It's always going to remain that they did cut ahead of the election, but why and how the impact, that is going to be up to history to determine. Bro, T-Mobile got worked. T-Mobile just had a bunch of headlines, and then they had an AI headline that drove them up, and then something on like 5G right there, and then it just whoop. And then Comcast dumped, and then now Comcast went up, and T-Mobile just gave all the gains up for the day in like 4 minutes. Anything on Main Street? No, they won't. The rate cuts will slowly have an effect, but you won't feel the rate cuts on Main Street till around January. So literally the rate cuts will be felt by Main Street. The rest of the people who don't know who Warren Buffett is, they'll feel it by January to March of next year. That's the paradox of all of this too. That's why, when you do ask about the political motivation, this is going to affect financing. This will affect your margin rates, your bank loans, little stuff like that, or bigger stuff that people aren't there. But It's not going to be what you think it is. Have I been to Wall Street? I mean, I've been to New York and I've walked by it, but I've never like been inside of the stock market. I mean, like, what's up, guys? I heard you guys all hate me and spend money to shadow ban me because I give a lot of free info. Great to meet y'all. I hope y'all made money on my shit. Thank you. Jesus loves you. Repent. They don't really like me like that, but I'm down. I'll be down. But I like places with the sun. I need to get more of a tan. I still have my Bloomberg keyboard. Yeah, I kept that shit. Couple of big tech came back up. Uber on the high. Yeah, Uber's been running every day. Check out Wall Street. Yeah, man, why not? New York's cool. Get some good food, man. That's the thing. New York, like LA, there's very, very good food. Bloomberg, I don't know. Bloomberg banned me from a terminal. So literally they refused to sell me a terminal anymore. I used to have one. That's why I stole the keyboard. But they don't like me. Peter Parker's Uncle Pizza. There is a good pizza place. There's one that, and they move into San Diego now. It's pretty crazy. The old commodities trading floor. Yeah, it's kind of crazy. Back in the day, the trading floor used to be nuts. But yeah, I don't even think it's like that anymore. What's this? It's the old trading floors for sale? What? That's kind of crazy. I never thought about it. About buying an old exchange. Like the literal exchange. Oh, the guy just list. That's so crazy. Buy it for the Chad. Yeah, but like that's kind of the problem though right now. With there's so much commercial land where like if the use of it changes over like I don't know how I can monetize a trading floor if there's no like trading there. People don't use trading floors anymore. It's just different. Like this is the trading floor nowadays. Like just online is crazy. The Bloomberg, it's like $2,000 to $3,000 a month, depending on what like data packages you had. So mine was pretty costly. I'm glad though. You could buy a McLaren for it. The Coca-Cola or I haven't tried. I want to. I saw it. I don't know where to get it. Does anybody know where to get it? Where can I get the Oreo Coke? Have you guys seen it? Is it? Oh, it's at Walmart? Oh, okay, good. I'm going to go get me. I want to try it. It looks absolutely disgusting, but I just want to try it. I've never had a Coca-Cola Oreo or Oreo flavored as Coke. Your wife got it from Safeway? Yeah, it's real. It's a collaboration with Coca-Cola and Oreo. So they have like a Coca-Cola flavored with Oreo. And then there's a literal Oreo cookie flavored like Coca-Cola. It's kind of crazy. I've never tried it though. And did I tell you guys my tin? It's not even tin. It was just a moment of realization that I had. This was a while ago. But this was one of those moments where I realized like everything is a lie. HRB and Intuit free tax filing as allegedly breached by Lockbit. Bro, why do they always hack these tax providers like clockwork? Powell would be a 1%. If there's no surprise, we're going to move 1% or less. If the dot plot is all in line and everything's the same, the literal option chain is pricing in 1%, 1.1. So we're not going to go pretty crazy. But my realization was that, like, you know, like when Warren Buffett is like, oh, he drinks a cherry Coke every morning and he goes to McDonald's and eats a McMuffin and a cherry Coke. You guys have heard that about Warren Buffett, right? Warren who? Yeah. You've heard that, right? Yeah, that's cap. You know what I'm saying? Like, that's fucking cap. He would be dead. He is old as shit. He is unhealthy. There's no way he driving around in a Cadillac DeVille eating fucking 50 grams of sugar to wake up and then a McMuffin and everyone's dying around him and it's advertising his stocks because he owns Coke and McDonald's. He's just advertising what he owns to you. That's it. What do you mean? How can he look man? Stop it. He does not do it. You see what I'm saying? But that's how you realize. One day you'll realize that. You'll be like, wait a minute. Because I used to believe it. That's what I'm saying to you. Like, at one point, I was like, oh, yeah. Fuck yeah. He's always drinking. Every time I would see cherry Coke, I'm like, Buffett. Oh, yeah. He just sipped one this. No, he didn't. He didn't. He did not. It's false. He'd be dead. Every day? You think he eating like that? No. Used to just, I know, right? Yeah. It's all, dude, that's what I'm telling you. It was a lie. It was a lie. It was marketing, bro. Yeah, it was so good marketing, you didn't realize it. He was just selling you McDonald's and Coke because he makes a lot of money on those. That's like thinking the athletes be slamming Wheaties for breakfast. What do you mean they do? No, I'm kidding. Like, wait, what do you mean? I thought every fucking Olympic champion eats a fucking bowl of sugary carbs. What the fuck are you saying? What do you mean? That's what champions eat Wheaties. You're not a champion then. You don't even understand the champion. They need that processed sugar in the morning. You can't champion. The fuck? Alrighty. What time is it? 9:40. Damn. 10 o'clock, baby. So 10:30, we'll do our preview, but we're getting in there, man. We're getting in there. It's game time. So follow me on Instagram at the Trading Fraternity. We even got some plays posted on there. Go watch the watch list so you don't miss anything, and I'll see you in a little bit. BRB.
GM partners with about 9 different charging companies. There's ChargePoint, there's EVgo, there are others. But, EV owners, they have access to these apps. They have their credit cards loaded on them so they can automatically pay. In some cases with GM, it just works seamlessly with the car if you're charging it at some of their approved partners' chargers. But in this case, look, you just hook the adapter up when you plug the charge port, the charger into the charge port, and you start charging. And you can get, variously reported, but you're looking at like you can get from 20% to 80% in, say, 30 minutes. That's a rough estimate. It varies by EV, but you're getting a pretty good top up in a short period of time if you're out on a road trip and you need to stop, grab lunch, and you come back and you got a pretty good level of charge.
20 seconds here, David. Is this EV boom going to make driving manual obsolete?
Driving manual is almost obsolete except for Luddites like me and performance geeks and people who own Jeep Wranglers. So yeah, it'll usher in quickly something that's already been happening unfortunately, for quite a while.
That was a selfish question. Maybe people will make me stop learning. But David, we thank you so much for your reporting from Detroit. Certainly an interesting move over by GM. Now coming up, we're going to go back to the hedge fund world. That's what happens with the Sonali Basak 12 p.m. takeover. We're going to talk about Citadel. We're going to talk about Citadel Securities, the division now, backing away from a plan that it has had in place for nearly a decade. We're going to talk about what it means for the market maker that is backed by Ken Griffin next. This is Bloomberg.
Report. Let's get a check of the energy trade ahead of the Fed. It is the worst sector this year. It's currently more than 10% off of its 52-week high. Bryn, how are you playing the space?
Yeah, so I think what you've seen recently is that we have a tremendous amount of U.S. shale production in the U.S. We are pumping a lot of oil. At the same time, globally, growth is coming down. And so I still think oil in general, as with a lot of commodities, has a China issue. And so I think as long as we're going to continue to pump a lot of oil and China continues to weigh on global growth, you're going to have energy at odds. That being said, the energy space, whether it's XLE or we play it via RSPG, which is the equal weight, they're both up about 5% just on a price, and some individual names have actually done quite well. So I think there's still ways to make money in energy. It's just from an oil perspective, the price of oil, I think we're producing a lot, and that's going to weigh on prices.
So, Jim, how are you playing the space? I'm just looking at the estimates for Q3 earnings. A decline of 14% year over year is what's expected. Are there pockets that you're seeing some opportunities in, some that you're staying away from?
Yeah, well, I am bullish on the space, and to the extent that it's the price of oil, crude oil, that's actually generating the lousy returns, I think we should take what Bryn just said and analyze it a little further. She's absolutely right. China is a major reason that demand is so lackluster. I don't want to throw caution to the wind by saying, can it get worse? Of course China can get worse, but there's also a lot of room for it to improve. And with it, the price of crude oil as well. By the way, we still need to refill the Strategic Petroleum Reserve. I'm not saying this is a slam dunk. What I'm saying is that West Texas Intermediate at $70 a barrel has an awful lot of bad news priced into it, and yet it's $70. Not $40, not $30 where it was 5-6 years ago. And at $70 a barrel, all of these companies make a lot of money. And I'm talking about the Exxon Mobils in terms of the more safe names within the space. I'm also talking about the far more risky names like one I own, Frank, which is Transocean. And just a real quick note here, they signed a contract a couple of weeks ago with a day rate of $628,000 on one of their leading edge rigs that's set for 2028. I want to say that again. It's set for 2028, 4 years from now. So the E&P companies are already planning their capex out 4 years ago. That pretty much bodes well for names like Transocean, which are highly tied to the price of oil.
All right, looking at WTI right now, as you mentioned, trading about $70 a barrel, down about 1.5% for the year. All right, coming up, we have a late trade alert. Weiss just bought more of one stock that's pulling back from a fresh all-time high. We're going to tell you the name. That's coming up.
Oh, wow, they ended that abruptly. I think I'm going to burp. I just down me a pro. Getting ready, baby. Oil popped off it. I don't know if they were pumping oil. It sounded like it, but crude oil actually went up. My goodness. My goodness. Are you guys ready? That's it, man. You're getting a lot closer. So literally like what, an hour until the event? An hour and 8 minutes? No pink drink. I grabbed my protein. I got a Fairlife protein. Way less. Here are the ingredients. I'll pull it out the trash. Way better than the other one I read you. This one, filtered low-fat grade milk, 1% alkalized cocoa, oat fiber, natural flavor, salts, lactate enzyme, monk fruit, exceluflame potassium, sucralose, stevia, and then vitamin A, vitamin D3. There you go. Way better. Fairlife's Coke, I'm fine with it. But remember the other one I read you? The other protein, you guys told me to read the ingredients, and I was like, whoa. So that one, that was at least a lot better. So I was like, all right, that's good. You never heard of monk fruit? Fairlife tortures their cows? Oh, no way. I want one with, Tim sent me one with it only has 3 ingredients. The new rules on disclosing, it limits friendly chads helping others on this. Just your 2 cents. Well, thanks for your 2 cents that no one asked for, but the point is, every time we change the rules, everybody comes up with random hypotheticals, and they're like, well, what about the people who do this and for the good people and it's good? But it's like, you would have done it already. So although it does limit this behavior you talk about, people would have already been doing it. So I'm not too worried about it. You know what I'm saying? I'm not, we'll see how it is. Like I said, if anything, I get to test things out coming into the election, because like I told you, I might want to change some things. So this would be one of them. I get to try it out, see what happens, and I hope it inspires some people to get onto the watch list. And yeah, that's it. And then we'll see what happens. The SPY dailies, when I said them, I didn't think I didn't want to grab them, but I didn't think they were going to go up, but they ran. Am I going to post the play? Yeah, I'm going to just post them on the watch list. So that's it. If I make them here, I'm just not going to disclose them, and then I'm going to go over the plan on the watch list, and then that way, whether I'm in it or out of it and you want updates, we will cover it on the watch list. So then that way I don't have to spend 7 hours a day fielding, hey. So it's good. I hope we could focus more on news and what's going on in the day and all of that versus having to answer, did this get sold or not, all the time, especially after I just answer them. Mine. We were at all-time highs yesterday, bro. Another election live? No, I don't think so. What about the Wednesday? Yeah, so today I won't have a watch list because core real estate. We'll see. I might not even be able to make core real estate tonight. I got to double check. But if that's the case, you'll just have to wait, unfortunately. I mean, you're going to have to vibe with me for a little bit. You guys have 4 years of the other alternative, so I don't know. And I guess if people didn't make the most of it then, it's too late to apologize. You know, it's just like we were saying, don't regret. Not everything's going to be there forever. So if things change, but just use what you got while you have it. Next pump it up level is 5,700, I believe. Where's Mumu? He's banned. He's one of the many people I've encountered where I've shown them a lot of love and helped them out, and then they go and take what I give them, and then they turn it into a paid service and then try to use this place for a promotion. So I don't fuck with that. And that goes for all of you who do the same thing. It's probably like 100 of you. So I've either banned them or I don't fuck with them. Thank you. For real. I know, right? It happens. Just focus on, right? Amen. Focus on the long term. Focus on the long term. Don't apologize to me, man. God is good, bro. We out here. We ready to go, man. That's what I'm saying. Unfortunately, you could choose to focus on the good or the bad, and all else, I do think your guys is the people remaining only get stronger and better and more productive. So get a long term, baby. Oh, ES, yeah. That would have been, I should have grabbed those dailies, but hey, shoulda, coulda, woulda. At least we're safe, you know. That's the key. At least you're safe ahead of Powell. So you don't get trapped on anything. But there was a couple of plays there. Gold running now. A little bit. Remember, silver was in the red, so they're lagging. You made me mad. You never know. Well, I just looked back. Your account's new, so you've been banned. I'm banning you again. Don't stand out, like I said. So, yeah. But, yeah, you probably broken the rules before. That deter people taking you in the ring. I don't know. We'll see. Like I said, a lot of this stuff, too. You know, I don't... Depending on, like, how some of the political situation goes, I think it's going to change how I do business because I think there's going to be different opportunities. So I don't know, but we'll find if it makes more sense, if it's a more favorable environment where things don't get like, where they don't get scammed, I'd be down for certain things. Otherwise, I do think it'd be more prudent to position in another way. I'm hysterical. Thank you. These aren't even my best jokes, honestly. I'm just banning people. That's all. Like, wait till I like drop a joke. You'll be surprised. SEC wanting to tighten spreads. There was something in the morning. Oh, with penny stocks, 0.5%. Is that what you're talking about? That supreme leader energy. It's not even like that, man. I don't know. Y'all got to really, you know, on a good day like Powell, there's a lot of y'all here. Can I give you like a mini philo, bro? Like, you guys don't know what it is. Like, you should only be around your friends. Like, do you know what I'm saying, man? Like, just straight up, bro. I just want to be around people that I'm friends. Like, that's it. I spent 5 years of changing people's lives and helping out people who I never asked them for anything, you know? And I got to do a lot and I got to be I but it's like, you know, I only have a certain amount of friends, but I just want to be around people that I really, really vibe with. And that's it. Like, it's simple as that. Yeah. I don't have any time. Like, if side eye, weird stuff, if we're not there, it's like, I'm not trying to force you to be my friend and you know what I'm saying? So it's just like, yeah, do your thing, bro. I don't want to be around it. You do it and that's it. So just be around. That's the feel. And I guess the other philo, I will tell you. Can I throw one in? Because we're gonna do a preview in here. Actually, I'm gonna do it. Usually I don't give philo ahead of Powell because Powell is so big, but I have one. Can I give you one? Can I give you guys can I get you guys a philo for today? It's a good one. I'll try to make it less like religious so some of you don't like turn into salt because I know that's what happens. But like I said, some of the hedge fund people and Bloomberg people who listen, you guys need Jesus. You guys really need to repent, okay, before it's too late, okay? There is karma, there is judgment, whatever you want to call it, okay? So just realize all the shady shit you do to people, it will go, there will be an answer one day, okay? Don't forget it. I think me telling you and you hearing this now, you can't claim ignorance. That's the problem. That's why you might get mad at me saying it. Because now this voice will ring in your head when you're like, I didn't know. Like, no, you do know. You do know. You were warned. How you treat people and how you treat the weakest of people, it will reflect, my friend. It will reflect one day. I hope they feel me, man, but now they can't claim ignorance. So, sorry, guys. So, yeah, I got a mini one for you. I got a mini philo, okay? I'm going to keep it short and sweet. I'm going to keep it short and sweet for y'all, okay? Ladies and gentlemen, boys and girls, who would have thought? PHILO on Powell Day, one of the biggest days in years. And I'm going to take the time to tell you about life. I'm going to do an earnings preview here in a little bit, a Powell preview. You guys can watch the watch list, so if you really don't want to listen to this, I would just go watch the watch list and be prepared. But you are going to witness some artwork here as we get into the live Powell. But before that, I usually don't give PHILO on today. Today is very, very market-oriented. But I do want to, you guys inspired it with our little discussion. So let me just tell you this right here, right now. Are you ready? Are you ready? I hope you get this, my friend. Everything in life is going to fail one day. Okay? And I'm not trying to say this like end of the world Mad Max conspiracy, but I want you to realize the reality of everything in this life. Everything is finite, my friend. Okay? Everything. Everything is finite. One day, bro, your heart will fail, your body, your stocks, whatever you think whatever it is, everything, even the damn dollar. Yes, sir. So with that in mind, why do I tell you that? If you understand the impermanence of everything, my question to you is what you are really investing in. And keep that in mind to what you are fixating your thoughts, emotions, and activity on. Okay? Because I think some people operate as if everything is permanent. Think about it, bro. There's cycles to everything. Even success is never permanent. Failure is never permanent. Okay? Everything is going to fail whatever you think it is. You got to really think about it, man. It's a big one. But now, what's something I've been telling? I don't know. Some of you may think I'm a weirdo, which is okay. But I like to encourage people because I have been giving a lot of PHILOs lately. And I've been saying, man, I'm tired. And I want to encourage a lot of you to stop being insecure. I think a lot of you have a lot of talents and abilities and knowledge, and I think you could do a lot of great things, and insecurity stops you from doing what you need to do. Some of you are hiding from your destiny because you're letting insecure thoughts dictate how you feel about yourself, okay? And I think some of y'all need to step it up a little bit, okay? But here's the deal. Can I just tell you a reality? Just one little reality of everything. And maybe some of you will realize this. Maybe your life will change right now. You get more insecure if you put more of your faith into things. Let me just tell you this. The more and more you put your faith of life into objects and the material, the more you will be insecure. Oh, I don't know if y'all feel me. I hope you feel me, bro. That's what I'm saying, man. Bro, listen. If you keep saying that what you drive is more important than the knowledge that you have, yeah, you're going to keep being insecure. If you determine your internal value by the house you live in and not by the character that you show, yeah, you're gonna keep being insecure. Do you see what I'm saying? If you keep valuing all of these items more than the skills and the traits and character traits that truly bring in a fulfilled life and success, my brother, you're gonna always be insecure. That's it. You don't wake up. If you wake up every day putting your faith and your personal value into items and not on these invisible things that make us in our life, yeah, you're going to keep being insecure. Because I just told you everything fails. And if you're getting your source of confidence from something that is destined to fail, then there you go. So, Chad, keep focusing on the insecurity and focus on getting rid of it. And if you want to focus on getting rid of it more, bro, think about outside of items, outside of money, outside of this, and you may realize you have a lot of things to be secure about and excited about, and things that'll be like, wow, maybe I am going to win, baby. You know what I'm talking about? So, Chad, I hope you feel me. And that being said, man, let's see where Powell takes us. And I hope your confidence, though, is in something bigger than the bonds and then the rates. And then, again, your ability to succeed in this market, man, it's not based off anything material, okay? So don't ever forget that. But take that one to the bank. That is your philosophy, ladies and gentlemen. Make sure you guys are subscribed. We're live Monday through Friday, 30 minutes before open. Drop your thumbs up on the video. And that's it, man. That's it. Little mini philo. Little mini pre-Powell philo. I told you I'll make it short and sweet. Short and sweet for you. Look at that. Just like that. Just a little one. Just a little one. That's all. That's all. Just a little reminder. Let's go, baby. Let's go, baby. We're at 54%. That's awful, dude. So I'm about to do the preview in like 20 minutes, but oh, man. This is crazy. You mean to tell me the Fed rate monitor and the Fed futures are at 56 for no majority right now? This is insane. All right. This is it, man. I kind of want to just get straight into the preview, but I don't want to. We're going to have too much time. I feel like I don't want it to be I don't want to have too much dead space and then I'll have too much excitement and anticipation. The Powell coin flip. And then spot, bro, we should have grabbed those dailies. Yikes. I was talking about them at a good time, but I thought it was too early. I thought like 9:30-ish we were going to run, and sure enough we did, but I was like, damn. But yeah, the dailies I had up, they went up a lot. I guess not. Actually, not really. Never mind, because I was eyeing these ones, and they went from 30 to 50, which is still like almost 100%, but like, fuck that. I want more, man. So I don't know. I'm glad I'm still safe here, but let's see. And then, like I said, as long as you play small today, you'll be good. I want higher return for lower investment. Now, I don't know, 100% off of a 2.5 point SPY move in an hour. You should have made more money than you, not under 100%. So yeah. You said money is not everything, so give it to me. You don't need it. I've given away a lot of money. I don't tell people about what I give. But, yeah, but a guy on YouTube getting ready for Jerome Powell? Come on, man. What do you... You know who Jerome Powell is, man. You're blessed, bro. You're blessed. IWM puts. It might be big. Oh, well, even then, IWM in general, I think that could be it, though. I'm kind of, I'm not going to lie, I kind of want the Russell. I do think it's expensive, and there's so much that could happen with it, but I do like the Russell. But last time, this is that August 8th level. So good luck, my friends. And it's crazy, 59.41. Mine needs to update. Mine says 56.44. Now mine says 54.46. I see 54 now. This is so nuts. I can't believe it, man. So I really thought we were going to get a nice confirmation, but nah. It's been a while since we let Powell decide. That's it. Powell might be deciding this one. So this isn't even the market anymore. If this literally in the next 45 minutes, bro, if this doesn't go back up to 60, that's it. It's up to Powell. Literally, like, borderline Powell. They're probably in the room right now finalizing their decisions. Because that's it. There's only less than an hour left now, and there's no majority in place. Yours is back at 59? It was just give it like 2 more minutes, it'll update. But I think give or take, it's going to be right at the cusp. Yours at 54. My goodness. TIL, that biotech stock from earlier was good. TLT will react by 25. It depends on the dot plot. It'll be less of a reaction, though, than 50, obviously. But that'll depend on the dot plot and those numbers. If Powell picks 50, does that mean something's wrong? In my opinion, yes. I think that would be Powell kind of using the opportunity to come. What the fuck was that? That was it actually printed. Okay, they took it. I don't know. Let me check on the other one. It's weird. That showed up on my high-low ticker. Yeah, that wick showed up somewhere. TLT just had a crazy pop, but then came back down for no reason. You don't want I think they're trying to see how many people would be scared by 50. That's it. Maybe I should have just shut my mouth. Because the more we talk about 50 being bad, maybe they don't do it. But so I don't know. I feel like Powell is trying to feel some things out, but yeah. It is. This one started, it's getting very hustly. That's what happens, though. Imagine the volatility and pricing is low. You're getting a random odds changing right before the event. I mean, I do think the odds of a lot of effery are pretty high. You think Powell knows me? I don't know, but I don't know. I feel like if Powell knows who I am and never said hi to me, like, what a hoe. Like, honestly, like, if you're cool and, like, you're super famous and you know who I am and you don't say hello to me, like, bro, you're a hoe. Like, what? Why would you do that? Like, come on, bro. Like, Powell, like, I'd be so mad if Powell knows who I am and, like, he won't even, like, say, what's up, Josh? I'm like, why, bro? Why not? Why are you so cool, Powell? You can't even acknowledge me? Really? Like, all these hedge fund guys in here, huh? 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 Yeah. I just fucked up, bro. The Fed, well, listen, Fed, if you are listening, if you say 50, that's a recession, okay? So do 25 if you don't want to freak anybody out. But then that's your guys' fault for leaking Nick Timmerhouse and Bill Dudley. I don't know why you guys did that. That shit was weird. But hey, it is what it is. And then commodities, that's outside of their control. Don't forget. I don't know, but Powell's pretty smart. Like, that's the thing. Powell's not a dumb guy. Oh, I do have two of them. I didn't, my bad. So I don't know, man. We'll see. Tesla. The same in 2019 I was just surprised. In 2019 at the last, it was like right before the odds said rate cut, and I thought Powell wasn't going to do it because I didn't think we needed a rate cut, and then he did it. But he did it because the odds said he would do it. That's the difference between here and 2019. There was still debate about the mid-cycle adjustment, but then the odds of the Fed futures were guaranteeing that he would cut, and sure enough, he did. So that's the difference between now and the other day, now in 2019 is that we can't really say it's the same scenario, more or less, because now we're at 50-50. The market doesn't really know what's going to happen. It will scare the market down the road, but don't underestimate. The crackheads are going to love 50 basis points. You got to realize it. 50 basis points is initially going to be bullish for a lot of people. And then like I said, then the adrenaline wears off. And then people are like, oh shit, I broke a leg. Florida's under the water? Well, all I know, my real estate trends in Florida, inventory is up and then insurance costs are high, but I don't necessarily see people avoiding because of flood risk. It's just more expensive. You buy puts. I have a Fed futures. So I own the odds of 50 basis points. Sadly, I'm one of those degenerates. I was betting on 50 basis points 3 months ago. OMG, that's what my Zaza play is. So I'm still holding it. But I just bought it because I wanted low odd crackhead play. Because when I bought it, the odds were so low. That's why I bought it, because I was like, if the crackheads get excited, that thing will go up. And sure enough, it did. I made 50% of the margin requirement on that play. That's insane. So I'm still in it. I'm just going to hold it through probably. But yeah. So we'll find out. But yeah, I'm kind of already in the ZQ. Would I buy puts if they cut by? Not right away, but I would start planning for a recession. And I would actually like believe it too. Like I wouldn't bullshit. Like you mean to tell me we get 50 basis points of cuts, the yield curve is uninverted, and you're about to even switch the presidents and all of this, and then yeah, I'd be like, dude, 3 to 6 months. That's it. Call it a day. 61 now. Hot dog. What industries? We've been talking about that a lot on the watch list last couple of days. So anything from real estate, crypto, and a few others, and then a few others would do bad. But then again, we have ideas, but we do need to confirm it with the data. Watch him say, I don't want to do anything till after the election. It would be crazy because if he did say that, the whole bond curve would blow up. So you would get a whole bond pricing of 1%. So literally the 2-year bond would probably shoot up by 75 basis points. The 10-year would go up by 1% probably. I think that would cause a crash to some degree. If Powell took off every rate cut by the end of the year, I think it would cause another little mini flash crash. But yeah, he's not going to say that though. It's a stupid hypothetical, unfortunately. That's what I'm saying. Just sadly, you got to be careful. That's what I'm saying. I haven't answered too many dumb hypotheticals because I don't want people to get confused, because that's what happens every time. But it's going to be one or the other. Either one rate cut or 2 rate cuts. But at this point, we don't really know. And that's where it gets even wilder. If Powell didn't do anything to us, 25, if they planned on doing that, yeah, I would say that. How do you know he won't say that? Just like 60 years of history and watching every single Fed event for more than half of my life. So I don't think you guys have realized I've witnessed all of these. So in the modern era of finance, I have watched every single one of these from every day before till every day after, 7 hours at a time. So, and then not to mention, I know the 60 or 70 years of history. Oh, you're trolling. Oh, okay. So that I translate that with you're wasting my time in everybody's discussion then. So I'll see you tomorrow. You have violated the terms of participating on Powell Day. So please, only serious questions and serious discussion. Yeah. Look at the chat even knew it was coming. Yeah, they already knew. That's a red card, unfortunately. I don't like it because, again, I'm here to answer and I'm here to get like really involved with, very important stuff. So if you guys are going to waste our time with weird stuff, I'm not going to tolerate it. I hope you understand, but it's for the benefit of everybody else. Does recession mean lower stock price? If we get a hard landing, yes. But if there's a soft landing, maybe prices come down gently, but not a lot. So it does depend on how things play out. Yeah, this is a new issue. This is a new issue day, baby. Does he care more about market expectations or having no dissenters? Market expectations. No dissenters. They haven't had the dissent in like 4 years now, right? So I don't think they're worried about that, but market expectations can make their job easier or harder. That's what I was telling you guys the other day. I was like, in a weird way, I think Powell at one point realized the market not crashing makes his job a lot easier. So that's it. I don't even think that's a good point. They wouldn't have any dissenters on paper, right? They might dissent in the room, but they probably won't. For unanimity's sake, they'll probably keep it. Shh. That Vanguard closes your options on expiration. You lost level. What do you mean? I don't even know that. Are you trading options on your 401k? Like, otherwise, I don't know what the fuck you're talking about. But then I did say it the other day. Trading on a 401k or a Roth is a very, very bad idea. And I said I'm pretty sure I guaranteed you will blow up your account. So be careful and don't do that. Are we at 60-40? We might. What time is it? It'll update in 5 minutes. I think this updates every 15, every 30 minutes. I could even check the other one too. Just the Zaza. Again, remember ZQU. Yeah, 4.825. So that's like what? 4.2? 5.2? Huh. Yeah, wait, no, these are closer to one rate cut now. Interesting. But it's there. It could go both ways. It's still pretty much 50-50. But you are around 5.2. So it's around 50-50 still. This is madness. Alrighty. Today is finally here, bro. Someone at Bloomberg clapped along with PHILO and everyone's staring at him? What do you mean? I don't, like, on TV? That's pretty funny, but that's what's up. Oh, damn, Bloomberg's even doing a preview in 30 minutes or in 3 minutes. Yeah. Yeah, bro, it's 30 minutes away. You guys realize that. That's it. The SCP, all of it comes out in 30 minutes. So that's it, man. I'm going to go to the bathroom, and we are going to begin. I'm going to put out a stream alert, and we are going to go over everything. It's pretty much the watch list, but I could just show you. We could, go through everything a little bit more in depth, but like I said, a lot of the watch list that I showed you that yesterday, second link, it has a good majority of all the aspects. So risk averse. Kennedy.
also especially hit by some of the flood policies and different things where we've seen some of the highest inflation. I wonder if that makes it, for you, a little bit different story.
And here's what's troubling the American people. They maybe can't tell you the difference between disinflation and deflation. But yes, inflation is down. That just means prices are going up less quickly. But prices aren't falling. And if we tell the American people the truth, it's going to be hard to get those high prices down. We can get them down. You do what China's doing, go into a recession.
No,
prices will fall, but that's too big of a price to pay.
You want their wages to go up.
So we have got to grow our way out of it. And this current economy, under President Biden and, frankly, Vice President Harris's tax plan, they want to raise taxes. They don't want to cut them. And I do not think that it will grow the economy, and that's the only way we're going to get out of these, get away from these high
But the
prices.
economy has been growing above trend over the past couple of years.
Oh, I don't agree with that. I just don't.
Well, the numbers say it is.
We have 2% growth now, and we want to have a toga party. That's embarrassing. We ought to be growing this economy at 3% a year.
Pretty close right
Before
now.
the Great Recession, 3% a year was considered normal.
Yeah.
So I'm not prepared to concede that we can get to 2%. Bull.
We're at
We need to
2.8
shoot
this
for
quarter,
3.
though. We're in that neighborhood.
Yeah, but that's not annualized.
Yeah.
That's not annualized. And we need to get back to 3%. And it's the only thing that's going to help people stop having to sell blood plasma to go to the grocery store. That's what's upsetting America today. It's the high prices. Everything else is just cottage cheese. I'm not saying it's not important. A lot of people like cottage cheese.
Yeah.
Border's important, crime, national defense. But the single biggest thing that moms and dads are worried about at night when they lie down to sleep,
I love him.
It's the cost of living.
And that is the case for 25.
That's it.
Senator Kennedy, thank you.
Good to have you
Exactly.
back.
Good to see you.
Bank of
Markets are
Canada
moving towards
minutes.
session highs ahead.
He said exactly. Now, that doesn't mean nobody like cottage cheese. Everybody likes. Some people like cottage cheese. And nothing wrong with that, but let's just be real about it. The spies popping Bank of Canada minutes are coming out. So this is, you're going to move some things, but now the bonds and spies are moving like cottage cheese and Wi-Fi. Exactly. I reclaim my time. Thank you. Blood plasma to go shopping. Everybody needs to sell it. I understand. Yeah, bro, Bank of Canada minutes, and then SPY just popped, bro. Those dailies were calling our name. Alrighty. So are you guys locked and loaded? 30 minutes now until the event. That's it. You waited 4 years for a rate cut, arguably about 2.5, 3 years of this moment all year. We have talked about it, and now you are 30 minutes away. So, Chattadonia, I hope you guys are ready for this. Okay, that's funny. Council puzzled by successive upside surprises in U.S. household spending. They're saying a lot of stuff on the Bank of Canada minutes. So here's the deal. It's literally all I'm going to do is go over the watch list, and then I'm just going to be able to go over it with you live. That's the only benefit about what we're doing right now. So literally, I wrote all of this yesterday. You could see it, but like I said, it's either going to be a guarantee of 50 if the Fed futures stayed the same, or it's going to be up to Powell. So this is something I think we have already discussed a lot. I feel like everybody is aware of this by now if you've been here all day. Clearly, coming into this event, the problem right now, which wasn't a problem a couple of days ago, is that you don't really have the same probability of what is going to happen as you would have at any other Fed meeting. And then you're ripping. You just went 10 points in about 5 to 7 minutes there off of the Canada minutes. So this is the first part of it. This is the unforeseen risk of today, is that this is going to add volatility, because if we are 50-50, everybody's going to respond a little differently to Powell. Okay? So that's the first key. But now I brought this up yesterday, and I think this blew a lot of people's minds. So this is where I want you guys to realize this is a big, big answer for today. Because you got to realize the market, and we've been spending all this time talking about 50 basis points or 25, right? But here's the deal. If you go and look at the bonds are well above one rate cut. Nobody is just talking about one rate cut. Do you guys understand that? Why? Go look at the 10-year. The 10-year is at 3.6. A 10-year bond is saying the rates will return 3.6 in 10 years. Currently, the rates are at 5.25 to 5.5. That's almost 2% lower. Again, let's go to a 2-year bond. It's at 3.6. So think about it. If the bonds on a 2-year bond are saying 3.6 in 2 years, they are already pricing in over 8 rate cuts in the next 2 years. Do you guys recognize that? So that's something I think a lot of new people are not understanding, is that, yeah, have we waited 4 years for this event? And have people really waited for this event? Yeah. Is it a big deal? Yeah. But what's priced in has already happened. The market is already priced in over 8 rate cuts in the next 2 years. The market already believes it. So are you guys following? Because look, this was the chart that I showed you earlier. This is the dot plot overlaid. So the green line, this is the median of Powell and the Fed. The dots are the literal dot plot, which we are about to get. And the white line is the Fed futures, what's priced in. So look at the dot plot in the Fed. By this year, they say will barely be above 5.1. That insinuates about like 2 or 3 cuts from here. But the market is saying we should be below 5. But then into next year, the market in the Fed says we'll be above 4. And then 2026, the market and Fed believe we're going to be at like 3.1. That's why I keep showing you guys this, because, again, if the market and the Fed think we're going to be at 3.1 and go look at a 2-year bond and it's at 3.6, that means the market and the Fed and the pricing, we are about 0.5 off of each other. Do you guys get it? So like I'm telling you, you need to understand this. Today, is it about what happens with 1 quarter or 2 rate cuts? Yeah, sure, but that's not the big story. I want to make sure everybody is following. Do you guys understand what I'm telling you right now? That's why today is bigger than you think, because it's not about the 25 basis points. It's about the other 100 basis points that we have priced in for this year. It is about the other 100 basis points for 2025 and then another 50 basis points for 2026. Are you following? So that's what. So if you're not, let me reiterate then if you're not getting it. What I'm saying is that there is over 8 or 9 rate cuts already priced in over this year and the next 2 years. So we're not only looking for just 1 rate cut today. Now does that make sense? So it's not about what happens today. It's about what happens today alongside of the expectations and data that dictates the other 8 rate cuts that people are expecting in the future. But that's where a lot of people don't realize it's already priced in. You already have this 100 or 200 basis points of cuts already priced in. So if that changes, the bonds are going to change drastically. If it doesn't change drastically, then the bonds are already ready for it. So if Powell doesn't move outside of this range that I'm showing you, in the SEP, the statement, the language, none of that goes outside of the 100 basis points already accounted for by the bond curve, you're going to get a dud today, baby. Nothing's going to happen. But if any of that changes, then people are going to start looking out ahead. So it's pretty cool. But that's why I'm saying go look at the numbers. They're telling you right now, we don't care about 5.2, 5%. The market's already saying, no, rates will be at 3 in 2 years. That means they're way, way ahead of everything, and we need this to confirm that we are on the right path. If not, then it's a different path the market is going to have to outline. So that's your second key, but now here is the breakdown that I said. This is the beauty of what is going to happen today. So if you guys go here, take a look. What's going to happen? Monetary policy. Go to meeting calendar and information. And then projection materials. This is where the dot plot shows up. So every 3 months, we get a dot plot. That's why today you are going to get the statement, but then you're going to get the dot plot. Okay? So that's what you got to watch out for. But this is where we are going to be going over everything and looking into what's going on with it. So it's very simple. right when this comes out, this is all that I'm going to be looking for. Very, very simple. That's it. This right here. All you got to do, 2024, 2025, 2026. It used to be where like unemployment and PCE and all this stuff would matter, and maybe if it's too hard to read, we might go from here, but this is all I'm looking for. So here is the past projection. So what's going to happen is simple. When this new data comes out here in about 22 minutes, you see 5-1, 4-1, and 3-1. This is going to be the lower numbers. It's going to say June projection. You're going to see 5-1, 4-1, and 3-1. So you're going to know how much it changed. So very simple here. Yeah, you literally hit the top and then came back down. But very, very simple. 2024, go here. If this number goes higher than 5.1, that's going to be bearish. Let me show you visually. Why? Because right now, 5.1 is right here. So take a look. If this dot goes here and this dot goes here, or these two dots go here, do you see what I'm saying? But look it, the market is right here. So if that number goes above 5.1, then that means the market got it wrong for this year. These dots right here, the yellow dots, this is the dot plot. So if depending on how if one or two people move, that's it. The white dot is where the market is. The middle right here, the green line, is where the Fed is. So that's what I'm saying. Today, we're going to get a new one. And if this shows a higher number than 5.1 versus below, then that's going to be bearish. And then, like I'm saying here, technically, the number's 5.1, but if we go above 5.35, if you go up by more than a quarter point, then that'll actually be really bearish. Because not only would it mean you're higher than the dot plot or you're higher than the market, but now it's higher by a quarter basis point. So that means one less rate cut is priced in. So that's why I'm saying this is the first thing that we are looking for. Just right away, easy. Number above 5.1, you got a problem. A number below 5.1, well, guess what? You're going to be good. But remember, the market's already at like 4.8. So even then, if it does 4.8 isn't going to be as exciting. Do you get 4.8 is already priced in. So any number below like 4.6, then everyone's going to be excited. Because then a number below 4.6, think about it, that's going to be like, oh shit, that means we're going to get another 2 more, 3 more rate cuts by the end of this year. And then that's below March projection. So again, go back to the chart. Do you see what I'm saying? If you're telling me all of these dots move down here and we get a number below 4.6, that's nobody's priced for that. That's why it would be really bullish. And then that would mean a lot more rate cuts. Are you following? So boom, that's all we got to look for. Now 2025, same thing. 2025 now, this is where a lot of the action is going to happen, because this is where Powell last meeting, this is where he pushed everything. Don't forget, you guys. Don't forget, last meeting, Powell was kind of shady. And what I mean by that is that you would have thought it would have had a lot of info, but remember, they upped the dot plot, they upped the rates, and then they started pushing towards 2025 and 2026. They started spreading out the curve instead of making everybody focus on 1 year. Powell spread the Nutella. There's another way to put it. Instead of having everybody focus on rate cuts for 2024, he raised it a little and then started spreading the cuts out over the next years to widen out the curve. You following? That's what he did at the last meeting. So that's what I'm saying. If 2025 and 2026, if there's a lot of volatility, then that's going to be a big sign. But it's quite simple. Above 4.1, bearish. Below 3.9 is bullish. But now how much more that's going to do, because again, this is 2025. So look at, this is why it's interesting. Because the market in the Fed, they agree on 2025. I don't know if y'all feel me on this. So look it. They're converging right now. So believe it or not, these guys agree. The Fed and the dot plot and the Fed futures, they're feeling that 2025 we should be around 4.1, which again, that's like 1.5% rate cuts. So that's like 6 or 7 cuts following what we have already. You see what I'm saying? That's why, again, you get down to 3.1 in 2026. You do the math, how many cuts that is. So, like I'm saying here, though, the fact that they're matched up with the market, you may get more volatility if 2025 moves around a lot. But it's very simple. If that number on 2025 goes above 4.1, if it goes above 4.6, you're really fucked. And then if it goes below 3.9, it'll be very positive. And then finally, all that matters for 2026, just 0.5 of 3.1. So anything like 2.6 to 3.6 will be okay, believe it or not. But then anything moving more than 0.5%, that will disturb the current gap that we have. Honestly, for any of these, that's what you guys got to think. Anything that moves more than 0.5% today, it has the potential to disturb where the market is already priced in. So, ta-da, this is the number one thing you need for today. That's all. Because like I'm saying, the data is going to come out. This projection is going to be released. That's all you need to be looking for. And depending on what that says, that has the ability to change what is priced in or not. Because like I'm telling you, a lot of this is priced in. If the dot plot comes in looking, and that's the thing, do you guys realize what I'm telling you right now? Very simple. I hope you get it. Because if that dot plot comes in and nothing changes, we're doing nothing today. Yeah. That's where I don't underestimate. I'm telling you, everything is already priced in. Are you listening to me? So let me say that again. If everything stays within a range or barely moves in terms of the dot plot, there's nothing to price in. That means will be no new information out of today. So there really is a real possibility that, yeah, wow, big event, haven't seen it in 4 years. Oh my gosh, news. Oh my gosh, 7,000 people in the chat. Oh my gosh. But guess what? Nothing could happen. If that dot plot does not move decisively enough above 0.25% in either direction, the bonds are already accounting for that margin of error. Nothing will occur. So that's why the bonds are only, or the SPY's only pricing in 1% today, because you may not get that type of reaction there. You see what I'm saying? So that's why today is so important, and that's why the interpretation is going to be of the utmost importance as we get into it. All right? So that being said, is there any questions about the dot plot before we move to the final part of the preview? Yeah, I got one more part, and then we could talk about the plays a little bit. But there's only one more part. But is ever any questions on that? Wow, you're here live, because now this is a chance, bro. You're here live. We can make it make sense. Like I said, I'm going to be doing this in real time, so you'll be able to see it. But yeah, you gotta be in the game, man. What do the figures? What figures? What are you talking about? So the figures on the dot plot are just telling you the terminal rate, where the Fed thinks rates will be by the end of the year. Federal funds projection. Top one is the new one. The bottom one will be at the end. Yeah, well, I am going to do it live, 100%. This is why a lot of people come here on Powell days. Because, again, that's the beauty. You guys got to realize, if everything I'm telling you is batshit wrong, like let's say I'm just totally wrong, and this dot plot tells me something completely different, I am going to pivot with zero shame in a second. That's it. I just know how to read it. And you need to learn how to read it too. But like I'm telling you, we don't know what's going to happen. So depending on the signal that comes from this dot plot, we will be able to react immediately. And it may go in line with what we're at, or it's going to be, we got to go and respond to what the data is telling us right there, right now. So, ta-da! All right, I'm trying to see. Do you think the dot plot is more market direction? No, the dot plot is more, it's the broader path that the market is going to follow. and listen to. And even when Powell's all done, the dot plot will remain. The dot plot is a macro plan. That's why it's macro. It'll last for 3 months and give you an idea. But it's very important because depending on how it plays out, it will possess a lot of info. Because like I'm telling you, if it moves more than 0.5% or 1%, we're going to know that something needs to reprice on the whole entire bond curve. The dot plot, well, the dot plot is these numbers. So I'm glad that you guys are asking this question. So let me clarify. Do you guys keep saying dot plot, dot plot, dot plot. Realize this number right here is the dot plot. So 5.1, look, 5.1. 4.1, 4.1, the median. So the dot plot, you can read it with literal numbers. Yeah, exactly. This is just telling us the median. So the dot plot is the numbers are the dot plot. So this is just easier to read and have an idea of what it is. All right. Saying by the end, yeah, it's by the end of that year. Yes, exactly. So 2024, Fed funds rate of 5.1. That means where the Fed thinks rates will be by December 2024. 4.1 for 2025. That means where they think rates will be by December 2025. And then 2026, December for 3.1. Ta-da. Aggressive in 25 could indicate more recession, but people might like it. Again, that's another problem for another time, but short-term, people will like that. And if there's more cuts in 2025, the more cuts they price in, the more TLT is going to move or shy, depending on what is there. But all right, let's go, baby. We got 10 more minutes now, so let's get it popping. Here's the final step. Are you ready for it? And this one gets really crazy, to be honest, because nobody's talked about this, and quite frankly, it's because you can't. I don't even know what to tell you this time around. This is the true wild card, as crazy as that sounds. Because I do think the SEP is the wild card, because like anything could happen and it could change a lot of everything. But the statement, that is the problem, because you cannot forecast this. And now here's the deal. If the dot plot doesn't give you anything identifiable or anything easy, or maybe the dot plot doesn't change, the next thing you're going to look for is this statement. The statement, this is released right at 2 p.m. So what should you be looking for in the statement? Very simple. Economic activity has continued to what? Expand or decline? What do they say with jobs and unemployment? Is inflation easing or returning? And then I think that's it. And then judging risk, again, employment, anything they say about economic outlook remaining uncertain, employment, or any of that stuff, that is what they're going to be doing. And then in support, they decided to maintain, and then that's it. But the problem is, if they go, imagine what I just told you about these like key words. If they add more or take out more, holy shit, we don't know what that could imply. So in a weird way, the thing about this statement, if they want to make a lot of changes towards the economy, and if they want to talk about, we're worried, if they say in the statement they're worried about jobs, or if they talk about inflation moderating or increasing, that could affect how people feel. So there is a wild card in the statement, but like I said, it has to just be obvious. It's going to be obvious when we'll see it. We'll compare it, but that is something you got to watch out for. And then vice versa. Other than that, it will be about the dot plot and then how they indicate for 2024 and 2025. So, ta-da! The final thing is the place. I think Bitcoin is the number one play today. I think crypto is both today and the next couple of days, the next couple of weeks. Even though Bitcoin is one of the leaders on the year, I think Bitcoin has the ability to move the most under a plan of low rates. And then I'm playing the ZQ /ZQ. That is the Fed futures, and I'm going to be playing into that one. And then the yen, I also have a play that I'll be holding, and then we'll be moving that one around and seeing where it takes us. So there you go. Those are all your plays. And then again, if you ever have trouble finding this channel, remember, just put youtube.com/thestockmarket and then put /live, and then you'll find it. Google cannot hide it like that. So there you go. So, Chatadonia. That's it, man. That's it. Any questions? I do have some analyst comments, but that's all I got for you. Just SEP analysis. We'll react right when it comes out, and then I'll tell you what I think, and then we'll see if anything changes, and then we'll go from there, man. That's it. It's going to be super duper simple. And then 30 minutes. And then every 15 minutes, the algos will move the pricing. Keep that in mind. And then, so you'll have two pretty much big shifts until Powell. And then once Powell talks, right away, right when Powell opens up his mouth, the market will go up. And then right as he ends the questioning, watch what happens. And then when Michael McKee asks a question, watch how the algos respond as well. It's a little fun fact. So that's just my thing. So let me read to you what the analysts have to say now. We got about 7 minutes. So, Ira Jersey of Bloomberg says that while some doubt the need for any rate cuts by the Fed or 50 is too aggressive, the Fed's assessment of future path is in part based on surveys like its own Beige Book. The last Beige Book was the second weakest since 2020, according to our natural language model processing sentiment. So the sentiment of the Fed minutes follows the Beige Book, so it shouldn't be a surprise that the Fed will be leaning dovish at this meeting. If the Fed does cut, Powell will be asked in the press conference on voter sentiment and the election. Ira Jersey says that the market is now pricing for a near certainty of a quarter or half a point by the Fed. A knee-jerk reaction one way or another is all but assured. After the dust settles, the median distribution of the 25 dot plot may become the focus of the belly and the long end of the curve. A move lower in the 25 median may give an impetus for a Treasury rally. So that's what I was telling you guys earlier. That's that 3.9. So if 3.9 below or 4.1 on 2025, I think you will actually rally off of that. Along with the decision of interest rate, Fed officials will release an updated forecast of economic conditions and projections that will give investors somewhat of an answer to the big question on their minds about how quickly policymakers can move cutting rates. These forecasts are not set in stone. When officials last gave projections in June, they dialed back the number of rate cuts they expected to just one, according to the median estimate. At that time, policymakers were concerned that progress with inflation was slowing. So how big the Fed should go depends on the job landscape. One school of thought says that Powell places importance on the unanimous of votes. The wire that I use is my own wire. It's only available at the Stock Market Live. So, again, all the stuff we provide for free for the retail public. So it can't be taken away. Nobody could claim it. And it's all not for sale or anything, man. Only here at the Chad. So the last specific comment we heard from Powell on the magnitude of the first cut was back in July. He said that 50 was not something we're thinking about right now. That, of course, was before the surprisingly weaker July jobs report. Jerome dropped a couple of hints. Honestly, these analyst previews kind of suck right now. Everybody's talking about the very surface level stuff, but we already know this. The culmination of a tortured journey for Fed watchers. Yeah, I don't know. It's kind of dry. I like just the dot plot analysis. That's all that's going to get us there. Anna Wong of Bloomberg, the Fed should and will cut by 50 today because it's the appropriate response. Powell will likely frame it as preemptive, dismissing any news that they went bigger. And then the Fed won't set expectations of further jumbo moves and that they will fall short of the 120 basis points in total cuts. So, yeah, that's it, man. They're locking in. Everyone's locking in 50 basis points. So watch out, boys. Boys and gals, yeah. If it's at 60%, 3 minutes, I've already got 3 people, and then you already have Bloomberg, one of the biggest news stations. They are confidently saying 50 basis points right now. The odds are above 60. I think you might get it. I kind of want to make a play. Last time I did this, it squashed me. But I might do it. I think 50 is way too high. All right. So Sean McClain, you says it's going to be 25. My source is terrible for odds. We'll find out in 2.5 minutes, Sean McClain. Let's see. So again, ZQ and then the rate monitor tool. But what I was just saying is all the news media is pumping 5 right now. So we'll find out. We'll find out. Oh, yeah, like Die Hard, Sean McClain. That's why I like the name. All right. Get ready. 2 minutes. Lock in and good luck. 50. I kind of want to do. I'm going to hold my yen play. I'm already down on that. But then, oh, no. Whoa. My ZQ just dumped, though. Yikes. Yo, so I don't know what the Fed, my ZQU just dumped. The most it has all day. So that means the odds of 50 just dropped, like, right now. So, yeah, bro, I don't know. I don't know, man. This is going to be wild. It is going to be wild. So good luck, man. We got about 1 minute and 15 seconds. And like I'm saying, just go straight to the SEP. That will have everything. What do we say? 3.6. Yeah, so 3.9. Watch, 3.9 on 2025. That will tell you about the bonds. We already got the yen up there. All right, 45 seconds. Good luck, Chad. Good luck. And God bless America. Woo-hoo! It's here. Oh, my gosh. 30 seconds. This is it, baby. This is it. Bro, the bonds are tweaking right now. Bro, even my Fed futures are tweaking. But yeah, the Fed future, it's kind of right at 50-50, dude. It's kind of hard to say right now. This is actually kind of batshit. 10 seconds. Get ready, baby. Like that video. Follow me on Instagram, too, at the Trading Fraternity. I love you. It's free 99. 3, 2, 1. Boop. And we're off. Whoa. Fed 475 to 5.0. Oh, they just cut by 50 basis points. Wow. That's it. So, yeah. Let me check the thing, but that's going to be good for a little bit. They cut by 50. All right, man. I think we're going to get our recession. Where is it? 3.4? Oh, hell yeah. Oh, no. All right, I made a play. Yeah, that 3.4 on the 2025, 2.9 on the 2026, and then 2.9 for 2027. So that's it. Everything's ripping. Yen, rate cut odds, they're all there. That's crazy. That is crazy. Wow. So that's it. You got 2 rate cuts. Sean McClain. So there it is. Do not trade. That's it, man. All right. Again, here's the dot plot, though. That's why the market's just ripping. I'm surprised the market's ripping like this, but like I told you guys, the crackheads are going to come out. Whoa, there was a descent. Whoa. Yo, there was a descent. I need to check it, but I went off of the dot plot. If you don't realize, all I did was I went off of the dot plot. That's it. So there's a couple of things that just happened there. I need to double check, but there was a descent. But then literally I'm going off of, you have 3.4 on the 2025 projection. So that's what you got to watch out for. Something's already flipping, though. So first reaction already coming down here. Let me read this statement. Was it Beth? Damn it, Beth. This is your first time, Beth. So, again, bonds are not moving as much, but I do think the 50 got... Oh, my gosh, my mic stand. This is not the day for the... It's a new mic stand, too, bro. Yen pop. Yeah, I went green on my yen play, but I'm trying to... Oh, my God. My new mic stand already broke? This is crazy, bro. Hold on. The bonds already dropped, though, surprisingly. Josh getting beat up already? No, I'm doing good, but my mic stand. No. That's why I'm like, dude, this thing just broke. It's brand new. Boo. All right, hold on. But, yeah, for now, the yen, I think the yen actually might be better than the bonds, too. So don't eliminate that from the play ideas. But, hold on. God, this is an awful day to have this happen. Yeah, bro, it's rate cuts and 2025. I'm surprised the market popped like that, but that's it, boys. I think we are going to get a recession eventually. Yeah, I think the hard landing is there. Yeah, and I just broke my mic. Dude, a brand new mic stand just broke again. That's crazy. I have to read the statement still, too. But it says they're projecting 100 basis points of cuts by the year end. So everything's still in plan. That's the only thing. So watch what the bonds do, but everything is in plan. That's the crazy part. Fed cuts by, I can't believe that happened, bro. No, I think in 3 to 6 months, maybe longer, but yeah, they actually did it, bro. They actually did it. It's kind of insane. All right, let me see. I got to play this for you guys. I need to fix my mic. My mic literally just broke.
On this morning, which is don't forget the dollar. And Mohammed Al-Arian, I'm going to be as direct as I can. Is the great unknown here a dollar weakness that anybody?
This is a dovish 50 basis point cut.
Well said, yeah.
Right? I mean, now, I agree with you, John, that the dovish part comes from the median dots, but if you look at the range, it doesn't look at dovish. But that's not what the market is going to hear. The market is going to look at the median dot and will interpret this as a dovish 50 basis points cut. And the first reaction was actually a steepening of both 2s10s and 2s30s, which tells you something about what people are worried about.
To some extent, this median dot validates market pricing coming into this decision. Is that sufficient? I'm looking at equity market reaction right now. We're up by 0.5%. We've still got a news conference, a question we've asked for the last several weeks into this. Are we going to end up with disappointment on the other side of this news conference with Chairman Powell? What would your question be now?
So first of all, normally he's more dovish than the statement. So that's going to be pretty hard to do this time. But let's wait. My question will be, what has changed since July when you decided not to cut rates? And now there's this very aggressive cut and aggressive signaling. What has changed?
The speech in Sintra, Portugal at the start of summer, very different to what we're hearing from the FOMC just several months later. Joining us now to discuss is Bob Michael of JP Morgan Asset Management. He joins us out of London this afternoon. Bob, we just want your first impression to the decision. What do you make of it?
It hit on pretty much everything we were looking for, probably a little less dovish than we thought in two instances. One, there was a dissent, so it wasn't a slam dunk, and we would have liked to have seen the median dot for the end of next year somewhere around 2.75% to 3%. But otherwise, as we had been guided over the last week, nothing to quibble about.
Bob, which bond series or individual bond provides the most information right now? Is it a real yield? Is it the nominal full faith and credit? What's of the most value to Bob Michael right now?
Credit spreads. Credit spreads will tell us whether investors believe the economy is in dire shape and this was an emergency 50 basis point cut, or whether this is just a Fed a long way from neutral, perhaps, as Mohammed hinted, a meeting or two away from where they should have started the cycle, so they're starting to get towards neutral. All is well.
Okay, all is well. And yet what we saw earlier this morning was an increase in mortgage applications. What we've seen is already the bond market pricing in all of this and then some, and basically the statement only encourages that even more.
All right, I need to go wash my hand. My mic broke. That's crazy. Right when the data came out, my mic stand just broke.
In the long end, as Mohammed was mentioning,
we're good, but it does seem you had a little bit of a knee-jerk reaction. Dude, this is all below 1% right now. Give me 2 seconds.
Whoa. We're a long way away from that. We're looking at the 3-month annualized rate of core PCE running at 1.7%. So that's not inflationary. There's signs of disinflation everywhere. When you look at the labor market, they talked about full employment. Well, the low in unemployment was 3.4%. A couple months ago, it was 4.3%. That's up 0.9%. You only see that when there's threat of recession. That's characteristic of that. They've highlighted to us that the neutral Fed funds rate is somewhere around 3%. That's a debate we could have for a long time, but it's nowhere near 5.25%, 5.5%. So they can start taking pressure off of businesses and households without reigniting inflation.
Bob, I know they call you Bob Michael, but you told me earlier it was Bob Michel, so I'm going to stick to Bob Michel.
Bob Michel, Bob Michael. All right, I had to close out a play there. So not bad. Not bad at all, ladies and gentlemen. The market's moving weird because it was a little bit more aggressive, but not like extremely aggressive, but it was 50 basis points. So literally there was a mix of like I'm saying, it moved down about like 0.4 from where it was. That remember I was telling you 0.5? So you have a little bit more aggressive than the dot plot was saying. It's insinuating more rate cuts. Powell is now agreeing with the market that we're going to get 100 basis points by the end of this year. It's all just saying we're going to be getting cuts and then a little faster than expected. That's crazy. What a good time. What a good time, bro. That was absolutely wild. That's 250 basis points. No, man, so we got it, man. That's it. This is, wait till the conference now. This is going to get very volatile while he's even talking as well, too. You guys got to realize that because now you have, again, I mean, the dot plot is saying a lot of future cuts. They want to say it's dovish, but it's clear, bro. Powell, he's not opting for this. You could call it dovish, but he is not opting for a slow and steady plan. You know, he is opting for the big one. They're even lowering by another quarter. So again, 2026, they moved it down by a quarter. So like one extra rate cut, but then they moved, like remember I was telling you, below 3.6 here, they moved it below 4.1, like way lower. It's at 3.4. So they're saying way more cuts in 2025, and then they're agreeing that we're going to get either one more or the same amount of rate cuts for this year. So that's it. It all looks there. Then you had the first dissent. That's the part that's crazy. So let me see if I can find that one. But that means somebody in the Fed was like, nah, I disagree, and we haven't seen that one in years. But let me see where the statement says. But very, very, that's our preview. You guys are going to probably want to watch the market. So let me put this on another one. Yeah, it'll tell you who dissented. Was it Bowman? It says it at the end of the document. Who was it? Voting against was Michelle Bowman, who preferred to lower by a quarter. So that's it. Michelle Bowman is the only one who is not a crackhead. So yeah, and it said her reason. So she only wanted to go by a quarter. So recent indicators suggest economic activity has continued to expand. Job gains have slowed. That's new. And then unemployment has moved up but remains low. Inflation has made further progress. So that sounds good. Nothing stands out in the statement. Statement's clean. Only thing that's there is the dissent. That part is weird. The dissent is wild, and then that's it. I think we're going to get our hard landing. That's all. So, again, watch out. I think this was good enough to get you movement. I still think it's going to be a little shaky. Like I said, there's a lot of BS that could happen with this, but when it's all said and done, you're getting a more aggressive cut. Slightly more cuts will start to be priced in from now, and I do think I think hard landing is about to happen. 3-6 months, maybe longer, but that's it, bro. We are starting our rate cut cycle. Powell's probably going to explain that it's not out of panic, but I think I'm going to have to call it panic. That's crazy. I can't believe it's happening. Even then, you saw how everybody right before at 25, 50, bro, they just, half of everybody was just wrong right there. So it's going to be crazy. Well, the bonds, I think the bonds should go up, but at the end of the day, I also think the bonds can come down in the sense that everything is still, we're still like within the range. We just moved about just under 0.5% more. So I think you got to get some of the jitters out, but for the most part, that was an adrenaline shot, and people are going to start moving towards this idea of more faster rate cuts. Oh, shit, where is gold? I didn't look at that. And then Bitcoin. Bitcoin actually stayed up, too. Gold is up a decent amount, actually, and silver. Well, no, I think there's going to be a short-term reaction. I think short-term will probably be bullish, a little I don't know how bullish, but a little bullish short-term on the bonds, and then depending on how crackheady, then you get your middle ground for the bonds. But it's too, I don't know how far out in advance. But I think a little bit of short-term. But don't forget Powell. You guys are you can't get ahead of yourself. You need Powell to finish this out. So they're trying to call it a dovish cut. It reads a little hawkish, and then now he's introducing like 0.4 of cuts throughout the curve. We need some analysis on that. Well, remember, a lot of things went up already, but that's kind of where, and then I was telling you that 1%. So Fed lowers benchmark. Again, I think give it time, and then everyone's going to focus on the 2025. But for now, everything else was within a small range. Let's see. The benchmark moved up where they expect benchmark to 2.9. This is the first descent since 2005. Mark Olson voted against raising rates because he thought the full impact of Hurricane Katrina had not yet been known. The statement is clearly dovish given the references to balance of risk, which Amara notes its node to switching focus from inflation to unemployment. Taking a look at economic growth and inflation, it's very much a soft landing. Median estimate rose to 2%, and the same again for 26 and 27. Inflation seen as 2.1 is penciled in for the end of 25, and then 2% for 2026. The long end dots are interesting. Over time, the steepening may come in. The long end's modest sell-off reflects the market's view that inflation might increase as the Fed cuts so aggressively. We're not convinced this will turn into a trend and see bull steepening continuing further. The 25 dots move lower by 75. Wasn't a shock. The question is, will the market believe the 273 terminal floor or price for more? Yeah, no, I think it's going to go more. That's it. So they're trying to say the bonds are chilling out, because some people may think that it's too aggressive, but no, I mean, that's it. I think as everybody realizes what that dot plot says, I think the dots, everyone's going to have to move lower. So watch 3.5 on the 10-year. Yeah, that's what I was saying. So bonds are starting to move up, but we need Powell. You need Powell to drive all of this home. Otherwise, you're not going to get much. What time is it right now? We got 15 minutes, so here it is. So remember, I told you guys, every 15 minutes you're going to get a move. So big pop-up, sell-off, first 15 minutes is there, and then see where this next round is going to take us. But hopefully you've made up your mind. I don't know if the White House is live, but that probably won't matter as much. I think they are live, though. Okay. I'm doing my thing. I'm getting like 4 different feeds up so that I could compare which one's going to be faster. There's so much. My goodness. All right. I can't believe that just happened, though. Half a basis point, you guys. So I'm kind of tweaked out. It sucks that we have to be patient, but in my mind, bro, that's it. Your hard landing is on the way. You can't tell me nothing now. The yield curve just uninverted, and then Powell opened up the cycle with 0.5 when he could have easily avoided it. Uh-huh. How many people will go bust? It depends how many people go all in ahead of it. Because that's what remember, like I was telling you guys from the beginning, there's going to be an adrenaline shot. So this is the adrenaline. Look at how people are reacting to 0.5, and they're already saying dovish, dovish, dovish. Everyone's dreams are coming true right now. That's it. That's why I'm saying watch for the 10-year now. It might make the move to 3.5 because now everyone's going to, just like any other time, once Powell agrees with the rate cuts, what does the market do? I don't know why everybody's acting like this is new. The moment Powell agrees, the market goes and doubles up what they want next. And that's why I think is about to happen again. But for the most part, people are liking it in the short run, but I do think in the mid to long term, this gets ultra bearish. It could be 3 to 6 months, maybe longer, maybe shorter, but essentially, even in 2019 or 2020, it took a couple months. Again, 2007, it took about like 8 months or 6 months, and then things started to go down after their first 50 basis point drop. So, ta-da! The yield curve was already uninverted, but now this is going to solidify it because now they just lowered the short end by 0.5. Here, let me put this another way. Are you ready? I'm about to blow your guys' minds right now. This is uninverting the yield curve, but Powell will try to hide it. I shouldn't even show you this. You know that? I shouldn't even show you this. I shouldn't even show you this. Are you ready? Are you ready? Powell just cut by 0.5, bro. Right? So here's the yield curve, right? Look. Even when this all started, the yield curve was down by negative 4.2. He just cut by 0.5. Even if the yield curve didn't uninvert, if he cut by 50 today, it would have uninverted today anyways. It would have been the exact same. The yield curve just front ran it. Ta-da! Yeah, isn't that nuts? This wasn't supposed to happen, bro. Yeah, it's right. Though, even though this kind of hides it and how it played out, it's like, no, man, because, like, no matter what, it was 0.47 at the depths of it. So, like, he would have, even if this didn't move, if he cut that much today, the yield curve would have uninverted anyways. So, yeah, I don't know, man. I think they try to pull a sleight of hand on us, but I watch all of it. So yeah, bro, that's it. I think our hard landing is coming, man. Again, it may be in 6 months, but I'm gonna come back to this video, asshole. Just know that damn well I will, because that is insane. All right, that's Fed music. Live coverage begins soon. Oh, all right. I got one feed already, but I need to compare this to my other ones. So I got one feed that's already showing the podium, but I need to make sure we get the fastest one. So we're going to have a couple. We just need to see where they're all at. But, yeah, get ready, man. Yeah, TLT. Well, that's the thing. So we'll talk about TLT on the watch list. I think there's going to be a couple of plays there, but it's going to play a little. It just depends on how Powell's conference goes. I'm bullish on TLT, but my problem is that the timing is going to be weird. But for the most part, if all is said and done, this is good to a degree for the bonds. But then again, what Powell says right now, that could change a couple of things. Watch list at between like 6 p.m. or no watch list tonight, actually. Damn. So you guys might just have to wait unless I do it live. And then gold is breaking out right now. People have, I'm only have this up to get the fastest feed right now. So you guys, you see the podium, you'll hear some stuff, but I might be liable to switch this out. I want to make sure we get the quickest one. There's a lot of things running right now. We got 8 minutes. There's literally Procter & Gamble, Coca-Cola, they're dying, and then a couple names. Gold is on the high, NEM. Gold is killing it, bro. I don't know. I think Beto should be going up there a little bit more. But gold is actually, well, yeah, gold's killing it, but Beto's already up by 0.7. Holy shit. So, yeah, gold is starting to go. I think a small gold. I already made my play on something else. So we'll see. Yeah, the yen if the yen breaks out from here, that's going to be good. Your yen plays from yesterday are in the green now, and you should be loving this. Not as much. It's a decent gain, but not too crazy. But, yeah, gold is loving it. Let me get Apple. SPY's chilling. Bonds a little bit off the top. They're trying to help Camelon. Nah, 50 tells something is, I don't like it. Something's brewing negatively. In my opinion, all of it is kind of weird. What play I made recently, you will have to wait till the watch list or till tomorrow, unfortunately. The Beto play is not running. No, it ran ahead. That's the thing. So keep in mind, like, look, Beto is up by 0.8. Gold is up by 1.1. The SPY is up by 0.4. So Beto just held the gains. But like I'm saying, wait till after Powell here. You might start watch things move. Because, again, the short end of the curve is running way more. But you have a couple of things moving right now. Yeah, TLT's even behind. Oh, where are the banks? Yeah, that's not good, dude. Look at this. If rates go lower and banks go down, that's a bearish signal. I think this is bad in the midterm. I think it's going to be bullish in the short term because everyone's a crackhead. And now they're like, and then now margin rates are going to drop too. But I think this is laying the groundwork for a hard landing now. This kind of confirms my opinion that I think Powell leaked everything because now I think Powell wanted it to look like the market wanted it. But now I think they're getting ahead of it all. Oh, Zillow and Redfin. I didn't even look at real estate. That's weird. The financials and REITs kind of came down. Oh? Yeah, Redfin's popping. But yeah, I don't like this in the midterm. I really, really don't. So I think in a couple months this is gonna play out very negatively. But for now, it'll be good. Do you hear that in the background? Listen. She's explaining the rules. Oh, wow. We should go back to that. She was just explaining the rules of decorum. I don't know if you heard that. She was like, turn off phones, cell phones, cameras. I'll come back here before it comes on and we'll double check everything. Wow. Interesting. All right, man. You got 4 minutes. So get ready because wherever the market is, and like I told you, right when Powell starts talking, the bonds or the stocks are going to go up. And then right when the speech, the pre-written part ends, it is going to it's also going to have a reaction. And can I tell you guys right now, there is 4 minutes. If you are the type of hoe to complain about me giving live commentary during one of the most important market events, you can go anywhere in the world right now to get this feed, okay? So just as a reminder, people are here so I could help them, and I plan on doing that. But if me talking over disturbs you, you may want to go somewhere else now, okay? Because it is going to, because I'm telling you, the first part of his speech, it's pre-written. So the first part, the algos kind of respond, but there's no real reaction from it. That's why I usually talk over it. But then if he says something that catches my ear, I'm probably going to yell over the microphone. So some of you freak out if you got that BBB. I understand. Just go anywhere else and you can hear it anywhere else in the world. So yeah, there's a nice little warning for you. 2.5 minutes. Let's see. I'm waiting. Making sure they're all live. We like I like commentating too, man. And it's cool because I'm telling you, man, as of lately, the way that financial media kind of screws you guys over and just they only give you one part of it, man. I like giving you an uncensored take. You know, sometimes I'll be wrong, sometimes I'll be right, but at the very least, I do hope it lets you get some thoughts and ideas, and then I do hope that you can learn, you know, what's going on with this, because this stuff is super important, but then it's like, it's wild how you could only get the tip of it depending on how, you know, people want to talk about it. Again, even this whole 50 basis point thing, how it all played out, bro, it was wild. So I'm glad I got to share my thoughts leading into it, but, you know, we still gonna have a little bit more here that we got to deal with. All right, the live feeds are all turning on. I got 3 different podiums live right now. Powell should be coming on in 1 minute and 15. I kind of want to play gold. I'm not going to lie. If gold drops during Powell, I might buy the dip. I'm mad that one's running like that. But then Beto's going to start running too. It's already up, so don't be fooled, you guys. If you're looking at Beto and you're like, why is it not moving? It's literally number 2 right now. Gold is number 1, then Bitcoin, and then the SPY and NASDAQ, and then bonds, believe it or not, and then the 2-year. So keep that in mind. All righty. Whichever one. The Fed is not live yet. Okay, 30 seconds. Good luck, you guys. I can't believe you just cut rates by 50, man. JP Morgan's AI tools label Fed statement as dovish. All right. 5, 4, 3, 2, 1. All right, the Fed is live. The Fed has officially gone live right now. Powell is not out yet. I'm scanning. Whichever podium he walks out on, that's going to be it. Let's see. All right, this one's fast. That's it. I got the right one. Yes, sir. Look it. Other places don't even have him yet.
Good afternoon.
We got him.
My colleagues and I remain squarely focused on achieving our dual mandate goals of
it's hella quiet.
And stable prices.
So watch out. I'm going to raise the speakers.
Our economy is strong overall and has made significant progress toward our goals over the past 2 years. The labor market has cooled from its formerly overheated state. Inflation has eased substantially from a peak of 7% to an estimated 2.2% as of August.
I think
we're committed to maintaining our economy's strength by supporting maximum employment.
So again, once he says, I'm turning it up right now,
our 2% goal.
But once he says,
today
we do communities and we care about communities and all that, that's the end. And then watch the market once he starts saying that.
Percentage point. This decision reflects our growing confidence that with an appropriate recalibration of our policy stance, strength in the labor market can be maintained in a context of moderate growth and inflation moving sustainably down to 2%. We also decided to continue to reduce our securities holdings. I will have more to say about monetary policy after briefly reviewing economic developments. Recent indicators suggest that economic activity has continued to expand at a solid pace. GDP rose at an annual rate of 2.2% in the first half of the year, and available data point to a roughly similar pace of growth this quarter. Growth of consumer spending has remained resilient, and investment in equipment and intangibles has picked up from its anemic pace last year. In the housing sector, investment fell back in the second quarter after rising strongly in the first. Improving supply conditions have supported resilient demand and the strong performance of the U.S. economy over the past year. In our summary of economic projections, committee participants generally expect GDP growth to remain solid, with a median projection of 2% over the next few years. In the labor market, conditions have continued to cool. Payroll job gains averaged 116,000 per month over the past 3 months, a notable step down from the pace seen earlier in the year. The unemployment rate has moved up but remains low at 4.2%. Nominal wage growth has eased over the past year, and the jobs to workers gap has narrowed. Overall, a broad set of indicators suggests that conditions in the labor market are now less tight than just before the pandemic in 2019. The labor market is not a source of elevated inflationary pressures. The median projection for the unemployment rate in the SEP is 4.4% at the end of this year, 0.4 higher than projected in June. Inflation has eased notably over the past 2 years, but remains above our longer run goal of 2%. Estimates based on the Consumer Price Index and other data indicate that total PCE prices rose 2.2% over the 12 months ending in August, and that excluding the volatile food and energy categories, core PCE prices rose 2.7%. Longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys of households, businesses, and forecasters, as well as measures from financial markets. The median projection in the SEP for total PCE inflation is 2.3% this year and 2.1% next year, somewhat lower than projected in June. Thereafter, the median projection is 2%. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. For
yeah,
much of the
low-key
past 3
IWM,
years,
bro.
inflation ran
I was
well
telling you,
above
that's
our
the
2%
secret one I
goal,
wanted,
and
but
labor
I was kind of
market
scared of
conditions
it.
were extremely
But it's
tight.
there. It's taken
Our
off.
primary
That's the leader
focus
now.
had been on bringing down inflation.
But then Bitcoin plays went up
appropriately
50%.
We are acutely
Hi.
aware that high inflation imposes significant hardship as it erodes purchasing power, especially for those least able to meet the higher costs of essentials like food, housing, and transportation. Our restrictive monetary policy has helped restore the balance between aggregate supply and demand, easing inflationary pressures and ensuring that inflation
A couple of
expectations
names are
remain
moving like
well anchored.
Tesla. Yeah, watch out.
Our patient approach over
Watch
the
out.
past
I'm only
year
going to
has
keep
paid
up
dividends.
I'm keeping up gold, Bitcoin,
Inflation
bonds,
is
and all
now
that. That's
much
more
closer
important.
to our objective, and we have gained greater confidence that inflation is moving sustainably toward 2%. As inflation has declined and the labor market has cooled, the upside risks to inflation have diminished and the downside risks to employment have increased. We now see the risks to achieving our employment and inflation goals as roughly in balance, and we are attentive to the risks to both sides of our dual mandate. In light of the progress on inflation and the balance of risks, at today's meeting, the committee decided to lower the target range for the federal funds rate by a half percentage point to 4.75% to 5%. This recalibration of our policy stance will help maintain the strength of the economy and the labor market, and will continue to enable further progress on inflation as we begin the process of moving toward a more neutral stance. We are not on any preset course. We will continue to make our decisions meeting by meeting. We know that
I
reducing
think
policy
him
restraints too
emphasizing
quickly
that, even
could
though it's
hinder
pre-written,
progress on inflation.
the market's like, okay,
At
then
the same
maybe
time,
he doesn't get
reducing
really
restraint
aggressive.
too slowly could
Yeah.
unduly weaken
But I
economic
think that'll just be
activity
a
and
knee-jerk.
employment.
I wouldn't trip.
In considering additional adjustments to the target range for the federal funds rate,
this is all
the
still
committee will
pre-written.
carefully assess
Still wild. I
incoming
can't believe you
data,
did it.
the evolving outlook, and the balance of risks. In our SEP, FOMC participants wrote down their individual assessments of an appropriate path for the federal funds rate based on what each participant judges to be the most likely scenario going forward. If the economy evolves as expected, the median participant projects that the appropriate level of the federal funds rate will be 4.4% at the end of this year and 3.4% at the end of 2025.
Yeah? Tell us more.
These median projections are lower than in June, consistent with the projections for lower inflation and higher unemployment, as well as the changed balance of risks. These projections, however, are not a committee plan or decision. As the
Again, that's
economy
why you're
evolves,
running off of that,
monetary
but
policy
him
will adjust in
reiterating
order
it's
to
not
best promote
guaranteed.
our
It's going to
maximum
pour some
employment
cold water for
and
a little
price
bit.
stability goals. If the economy remains solid and inflation persists, we can dial back policy restraint more slowly. If the labor market were to weaken unexpectedly or inflation were to fall more quickly than anticipated, we are prepared to respond. Policy is well positioned to deal with the risks and uncertainties that we face in pursuing both sides of our dual mandate. The Fed has been assigned two goals for monetary policy: maximum employment and stable prices. We remain committed to supporting maximum employment, bringing inflation back down to our 2% goal, and keeping longer-term inflation expectations well anchored. Our success in delivering on these goals matters to all Americans. We understand that our actions affect communities,
all right,
families,
get ready,
and businesses across
this is
the
end.
country. Everything we do is in service to our public
So
mission.
see where the bonds are, see where the market's
The Fed
at.
will do everything we can to achieve our maximum employment and price stability goals. Thank you. I look forward to your questions.
Steve Leisman, CNBC. Thank you, Mr. Chairman, for taking our questions. In July, you said you weren't necessarily thinking about a 50. You didn't want to be specific, but you said you weren't thinking about a 50. The inflation data last week came out a little firmer than expected. Retail was strong, third quarter GDP running 3%. So what changed and made the committee go 50, and how do you respond to the concerns that perhaps it shows the Fed is more concerned about the labor market? And I guess, should we expect more 50s in the months ahead? And based on what should we make that call? Thank you.
So, okay, a lot of questions in there. Let me jump in.
So much fun.
So, since the last meeting, we have had a lot of data come in. We've had the two employment reports, July and August. We've also had two inflation reports, including one that came in during blackout. We had the QCEW report, which suggests that suggests that the payroll report numbers that we're getting may be artificially high and will be revised down. You know that. We've also seen anecdotal data like the Beige Book. So we took all of those and we went into blackout and we thought about what to do, and we concluded that this was the right thing for the economy, for the people that we serve, and that's how we made our decision. So that's one question. What was
But you
what
said
was the
no in
second
July.
and third?
How do we make sorry, thank you, sir. How do we figure out in the months ahead, is there another 25 or 50 coming in? Based on what shall we make that call? Thank you.
Sure. So a couple things. A good place to start is the SEP, but let me start with what I said, which was that we're going to be making decisions meeting by meeting.
But the SEP you
based
said could
on
change.
the incoming data, the evolving outlook, the balance of
Love it.
risks. If you look at the SEP, you'll see that it's a process of recalibrating our policy stance away from where we had it a year ago when inflation was high and unemployment low, to a place that's more appropriate given where we are now and where we expect to be. And that process will take place over time. There's nothing in the SEP that suggests the committee is in a rush to get this done. This process evolves over time. Of course, that's a projection. That's a baseline projection. We know, as I mentioned in my remarks, that the actual things that we do will depend on the way the economy evolves. We can go quicker if that's appropriate. We can go slower if that's appropriate. We can pause if that's appropriate. But that's what we were contemplating. I would point you to the SEP as just an assessment of where of what the committee is thinking today, what the individual members rather of the committee are thinking today, assuming that their particular forecasts are realized.
Hi, Chris Rugaber at Associated Press. Thank you. The projections show that the Fed officials expect the Fed funds rate to still be above their estimate of long-run neutral by the end of next year. So does that suggest you see rates as restrictive for that entire period? Does that threaten the weakening of the job market that you said you'd like to avoid? Or does it suggest that maybe people see the short-run neutral as a little bit higher than long? Thank you.
I think the way I would really characterize it is this. I think people write down their estimate, individuals do. I think every single person on the committee, if you ask them what's your level of certainty around that, they would say there's a wide range where that could fall. So I think we don't know. There are model-based approaches and empirically based approaches that estimate what the neutral rate will be at any given time. But realistically, we know it by its works. So that leaves us in a place where we expect, in the base case, to be continuing to
I think you just quoted the Bible.
And we'll be looking at the way the economy reacts to that.
Fun fact.
And that'll be guiding us in our thinking about the question that we're asking at every meeting, which is our policy stance the appropriate one? We know, if you go back, we know that the policy stance we adopted in July of 2023 came at a time when unemployment was 3.5% and inflation was 4.2%. Today, unemployment is up to 4.2%. Inflation's down to a few tenths above 2. So we know that it is time to recalibrate our policy to something that is more appropriate given the progress on inflation and on employment, moving to a more sustainable level, so that the balance of risks are now even. And this is the beginning of that process. I mentioned the direction of which is toward a sense of neutral. And we'll move as fast or as slow as we think is appropriate in real time. But what you have is our individual accumulation of individual estimates of what that will be in the base case.
TOT, they're going to shake everybody out, whether it's for a day or a week.
Howard Schneider with Reuters.
Assuming Powell doesn't kill everything.
How close was this in terms of the decision? You do have the first dissent by a governor since
so again,
2005.
We're moving all within what's priced in. Remember, a lot was leading
clearly
into
in
this.
favor of a 50, or was this a very close decision?
I think we had a good discussion. If you go back, I talked about this at Jackson Hole, but I didn't address the question of the size of the cut, left it open, and I think we left it open going into blackout.
Yeah.
And so there was a lot of discussion back and forth, good diversity
in the last 72
excellent
hours.
Discussion today. I think there was also broad support for the decision that the committee voted on. So I would add, though, look at the SEP. All 19 of the participants wrote down multiple cuts this year. All 19. That's a big change from June, right? 7 of them wrote down 3 or more, 17 of the 19 wrote down 3 or more cuts, and 10 of the 19 wrote down 4 or more cuts. So, there is a dissent, and there's a range of views, but there's actually a lot of common ground as well.
Follow up to that, now that this is in the books, can you give us some guidance as sort of follow up to Steve on the pacing here? Would you expect this to be running every other meeting once we get into next year?
Yeah, we're going to take it meeting by meeting. As I mentioned, there's no sense that the committee feels it's in a rush to do this. We made a good, strong start to this, and that's really, frankly, a sign of our confidence. Confidence that inflation is coming down toward 2% on a sustainable basis. That gives us the ability. We can, make a good, strong start, but. And I'm very pleased that we did. To me, the logic of this, both from an economic standpoint and also from a risk management standpoint, was clear. But I think we're going to go carefully, meeting by meeting, and make our decisions as we go.
Gina. Hi, Chair Powell. Gina Smilik with the New York Times. Thanks for taking our questions.
Gina.
You and your colleagues in your economic projections today see the unemployment rate climbing to 4.4% and staying there. Obviously, historically, when the unemployment rate climbs that much over a relatively short period of time, it doesn't typically just stop. It continues increasing. And so I wonder if you can walk us through why you see the labor market stabilizing, sort of what's the mechanism there, and what do you see as the risks?
So, again, the labor market is actually in solid condition. And our intention with our policy move today is to keep it there. You can say that about the whole economy. The U.S. economy is in good shape. It's growing at a solid pace. Inflation is coming down. The labor market is in a strong pace. We want to keep it there. That's what we're doing.
Sorry, Nick.
Nick Timmerhouse. Here it is. The guy who caused it. What's up, Mr. 50?
Chair Powell, does today's action constitute a catch-up in action given recent substantial revisions to the employment data? Or is this larger than typical rate cut a function of the elevated nominal level of the policy rate such that an accelerated cadence could be expected to continue?
Okay. Multiple questions.
Saying, are you catching up to this, or should we expect bigger cuts moving forward?
We're behind.
For those of you who didn't get that.
We do not think we think this is timely.
So you're saying
but
we're
I think
not
you
behind?
Can take this
Question
as
one.
a sign of our commitment not to get behind. So it's a strong move. Sorry, your other question was?
Well, is this about what happened in the employment data between this meeting and the last meeting, or is this about the level of the funds rate, the high nominal level of the funds rate relative to what might be expected if you're trying to maintain equilibrium?
So I think it's about, we come into this with a policy position that was put in place, as you know, I mentioned in July of 2023, which was a time of high inflation and very low unemployment. We've been very patient about reducing the policy rate. We've waited. Other central banks around the world have cut many of them several times. We've waited, and I think that patience has really
He's trying to
paid dividends
justify this like
in
the
the form of
January
our
6th
confidence
stuff.
that inflation is moving sustainably under 2%.
He's like, you know how long I waited?
So I think
don't
that is
tell
what
me I'm
enables us
cutting
to take
fast
this-
because I'm
this
behind. You
strong
know how
move
long I
today.
waited?
I do not think that anyone
Very
should look at this and
interesting
say,
answer. I
oh,
didn't
this is the
expect
new
that.
pace. You know, you have to think about it in terms of the base case. Of course, what happens
No,
will happen.
seriously, though, that's quite the
In
answer.
the base case, what you see is look at the S&P. You see cuts moving along. The sense of this is we're recalibrating policy down over time to a more neutral level, and we're moving at the pace that we think is appropriate given developments in the economy in the base case. The economy
Can
can
someone
develop
ask
in a way
why
that would
the-
cause us to go
the
faster
odds
or
changed so
slower,
much in the last couple
but
days?
That's what the base case says.
And if I could follow up on the balance sheet, in 2019, when you did the mid-cycle adjustment, you ceased the balance sheet runoff. With a larger cut today, should there be any signal inferred
Not until
about
the repo.
how the committee would approach end state on the balance sheet policy?
So in the current situation, reserves have really been stable. They haven't come down. So reserves are still abundant and expected to remain so for some time. As you know, the shrinkage in our balance sheet has really come out of the overnight RRP. So I think what that tells you is we're not thinking about stopping runoff because of this at all. We know that these two things can happen side by side. In a sense, they're both a form of normalization. And so for a time, you can have the balance sheet shrinking, but also be cutting rates.
Interesting. So they're
Thank you.
still
Colby Smith with
tightening
the Financial
while cutting.
Times. Just following up on Gina's question on rising unemployment, is it your view that this is just a function of a normalizing labor market amid improved supply, or is there anything to suggest that something more concerning perhaps is taking place here, given that other metrics of labor demand have softened too? And I guess in direct follow-up to Gina is, why should we not expect a further deterioration in labor market conditions if policy is still restrictive?
So I think what we're seeing is
this is trading a lot like last meeting.
Labor market conditions have cooled off by any measure, as I talked about in Jackson Hole. And but they're still at a level. The level of those conditions is actually pretty close to what I would call maximum employment. You know, so you're close to mandate, maybe at mandate on that. So what's driving it? Clearly, payroll job creation has moved down over the last few months, and this bears watching. By many other measures, the labor market has returned to or below 2019 levels, which was a very good, strong labor market, but this is more sort of 2018-17. So the labor market bears close watching, and we'll be giving it that. But ultimately, we believe, with an appropriate
Okay, bonds are now
recalibration of our
back to the
policy,
opening,
that,
the statement.
we can continue
Powell's
to see
still
the
above
economy
it,
growing,
the S&P
and
is.
that will support the labor market. In the meantime, if you look at the growth in economic activity data, the retail sales data that we just got, second quarter GDP, all of this indicates an economy that is still growing at a solid pace. So that should also support the labor market over time. So, but again, it bears watching, and we're watching.
Literally everything except
point about starting to see
the
rising
SPY
layoffs.
came
If that
almost
were
back down to
happen,
statement.
Wouldn't the committee already be too late in terms of avoiding a recession?
So that's our
Bitcoin's
plan,
holding
of
up.
course, has been to begin to recalibrate. And as you know, we're not seeing rising claims. We're not seeing rising layoffs. We're not seeing that, and we're not hearing that from companies that that's something that's getting ready to happen. So we're not waiting for that, because there is thinking that the time to support the labor market is when it's strong, and not when you begin to see the layoffs. There's some lore on that. So that's the situation we're in. We have, in fact, begun the cutting cycle now, and we'll be watching, and that'll be one of the factors that we consider. Of course, we're going to look at the totality of the data as we make these decisions meeting by meeting.
Michael McKee with Bloomberg TV and Radio.
Okay, watch. Market
To
usually
follow
rips
up
on Michael
that,
McKee, sadly.
What would constitute for you and the committee a deterioration in the labor market? You're pricing in basically by the end of next year 200 basis points of cuts just to maintain a higher unemployment rate. Would you be moving to a more preemptive monetary policy style rather than, as you did with inflation, waiting until the data gave you a signal?
No, we're going to be watching all of the data, right? So if as I mentioned in my remarks, if the labor market were to slow unexpectedly, then we have the ability to react to that by cutting faster. We're also going to be looking at our other mandate, though. We have greater confidence now that inflation is moving down to 2%, but at the same time, our plan is that we will be at 2%, over time. So. And policy, we think, is still restrictive, so that should still be happening.
I'm just curious as to how sensitive you'll be to the labor market, since you forecast we are going to see higher unemployment and it is going to take a significant amount of monetary easing to just maintain it.
So, what I would say is we don't think we need to see further loosening in labor market conditions to get inflation down to 2%.
Yeah,
but
I agree,
we have
Darth.
a dual mandate.
I agree, bro.
I think you can take this whole action as
I got a lot
take
to
a step
tell you.
back. What have we been trying to achieve? We're
I keep
trying to
listening.
achieve a situation where we restore price
I'm
stability
trying to listen,
without
but,
the kind of painful
he already said a lot.
Increase
The
in
action, it's
unemployment
already communicated.
that has
man.
come sometimes.
I'm smiling
with
right now.
disinflation.
It's
That's what we're
everything's
trying
been
to do.
communicated.
And I think you can take today's
So he might add a couple
action
things that could move
as a
equities
sign of
around
our
and
strong
shit, but
commitment
he
to
just
achieve
told
that
you the
goal.
fucking answer, bro. You already know. Literally, 50 basis points. I already told you what it means. There's
Hi,
no,
Chair Powell.
again,
Rachel
even with
Siegel
what
from
Darth
Washington
Rib
Post.
just said.
Thanks for taking our questions. You're describing this view that you don't think you're behind when it comes to the job market. Can you walk us through the specific data points that you found to be most helpful in the discussions at this meeting? You've mentioned a couple, but would you be able to walk us through what that dashboard told you as far as what you know about the job market now?
Sure. So we'll start with unemployment, which is the single most important one probably. You're at 4.2%.
Okay.
That's, I know that's higher than we were used to seeing numbers in the mid and even below mid.
Equities holding that and gold,
year,
but
if you
bonds
look
still
back over
dancing a
the
little bit more.
Sweep of the years, that's a very healthy unemployment rate, and anything in the low fours is a good labor market. So that's one thing. Participation is at high levels. It's we're right adjusted for demographics, for aging. Participation's at pretty high levels. That's a good thing. Wages are still a bit above what would be their wage increases, rather, are still just a bit above where they would be over the very longer term to be consistent
maybe
with 2%
bonds are
inflation. But
leading.
they're very much coming down to what that sustainable level is, so we feel good about that. Vacancies over, per unemployed is back to what is still a very strong level. It's not as high as it was. That number reached 2 to 1, 2 vacancies for every unemployed person as measured. It's now below around 1, but that's still a very good number, I would say. Quits have come back down to normal levels. I mean, I could go on and on. There are many employment indicators. What do they say? They say this is still a solid labor market. The question isn't the level. The question is that there has been change particularly over the last few months, and so what we say is as the risks, the upside risks to inflation have really come down, the downside risks to employment have increased, and because we have been patient and held our fire on cutting while inflation has come down, I think we're now in a very good position to manage the risks to both of our goals.
And what do you expect to learn between now and November that will help inform the scale of the cut at the next meeting?
More data, the usual. Don't look for anything else. We'll see another labor report. We'll see another jobs report. I think we get a second jobs report on the day of the meeting, I think. Or no, on the Friday before the meeting. And inflation data. We'll get all this data. We'll be watching. It's always a question of look at the incoming data and ask what are the implications of that data for the evolving outlook and the balance of risks, and then go through our process and think what's the right thing to do. Is policy where we want it to be to foster the achievement of our goals over time? So that's what it is, and that's what we'll be doing.
Hi, Chair Powell. Neil Irwin with Axios. We've only been running a little above 100,000 jobs a month on payrolls the last 3 months. Do you view that level of job creation as worrying or alarming, or would you be content if we were to kind of stick at that level? And relatedly, one of the welcome trends of the last couple of years has been labor market steam coming out through job openings falling rather than job losses. Do you think that trend has further to run, or do you see risk that further labor market cooling will have to come through job losses?
So on the job creation, it depends on the inflows, right? So if you're having millions of people come into the labor force, and you're creating 100,000 jobs, you're going to see unemployment go up. So it really depends on what's the trend underlying the volatility of people coming into the country. We understand there's been quite an influx across the borders, and that has actually been one of the things that's allowed unemployment rate to rise. And the other thing is just the slower hiring rate, which is something we also watch carefully. So it does depend on
the whole
on what's
curve is
happening on the
moving.
supply side.
So
And
watch
on the
TLT, but
beverage
keep an eye
curve
on
question,
shy in the 2 year.
Yes, so
that's the other part of it.
We all felt on the committee, not all, but I think
we'll talk about it here in a sec.
Felt that job openings were so
But like I'm
elevated
saying,
that they could fall a long way.
the day has
before
its
you
own
hit the part of
thing
the curve where job
on the
openings
trade of, but
turned into
I do think the
higher
midterm
unemployment,
is
job loss. And,
very clear.
Yes, I think we are. It's hard to know that you can't know these things with great precision, but certainly it appears that we're very close to that point, if not at it, so that further declines in job openings will translate more directly into unemployment. But it's been a great ride down. I mean, we've seen a lot of tightness come out of the labor market in that form without it resulting in lower employment.
Thanks, Chair Powell. Edward Lawrence, Fox Business. So we've heard some speculation that you may be going with the federal funds rate to 3.5%, maybe under 4%. And there's basically an entire generation that has experienced zero or near zero federal funds rate. Now, some think we're heading in that direction again. What's the likelihood that cheap money is now the norm?
So this is a question, and you mean after we get through all of this? It's just a great question that we can only speculate about. Intuitively, many people anyway would say we're probably not going back to that era where there were trillions of dollars of sovereign bonds trading at negative rates, long-term bonds trading at negative rates. And it looked like the neutral rate might even be negative. So people were issuing debt at negative rates. It seems that's so far away now. My own sense is that we're not going back to that. But honestly, we're going to find out. But it feels to me and that the neutral rate is probably significantly higher than it was back then. How high is it? I just don't think we know. We only know it by its works.
One more. How do you respond to the criticism that will likely come that a deeper rate cut now before the election has some political motivations?
There it is.
Yeah. So this is my fourth presidential election. At the
so bonds,
Fed,
new low of the day, and SPY.
Dude,
this might be like what, quadruple
we're always
bottom,
going
whatever you want to call that.
This meeting in particular, and
but there's that political question.
Asking what's the right thing to do for the people we serve, and we do that, and we make a decision as a group, and then we announce it, and that's always what it is. It's never about anything else. Nothing else is discussed, and I would also point out that the things that we do really affect economic conditions for the most part with a lag. So nonetheless, this is what we do. Our job is to support the economy on behalf of the American people. And if we get it right, this will benefit the American people significantly. So this really concentrates the mind. And it's something we all take very, very seriously. We don't put up any other filters. I think if you start doing that, I don't know where you stop. And so we just don't do that.
Thank you, Chair Powell. I'm Jolene Kent with CBS News. My first question is, very simply, what message are you trying to send American consumers, the American people, with this unusually large rate cut?
I would just say that the U.S. economy is in a good place, and our decision today is designed to keep it there. More specifically, the economy is growing at a solid pace. Inflation is coming down closer to our 2% objective over time. And the labor market is still in solid shape. So our intention is really to maintain the strength that we currently see in the U.S. economy. And we'll do that by returning rates from their high level, which has really been, the purpose of which has been to get inflation under control. We're going to move those down over time to a more normal level over time.
Just a quick follow-up to that. Listening to you talk about inflation moving meaningfully down to 2%, is the Federal Reserve effectively declaring a decisive victory over inflation and rising prices?
No, we're not. So inflation, what we say is we want inflation, the goal is to have inflation move down to 2% on a sustainable basis. And, we're not really, we're close, but we're not really at 2%.
They're scamming so
And I
hard
think
at
we're gonna
putting in
wanna
an order.
see it be
Thank you.
around 2% and close to 2% for some time.
Every time I put in an order, they raise the ask, and then I
doing-
cancel it, and they lower it. I've never had that
mission
happen 5
accomplished or
times.
anything like that. But I have to say, though, we're encouraged by the progress that we have made.
Hi, Katerina Saraiva with Bloomberg News. I just would love to know kind of how the committee is thinking about the persistence we've seen in housing inflation. Do you think you can return to 2% with housing inflation where it is? Yeah.
So housing inflation is the one piece that is kind of dragging a bit, if I can say. We know that market rents are doing what we would want them to do, which is to be moving up at relatively low levels. But they're not rolling over. The leases that are rolling over are not coming down as much, and OER is coming in high. So, it's been slower than we expected. I think we now understand that it's going to take some time for those lower market rents to get into this. But, the direction of travel is clear, and as long as market rents remain, relatively low inflation, over time that will show up. Just the time it's taking now, several years
One
rather than
piece.
just 1 or 2 cycles of annual lease renewals. So I think we understand that now, but I don't think the outcome is in doubt again.
Homeboy's
as long
literally
as
said this for
market
like 3
rents
years.
remain under control,
And then it
the
never
outcome is
reacted.
not in doubt. So I would say it's the rest of the
There's
rest
an
of the
explanation for
portfolio of
TLT. I'll go over it
the
after
elements
this.
that go into core PCE inflation.
But it has to do with
have
hard
behaved
landing
pretty
versus
well.
soft landing,
They're
and it's
all,
playing
they all have
out.
some volatility.
So the
We will
timing
get
on
down to
TLT will
2%
be
inflation,
weird,
I
but
believe. And
the
I believe
idea
that
of bonds is
ultimately we'll
there's
get
definitely
what
some
we
room
need
to
get
move
out of the housing services.
But it's
piece
kind
too.
of what the market's communicating.
Some of your colleagues have expressed concern that with starting to cut rates, you could reignite demand in housing and see prices go up even more.
Jeez. How's that?
What's the likelihood of that, and how would you react to that?
The housing market, it's hard to game that out. The housing market is in part frozen because of lock-in with low rates. People don't want to sell their home, so because they have a very low mortgage, it'd be quite expensive to refinance. As rates come down, people will start to move more, and that's probably beginning to happen already. But remember, when that happens, you've got a seller, but you've also got a new buyer in many cases. So it's not, obvious how much additional demand that would make. I mean, the real issue with housing is that we have had and are on track to continue to have not enough housing. And so it's going to be challenging. It's hard to find
gold flipped red now.
zone lots that are in places where people
So
want
literally,
to live.
Bitcoin's holding.
It's
That's
all
insane.
of the aspects of housing.
Everything else is flipping, though. Bonds are now red on the day, like more red. The yen came back,
where
too.
We're going to get the supply, and this is not something that the Fed can really fix. But I think as we normalize rates, you'll see the housing market normalize. And, I mean, ultimately, by getting inflation broadly down and getting those rates normalized and getting the housing cycle normalized, that's the best thing we can do for householders. And then the supply question will have to be dealt with by the market and also by government.
Hi, Victoria Guido with Politico. Just following up on some of the labor market talk earlier, monetary policy operates with long and variable lags, and I'm wondering how much you see being able to keep the unemployment rate from raising too much comes from the fact that you're starting to act now, and that's going to give people more room to run versus just the labor market is strong. And then also, if I could, following up on Nick's question, do you see today's 50 basis point move as partially a response to the fact that you didn't cut in July, and that sort of gets you to the same place?
So you're right about lags, but I would just point to the overall economy. You have an economy that is growing at a solid pace. If you look at forecasters or talk to companies, they'll say that they think 2025 should be a good year too. So there's no sense that the U.S. economy is basically fine. If you talk to market participants, business people who are actually out there doing business. So I think our move is timely. I do, and as I said, you can see our 50 basis point move as a commitment to make sure that we don't fall behind. So you're really asking about your second question. You're asking about July, and I guess if you ask, if we'd gotten the July report before the meeting, would we have cut? We might well have. We didn't make that decision, but we might well have. I think that's not, that doesn't really answer the question that we ask ourselves, which is let's look, at this meeting, we're looking back to the July employment report, the August employment report, the two CPI reports, one of which came, of course, during blackout, and all of the other things that I mentioned. We're looking at all of those things, and we're asking ourselves, what's the policy stance we need to move to? We knew, it's clear that we clearly, literally everyone on the committee agreed that it's time to move. It's just how fast do you go, and what do you think about the path forward? So this decision we made today had broad support on the committee, and I've discussed the path ahead.
Thank you, Chair Powell. Elizabeth Schulze with ABC News. Mortgage rates have already been dropping in anticipation of this announcement. How much more should borrowers expect those rates to drop over the next year?
Very hard for me to say. That's from our standpoint. I can't really speak to mortgage rates. I will say, that'll depend on how the economy evolves. Our intention, though, is we think that our policy was appropriately restrictive. We think that it's time to begin the process of recalibrating it to a level that's more neutral rather than restrictive. We expect that process to take some time, as you can see in the projections that we released today. And if things work out according to that forecast, other rates in the economy will come down as well. However, the rate at which those things happen will really depend on how the economy performs. We can't look a year ahead and know what the economy is going to be doing.
What's your message to households who are frustrated that home prices have still stayed so high as rates have been high? What do you say to those households? Well,
what I can say to the public is that we had a burst of inflation. Many other countries around the world had a similar burst of inflation, and when that happens, part of the answer is that we raise interest rates in order to cool the economy off, in order to reduce inflationary pressures. It's not something that people experience as pleasant, but at the end, what you get is low inflation restored, price stability restored. And a good definition of price stability is that people in their daily decisions, they're not thinking about inflation anymore. That's where everyone wants to be, is back to what's inflation. We just keep it low, keep it stable. We're restoring that. So what we're going through now really, it restores, it will benefit people over a long period of time. Price stability benefits everybody over a long period of time just by virtue of the fact that they don't have to deal with inflation. So that's what's been going on, and I think we've made real progress. We don't tell people how to think about the economy, of course, and of course people are experiencing high prices as opposed to high inflation, and we understand that's painful.
Hi, Chair Powell. Greg Robb from MarketWatch.com. I was wondering if you could go through, you said just at the beginning that coming into the blackout, there was like an open thought of 25 or 50. The Fed could move either 25 or 50. I would sort of argue that when we had those two last speeches by Governor Waller and New York Fed President John Williams, that they were sort of saying that maybe a gradual approach was going to win the day. I mean, I sort of want to ask a 7-part question about this, but I mean, could you talk, would you have cut rates by 50 basis points if the market had been pricing in like low odds of a 50-point move like they were last Wednesday, after the CPI number came out? there's a really small probability of a 50-point cut. Does that play in your consideration at all? Just talk a little bit about that. Thank you.
We're always going to try to do what we think is the right thing for the economy at that time. That's what we'll do. And that's what we did today.
Thank you, Chair Powell. Simon Rabinovich with The Economist. You've mentioned how closely you're watching the labor market, but you also noted that payroll numbers have been a little bit less reliable lately because of the big downward revisions. Does that put your focus overwhelmingly on the unemployment rate? And given the SEP projection of 4.4 basically being the peak in the cycle, would going above that be the kind of thing that would trigger another 50 basis point cut?
So we will continue to look at that broad array of labor market data, including the payroll numbers. We're not discarding those. I mean, we'll certainly look at those, but we will mentally tend to adjust them based on the QCEW adjustment, which you referred to. There isn't a bright
I was
line.
muted.
It will be.
Yeah, bro. He asked the question.
The unemployment rate's very
that last
important,
question that he was
of course,
short with.
but
Oh my
there
gosh.
isn't a single statistic
that was the
or a
question,
single
bro.
bright line.
That was the. He was
over which
asking
that
about
thing
the
that-
50
that
basis
might
point.
move
Yeah.
that
Oh my
would
gosh, I was muted.
Dictate one thing or another. We'll look at each meeting.
Yeah.
We'll look at all the data
Dude,
on
I was been
inflation,
muted this whole
economic
time.
activity, and the
No,
labor
dude, that
market,
last
and
question
we'll
was
make
great.
decisions about is our
It's all
policy
bullshit. Because that
stance
last question
where
he
it
was
needs to
saying,
be
would you have
to-
done
to
50 if
foster
nobody brought it
over the
up?
medium term,
And then Powell hit him with the most
mandate
generic ass
goals.
answer.
So I can't say.
And he was
we-
like,
we
no,
have a bright line
this is best
in
for the
mind.
economy because pretty much the economy's going to crash. So yeah, no, dude, that's crazy. That last question was the number one question of the day.
Madigan from CNN. I know that you.
Then did you
discussed
hear what I
earlier
said about the
how
soft landing?
The Fed does whatever.
Or no?
the
Did
right
you guys hear
thing
that at all or
is,
no?
And nothing else factors in.
That
But
last question
in
was
general,
crazy, though.
Can you talk about whether or not you believe?
Oh,
a
no
sitting
way.
US president
So I said
should
I'm going to
have a
explain
say
it, but I said,
in
listen, bro,
Fed
you guys don't need to
decisions
trip
on
out about what's happening.
that's something that
Oh
former
man,
President Trump
I was saying no matter what,
do,
nothing's going to like.
has
Don't
previously-
trip out on
previously
any moves right
suggested.
now.
And I
Do
know
not
the Fed
freak
is
out. Do
designed
not
to
get
be
nervous. That's like the beauty
But
of
why?
everything
Tell the
kind
public
of being
why you
priced
do
in.
that. So
But
important.
something is
Sure,
really.
so,
Something's really
countries that are-
is getting priced literally right now.
democracies around
So
the
like
world,
literally the things that are
countries
moving
that are
from
sort of like the
commodities
United States,
to the bonds. This
all
is
have
all
what
in
are
a
called
weird way.
independent central
When I
banks.
say it
And the
out
reason
loud,
is
it's gonna
that
you're not gonna it's not gonna
people
make
have
sense.
found over time that
but this is
insulating
pricing
the
in
central bank
the
from direct
this is pricing
control
in a
by
hard
political
soft
authorities
landing.
Avoids.
So in a weird way, this is the reaction of the
monetary
market
policy
believing
in
it.
a
I'll
way
explain
that
to you in a
favors
second.
maybe people who are in office as opposed
But I
to
didn't want to
people who are
interrupt
not
too
in
much.
office.
But no,
So
you'll be surprised.
That's the idea.
You will be
is
surprised.
that, and I think the data are clear that countries.
I don't
that have
agree with it, and I
independent
think
central
you'll get
banks, they
surprised
lower
negatively.
inflation. And
But
so
in the
we're-
short
we're
term, the
not-
equities can still price
we
in
do our work
a
to
soft
serve
landing. I
all
believe
Americans. We're not
this
serving any
solidifies a hard
politician,
landing,
any
but I'll
political,
show you what I'm talking about.
Figure, any cause,
It's a very
any
unique
issue,
reaction.
nothing. It's just
But the
maximum
beauty,
employment,
there's nothing
price
to be
stability on
nervous
behalf
about.
of all
We're
Americans.
moving in the same
And that's how the
priced
other
in
central banks
ratio.
are set up too.
I'm not.
It's a
I
good
wouldn't really be tripping
institutional
out.
arrangement, which has been good for the public, and I hope it. I hope and strongly believe that it will, continue.
Be cut by 50, yeah.
Kyle Campbell for American Banker. Thanks for taking the questions, Chair Powell. A couple regulatory developments in the past week that I want to ask you about. First, last week, Vice Chair for Supervision, Michael Barr, outlined his views for the changes to the Basel III Endgame. I'm wondering if you are.
No, bro.
in
It's
alignment
like
with,
it's a soft landing,
with
but the
him on
market's still
those
worried.
changes
It's a
should be,
very,
if those have
it's a very
support
interesting move right
on
now.
board
I can't
in
wait
the
to
broad
explain
way
this
that
to you
you're looking
guys.
for. And
But
if
I
you
need
think
a little
other
more
agencies
silence
are
because I don't
also
want to miss
fully on
anything.
board with that approach. And then yesterday, other banking regulators.
You know what? Hold the second question.
Okay, sure.
Let me
Shut the fuck up.
We'll give you the second question. So, the answer to your question is that yes, those changes were negotiated between the agencies with my support and with my involvement, with the idea that we were going to repropose the changes that Vice Chair Barr talked about, and then take comment on them. So yes, that is, that's happening with my support.
And then is there a date for that?
That's not a final proposal, though. You understand? We're putting them out for comment. We're going to take comment and make appropriate changes. We don't have a calendar date for that. And as for the other agencies, the idea is that we're all moving together. We're not moving separately. So that I don't know exactly where that is, but the idea is that we will move as a group to put this again out for comment. And then, it'll come, the comments will come back 60 days later, and we'll dive into them, and we'll try to bring this to a conclusion sometime in the first half of next year.
And then yesterday, there were merger reform finalizations from the other bank regulators. What does the Fed have to do to align itself on merger?
I would bounce that question to Vice Chair Barr. It's a good question, but I don't have that today. Thanks.
Jennifer for the last question. Thank you, Chair Powell. Jennifer Schonberger with Yahoo Finance.
Oh, wait, last question.
You said earlier that the decision today reflects with appropriate recalibration strength in the labor market that can be maintained in the context of moderate growth. Even though the policy statement says you view the risks to inflation and job growth as roughly balanced. Given what you've said, though, today, I'm curious, are you more worried about the job market and
I like how she talks.
growth than inflation? Are they not roughly balanced?
No, I think, and we think they are now roughly balanced. So if you go back for a long time, the risks were on inflation. We had a historically tight labor market, historically tight. There was a severe labor shortage.
It was
So
the tightest, very tight.
very hot labor market, and we
Very
had
hot.
inflation way above
Hot
target.
market.
So, that said to
That
us,
said,
concentrate on inflation, concentrate on inflation, and we did for a while, and we
best.
kept at that. The stance that we put in place 14 months ago was a stance that was focused on bringing down inflation. Part of bringing down inflation, though, is cooling off the economy and a little bit cooling off the labor market. You now have a cooler labor market in part because of our activities. So what that tells you is it's time to change our stance. So we did that. The sense of the change in the stance is that we're recalibrating our policy over time to a stance that will be more neutral. And today was, I think, we made a good, strong start on that. I think it was the right decision, and I think it should send a signal that that we're committed to coming up with a
First
good
part
outcome
of the
here.
thing. Definitely a signal.
Vulnerable to a shock now that could tip it into recession.
I don't think so. I don't. There's, as I look. Well, let me look at it this way. I don't see anything in the economy right now that suggests that the likelihood of a recession, of a downturn, is elevated. Okay, I don't see that. You see growth at a solid rate. You see inflation coming down, and you see a labor market that's still at very solid levels. So I don't really see that. No.
Your guys'
Thank you.
reaction. Thank you. All right. Jerome Powell, ladies and gentlemen. Jerome Powell. So let me get this first part out of the way because Powell just got something out of the way. It's very, very simple. Even by him doing that, I think Powell opened up with a very strong rate cut to help take some pressure off of him coming into the election. You got to realize now, when it's all said and done, by the time this year ends, whatever happens with the election, you can't say that Powell didn't respond. Okay? That's the first thing. You got to think about it. If you're like, Powell's behind, Powell's ahead, Powell's no, it doesn't matter, just because at the end of the day, he did something, and it was big. It wasn't small. It was 50 basis points. It was massive, actually. So he has his ass covered when it's all said and done. That's number one. Number two, bonds selling off, SPY doing absolutely nothing, commodities are selling off. I thought they're pricing in more rates. What the hell is going on? TLT. No, it's simple. It's remarkable, actually. This is pricing in a soft landing initially, but the market is also worried. So like I'm telling you, some people would be worried if this came in at 0.5. But here's the problem. What just happened? They're lowering the rates in 2025 and 2029. Why are the bonds going down? It's because people believe that Powell is going to lower rates. They believe he's aggressive after today. But then again, if you are worried about inflation reigniting, if this goes a little too low, it's kind of getting to the point where some people are saying, well, wait a minute, if they actually do plan on cutting like that, then what about inflation down the road? What's another factor? What have I told you guys about soft landing or hard landing? Please, let me show you something. How many times have I told you that commodities? So look at gold selling off after the pop, just like bonds, silver, oil, all of the commodities, you just got a half a basis point cut and they're going down. That is leaning towards more of that soft landing caution. So in a weird way, you're remarkably pricing in both the soft landing while kind of entertaining the potential of a downside because of what just happened. So that's one part of why I think the move is here. I think there's going to be a couple of more follow-ups here, but at the end of the day, I hate to break it to you. It's what I told you guys in the beginning. I do think this is negative, though. So I don't think the market's going to take it negatively. You had the adrenaline, though. Like I'm saying, I think you have the adrenaline is going to hit a little bit delayed because I think now that quote-unquote recalibration, I literally think you have the market, I think a little bit of recalibrating towards both acknowledging lower rates, aggressive low rates, and then this idea that it's both a soft landing with a little bit more risks of either inflation or even the hard landing. But I don't, dude, I think I think something was very well communicated. Rates should be expected to go lower, and Powell he needs to make a big move, and he thinks it is good for the economy to make a big move down in terms of rates. So I think this is opening up the door to the hard landing. But yeah, the long end doesn't want them to ease aggressively. Yeah, it's kind of like what I'm saying here, but it's more or less the long end of the bond market. It's worried about inflation. So it's acknowledging that Powell is down to move fast and is willing to cut by 50, but the long end is saying, well, wait a minute, if we're going to keep cutting more, what happens if inflation reignites? Yeah, exactly. So the bond market's showing that. Because, again, dude, we were at 4.1. I told you 3.6. The number came in at 3.4. So that should have been really bullish, but the hesitancy is that, well, wait a minute, that means Powell is about to kind of get aggressive. But if he gets too aggressive, there's some other risks. But like I'm saying, in the short run, my theory still matches up. I think short run is still going to be bullish for bonds and equities, but then midterm to long term, I think we're going to get fucked. That's it. I don't have no other way to put it politely. But yeah, that's how I'm viewing this reaction. No, not even you guys got to realize you have Bank of Japan tomorrow. So if they surprise or do anything, but that's going to be another move, then you're going to have more data. But like I'm saying, it's quite simple. You have more aggressive rate cuts. Powell and the Fed are down with it. But then you're getting enough aggressive rate cuts before anything has changed. That has hard landing or inflation reigniting risk is very real. That's why the bond market doesn't want to go down too much. Do you see it? Because if it really was going to be scary, or if it was going to go down, they'd buy the bonds. But why are the bonds are kind of worried on the long end? But then again, look at everything I'm showing you. Even SHI is up. The short end of the curve is green. The long end is red. Commodities are down, right? The market just moving. It's moving what was priced in. But think about it. All of those theories that I've told you guys, it all matches up with this. Like I'm saying, commodities down, short end catching a bid, all of it. No, it makes sense. This is a shift. It's like the recalibration, but we are the next 3 to 6 months, even 9 months, are going to be kind of rocky, is the only way I could put it. Because it either means you truly are going to get that soft landing, or literally we are going to have a lot of one after the other. The yen is moving with the dollar, so that's part of it too. So again, dollar is getting tied into this, dollar and rates. So take a look. As the dollar moves, the yen has inversed it, and then they're going there. But no, man, I'm telling you, this is fascinating, but this is it. So that's what I'm saying. The equity movements might trip you out in the short term, but it's going to be, I still think, short term, you get a little bit bullish, and then midterm to long term, as we suss everything out with certain data, it's going to get even better or worse. But the bond market it's a fascinating reaction. It's acknowledging everything right now. Like I'm telling you, it's just think about what just happened. Outsized reaction, outsized cut. Your market may not be moving a lot, but it's 50 basis points. The short end is catching a bid, but commodities aren't running. You would think gold, silver, oil, copper, aluminum, they should be going with this, but they're not. because that means there's kind of another worry down the line. And that worry means either hard landing or prices going up. So I think gold might snitch on the price aspect later, but for now, you just had the Fed admit to more rate cuts, and you're not watching everybody go crazy on the long end, but they are on the short end. So they're down with the curve with Powell to start moving, but now down the road they're getting kind of doubtful about what sort of economic scenario we end up in. So I think it's kind of crazy, but get ready for it. But I do think the theory remains. Short term, you're going to have some bullishness, and then midterm to long term, I think it's going to get bumpy, and then that could change rapidly depending on said data. You feel me, but they could be lagging. Yeah, but that's what I'm saying. I think the bond market is communicating that. So the bond market, whether the bond market knows or not, at the end of the day, the short end of the curve is going lower, but the long end is saying, hold on, I like where I'm at, but maybe we should be a little more hesitant. But why would the long end be more hesitant if the Fed is like, yo, I'm about to cut 10, 12 more times now, like I just put here in writing? So whatever the reason, whether it's Powell, whether it's the market, or whether it's somebody knows or nobody knows, the bond market is showing this worry in real time now. And I think that's what's going to happen over the next couple of days and couple of weeks. I think that's that recalibration. I think the bond market in different parts of the curve, they're going to communicate this as we start to figure out. But and I think it makes sense, but it's clear, bro. 50 basis points, something has been unleashed, whether it's really good or really bad. But I think we're going to start seeing that down the road. And I don't know the timing of that, but it's clear we're getting acknowledgments of stuff, but then there is still now kind of some uncertainty. The BOJ, it's going to be tonight, but the Bank of Japan's not expected to move much. So now with Powell kind of going outsized, and like I said yesterday, last week, nobody in Japan was pricing in that we would cut by 0.5. So remember, we freaked out when the Japanese went a little bit more aggressive. So what's going to happen with the other one? Do you sell out of TLT? You need to make your own decision, my friend. That's exactly why I did not want to be involved in people's shit with it. I told y'all to make it free, but there's going to be opportunities for bonds both now and then down the road. So you need to go with what makes the most sense for your account. If you could make a play free as soon as possible, then that's what I would be doing. What would I do? I would make my decision. I wouldn't ask anybody on the internet. That's exactly what I would do. It's what I do every day. And then I would follow me on Instagram at the Trading Fraternity. That's a good plan. That is a good plan. But no, I think it's easy, like in all seriousness, make up your mind on the plays. So like I'm saying, what do you think is going to happen to the economy and the bond market in 6 months? What do you think is going to happen in 3 months? And then if your account is in a position to speculate or not, if it's not, I would either make my plays free, or like I said at the beginning of this event, I would play very, very small. Otherwise, if I had more room to push risk, I would be taking more risk here. But then at the same time, I would still be inclined to make things free just because of how volatile things have been. The yen, well, I like today. So based on today, I'm going to do some certain moves, but I'll talk about it on the watch list, Adita. Not right now. So again, same thing goes for all of you guys. You have to make your plans, and I hope the info that I'm telling you helps you make your decision. But at the end of the day, there is a couple of things that are going to be happening following up. But when it's all said and done, it's like I said, it's about the day of. But now you should start thinking about how we move. I might do the live. I got to see, because we have co-real estate tonight, so I wasn't going to do the watch list. But then I have something else. I might not even be able to make the co-real estate too. I don't know if I'll skip both. I don't know if you guys will be up at like 9 Pacific. I might be able to do it. So we'll see. Yeah, let me see. Otherwise, you wait for Thursday or Friday. with today's info, do you think TLT will go up? So, like I said, I think short term there's going to be a certain reaction with bullishness on equities, bonds, and other things. But then midterm to long term, I think it's bad. And I think, I don't know, you could factor in how it'll play with TLT, but I think this is going to lead to a hard landing. I don't know if this is going to lead to it, but I think this is kind of the acknowledgement that the economy is going to be heading down a very interesting path over the next couple of months here. About great cuts. Well, you've never had 50 with a soft landing, I don't think. That's what I'm saying. I said this last night. I think this should heat up the carry trade, but then we'll see what happens tonight with Japan, because I think the odds are very, very low that Japan will do something. But here's the deal. I think Japan works alongside the government, alongside Powell. But when it's all said and done, nobody was expecting a certain amount of rate cuts in America in Japan 7 days ago. So unless Homeboy told Ueda, it's just like, you got to think about it. Just how we were surprised with 50 and it kind of came out of nowhere. Like, what about people in Japan? What about all the people now on that trade? That half of the people might get caught off sides with that. So we'll see. But otherwise, the Bank of Japan shouldn't do anything. Other than that, though, the other part is it's gonna be a little bit more crazy when it's all said and done. Stagflation, yeah. I think today, that's what I'm saying, you could call it soft landing, but in a weird way, the bond market is moving towards stagflation. So for now, the odds of a soft landing are higher. That's why I would lean on soft landing rather than stagflation. But if it did get to the extreme, yes, it literally is stagflation. That's why I'm saying the market is saying, holy shit, you're about to cut rates, and it's acknowledging it. And we just got a big cut, but then it's also pricing for the fact that, well, wait a minute, that inflation might return if you're cutting rates that much. And then, well, hold on, we still have other problems. So it's very, very interesting. Like, no, I that's why I said, though, I do think I like this move in a weird way. It's very, for how much excitement is there. I mean, some of my other plays flipped on me, which kind of sucks, but I love that this is barely moving. Because I'm telling you, bro, the story moved around today, and the price action might get you one way, but like, dude, that's it, you guys. Like I showed you with the yield curve. I showed you how even if the yield curve was inverted, this move would have, it's insane. It's the same amount. Like, this is it. I think Powell just snitched, bro. Even when Homeboy asked him the question, the best question of the day was the guy with the soft voice. He was like, he said, would you have done 50 basis points if the market wasn't pricing that prior? And then he just said, I'll do what's best for the economy. And then that's it. So I just, like I said, I think the snitch is in play. But it's unfortunately there's time. Well, no, it's not that bill's safe, but your bill just got lowered more than I expected. So let me put that another way. Like, think about this. Are you ready? Imagine me telling you, hear me out. Imagine end of last year coming into this year, we talked about getting rid of bill and buying your dividends, right? Because you got to lock it in before the rate cuts. Are you following? So if you guys have been here, again, we started buying MO, Pfizer, and a couple of other dividend names. You remember that? And remember I was telling you, and then Bill's going to change and you want to lock in your yield, right? That may sound familiar, right? Hear me out. When I was telling you that, I was under the impression we would start lowering rates a quarter at a time. What just happened today? You got even more. You see what I'm saying? That's crazy. So now Bill is going to come down even more than we initially thought. You're getting double. You're getting faster. So imagine, I was already telling you to lock things in, but now it's moving quicker. Why? You see, but that's what I'm saying. Bill now, you're going to get way less on Bill than I would have thought. And then if Powell is, literally by 2025, Bill is going to be back at like 3. So I don't know. The dividend stock's kind of too late, but that's the next thing we got to watch for moving forward. Watch over the coming days, like literally from today, tomorrow, and then the next week. Watch if these value names start catching a bid. But otherwise, Bill, the plan was, that's why, again, we started throwing mad deposits. Bill, we put it into Baba, we put it into, who was the other one? MO and Pfizer. Those are my plays at the beginning of the year. They all played a divvy, but the idea was gonna get in there. But we'll see over the next coming days. But like I'm saying now, the expectation, now that they cut by 0.5, I thought Bill would have started going down like a quarter, but now you're going to get 0.5% less on Bill. So that just kind of to give you an idea of how today played out. Yeah, TLT's not ripping because everything it moved, but it was in line, but it was just a little bit outside. But that's what I'm saying. It's there. I am hyped. It's fascinating what we're watching right now, bro. Everything I've been telling you, the commodities, the bonds, it looks like nothing's going on, but I'm telling you, the bond market's kind of tweaking right now with the short end and the long end making a move. And then again, dude, it's just the yield curve uninverted, 50 basis points. Like, that's it. I don't care about what's happening today because I really think Powell snitched, my man. That's it. I think the hard landing is coming. The British are coming. That's it. Recession, some sort of recession is going to arrive. I don't know if it takes 3 months, a year, or whatever. That's it. Powell snitched, dude. He doesn't need a poker face. It's just like, that's just the game. I don't know how to describe it. Maybe a gray swan, maybe not a black swan, maybe a gray swan, but yeah, no, that's it. He said that. The play, I would hold a little bit of cash, but like I'm saying, I think this is why it's going to be tricky. It's going to be bullish in the short term, and then midterm to long term, it's going to get bearish. So that's why I'm not immediately like sell everything, buy a put, because it's not going to die tomorrow. But that's it, where this is like the final descent. So again, not only are rates coming down and Powell and everything, we are making the descent, the flaps and everything. But when we're a little closer to the runway, I'll tell you, but for the most part, it's there. Yeah, of course you still deposit, but I wouldn't really be trying to buy anything until we know. If we could confirm value stocks are going to run, maybe we stack a little bit more dividends. Other than that, though, just be patient. But that's all I'm saying is, like, something now. You know that the economy needs 50 basis points of a rate cut. Like, are you not feeling me? Like, I get it, everybody wants to, what do I do? But just trust me, like, when you're looking at the market right now, like, you see how it's weird price action, but like, no, something now. That Powell believes that the economy needs 50 basis points of rate cuts between now and the near future. You know what I'm saying? And that, it. That's a fact right now. Why? And that's where I'm saying that's all we need, because that means then something is going to be a lot different. So, but that's why I'm like, there's a little bit of time, but that's it. And that's all we need for it for now. And that's what I'm saying. There'll be a reaction in the short term, and it doesn't mean we go down immediately, but I would be bracing for some level of recession down the road, like without a doubt now. Again, the curve is uninverted, and Powell is acknowledging with 0.5 point. So there's nothing I could tell you. It's just get ready. Unfortunately, I think they've ran out of all snitches. You know what I'm saying? There's no more safety measures except the clock itself. Maybe the election, but that's it, man. I told you, no cut should have happened, even a quarter, but that's it, bro. He went last second. Dude, right at the end, how many people, you guys were even still like, it's not going to happen, 50, 25. What was it? The diehard, McLean, everybody, and it's okay. I'd hate to like call that dude out, but like you see how it was, and everyone was like confident, but like, no, dude, this is a surpriser. This is big, but like homeboy is starting with a 0.5. I wouldn't call it imminent. It's either imminent or right around the corner, but something's up. And that's it. That's all I need to know. at this point. I'm glad I went cash. I'm glad I did a lot of things. I'm down to go more cash on the trading. And then once the things line up here, we might be able to start setting up for some downside plays for the market, and then let's see what bonds do. But again, if there is I've been telling you hard landing for a long time, so unfortunately, I hope I don't have confirmation bias, but this does confirm all of my other beliefs. Well, inflation might run. That's kind of what the bonds are worried about right now. That's the weird part. The bonds are like, yo, rate cuts, but then bonds are like, yo, inflation. But then gold isn't reacting yet because gold is kind of like, okay, yeah, so that's why we need to see it. And then oil too. There's a couple of things out there. It's quite fascinating. That's why I'm having a great time, but we got to see. But I do think the plan it's quite digestible in the midterm here. Just get ready for some downside. But don't react to it immediately because you can still get squashed off of that. I think hard landing would bring down real estate prices. I think soft landing would stabilize real estate prices, but I don't think it would like bring it down. I would buy real estate the same exact way. You know, I'd only be going for a deal. I'd actually be a little bit more cautious now. That's what I'm saying. I don't think this does not make me excited about a lot of things. I think that's it. I mean, homeboy just cut by 50 for God knows why. Like, again, the world is in a... Most of you feel generally okay. So to start with that type of move, it's kind of interesting. It's not necessarily... Well, I mean, you can wait, but that's the beauty is my strategies haven't really changed. Like real estate, I was already telling you should be going in for a deal. So, you know, if somebody offers you a property, 30% below value, I would buy it still. I wouldn't hesitate, especially in a good location, but... Anybody trying to buy a house at the highest comp in the last 3 months and, overpaying and leveraging on something that's not quite up there, I really wouldn't be taking it unless it has instant equity. I'm not a buyer right there. Was it tempting you to sell out and wait for the storm? Well, don't, because here's the problem. You could sell out, and if it stays up for 6 months and we go up another 20%, now the floor just got raised. So even if it does decline, it's not, like you'll just be back to where you started. So that's why you never sell out. You see what I'm saying? But if we could guarantee and confirm a hard landing in puts, we could just trade it and make money on it and then call it a day and then hopefully buy stuff at a good price. You're better off stacking your cash for a good deal. Or if we confirm value is going to run, go for that. You get what I'm saying? But that's what I'm saying. I'm not scared of anything in that sense. And I would not, if you're a dumbass, if you take what I'm saying now and you're like, I'm going to sell all my assets, you will get shit on. The idea is to have a strategic plan to maximize whatever this opportunity will bring you. Oh, yeah, and then, where's Beto? That held up. I don't know. That one's weird. I need to check the contract price. They went up 50%, but notice Bitcoin is the only thing that did not drop. So I'll take it, but it was a little sexier yesterday. Could be read as... Yeah, it is read as recession, and the market is trying to take both of it. There's a lot that takes in. Some people view it as recession, like myself. Other people view it as Powell not getting behind, and some people view it as positive. So not everybody views 50 as a recession. That is just me. ZF, no, go ZT, ZN, or ZB. But honestly, I would only be trading ZT or ZB right now. Short end of the curve or long end of the curve, that's where your money is going to be right now. A new construction? Oh, I don't know. I mean, this should spur demand, but I don't think you'll see any real reaction for a while. If that makes any sense. Everybody is listening to me and selling. No, that's false. Why? Because last Fed meeting was a lot more bullish, and I didn't have any of these signals to communicate this. And literally, this is moving exactly like the last Fed meeting. I don't know if you guys recall. Do you not remember? End of July was the last Fed meeting. We had that like pop, and then it literally moved exactly like this. And then by the end of the day, you were like kind of where you started. You see? So you're like right below where the meeting came out. So yeah, I don't think this is any real reaction that I'm causing. I think it's actually mind-blowing how similar this is to the July meeting. You raised more cash because of me. That's good, but realistically, I was raising cash about 3 months ago. So, again, and I was buying dividend stocks 9 months ago. So, whatever you say you're doing because of me, you're late, no matter what. So, you're just doing it because you heard me today. But at the end of the day, a lot of these things, that's why I'm trying to get you guys to go to the watch list, because there's so many things we discussed. But it's just like, some of that's like, Barbara, what do you mean 10-minute rigged? Ah! What? Oh my gosh, it is. That's crazy. All right, well, good luck, my friends. Oh my goodness. Oh my gosh. Yeah, bro, the day's about to end. Look at that. Well, my long term's doing good today. I don't know what's in it that's carrying it, but the long term is loving it, man. Holy crap. Today is flying. When do you think it'd be good to refinance from a 7? Well, now, or, I mean, again, potentially in the next 3 months, the rates could go a lot lower, but you're lucky that you got half a basis point today, because, again, everybody thought, like, even a quarter point could have incentivized some people, but now a half a point, now anybody could save a lot more. But then again, the bonds are kind of already there. Just hopefully the long-term bonds don't freak out so that you guys could make sure you get good refinance deals. I can't believe it is the 10-minute rig, bro. That's insanity. We did it, y'all. I'm not buying gold. I wanted to on the dip, but I'm gonna hold the plays that I made today. I had some other ideas. But I think I might go, because I was looking at gold, I'm like, how much do I think I'm going to make on the upside? So I think there's other plays that could go a little bit better, but I do like the aspect of it. But again, like I'm saying, if that soft landing kind of has any legs, again, commodities will stay down. But we don't, if commodities go up, then I will be there. But I am holding my oil play still. So I don't know if that kind of combats it. No bank plays, but the banks fascinated me right off the bat. Because like I said, if yields are going lower and banks go lower, that's not good. So if that goes double lower, then we might have a problem. The SPY will dip in October? No. Well, in a weird way, like everything I've been telling you guys, in a weird way, this might buy you time till after the election. Who knows? That's what I'm saying. I don't have any way to pinpoint it. I'll know when I see it, just like today. I'll know when I see it. But, like, dude, I'm telling you, the 50 basis point signal says something, but I wouldn't be very careful on trying to put a date on it. That's the problem. You know what I'm saying? But, like, it could just buy you enough time for elections. Powell made moves, so now Powell could shut up till after the election and say, what, I did something, we're not behind, and then we go from there. But we need everything else to show up, but that's what it is. Yen with the dollar. And remember, yen's going to make another big move tonight with the Bank of Japan. So that's there now. And the bonds, too. So if anything, bonds are dropping a lot more, so now the yen is catching up to it. Yeah, if anything, he did take the we are behind. People might still imply it, but now he could go and say, look what I did. Look what I did. I did it. I'm not behind. So he has somewhat of an argument. So I just explained the TLT thing. We'll go over it on the watch list, but essentially the market believes the rate cuts but the market is, and the bonds are kind of getting worried about that many rate cuts kind of reigniting inflation amongst other things. So acknowledging the path to the soft landing, but it's still a little bit sticky. And then that's why the short end of the curve is still up. That's the key right there. So remember what I was telling you guys before all of this happened. Remember I told you soft landing, shy, hard landing, TLT. Does that sound familiar? So look at shy is green. Short end is like perfect. We're getting what we wanted gently. Yeah, great. Long end is like, yo, you're getting that, but wait a minute. If you are getting soft landing, we got to ask some questions about how things are going to play out. And that's what it's expressing there. Big cut. It was good, and again, TLT is already up there to that degree. I think it kind of supports the rally, but like we said, the SCP, that was going to give us a little bit more, but it does seem that, like I said, the market's eating up this soft landing idea, but now it is worried on the longer end. So it's just, I guess, I don't want to sound like Powell, but I think this is the recalibration. But give it a little time, and then above all else, I think 50 communicates something much larger at hand. Japan is the next level. That's the crazy. I think this will surprise Japan, but then if they surprise, then you got a double whammy, and then we'll see. How much time? We got 1 minute till final five. I do think the next few days, and I mean, again, though, sadly, we talked about how the market was not pricing in much. You were up a little bit more, but you're firmly within the 0.5 range, and then tomorrow, you maybe get like 0.5% more. Friday, we have 2 more days, and then that's it. I don't know if it's meant to confuse people, but I just think how the bond market is reacting, it's a lot to digest. And I think that's why I'm saying, like, you're getting people buying the short end, and they're like, holy shit, we're getting cuts. But then it's also explaining some other stuff a little further out, but then it's like, wait, why? And then not to mention just the fact of your boy cutting like that. And then TXN flushing right now. I don't know why. Why are commodities going down? Soft landing. Ta-da. That's what I'm saying. That's why it's so wait, if the commodities stay down, that's going to keep communicating. If commodities rocket up, then Houston, we have a problem. So I hope that makes sense, because imagine you just had you had a rate cut of 50 basis points, and then the commodities sold off. What? So that's where I'm saying it's like I think it's very, very, very important. Oh, Philip Hamilton. Let's go, baby. You're getting it good. I hope so. It's that's why I'm fascinated. I'm like, there's a lot of this that's like, wow. So we're gonna have a little bit more. I think the price action is gonna be wonky, so you better have your helmet on. But the story is fascinating at this moment. Oil and commodities should go up with rate cuts. Well, there's no such thing as should. That's what I was saying. I've been saying it for a while, but if we get rate cuts and commodities rocket, we have a hard landing. If we get rate cuts and commodities die, then I think we have a soft landing. So that should sound familiar. But yeah, Chad, it's time. So listen, I love you all. Some of you didn't make it. You already got banned. Well, it's okay. You could try again. But here's the deal. It's very simple. It's going to get very, very loud in here. Okay? It's going to get very, very loud in here. And when I say earmuffs, that is your warning to mute your speakers if loud noises disturb you. Okay? So thank you for being here. Thank you for your time. I hope you learned. I hope you're ready for more. But yeah, man, get ready for it all because it's about to get loud. So earmuffs. Mute your speakers if you're sensitive. Earmuffs. Earmuffs. ladies and gentlemen. We're making our final approach. As we make our final approach, you guys are holding on to any bags. Please throw them in the overhead bins above or firmly beneath your seats. We'll be coming through the aisles with the trash bag if you like to dispose of those bags. But as we make this final approach, we're going to be landing here into the second link terminal. Second link terminal description, that's going to be your nightly Watchlist and main channel layover. Around about 6 or 7 p.m. Pacific time, may be canceled today or not. We'll give you an update. Then we're going to be taking off tomorrow around 6 a.m. out of sunny San Diego, California. So make this final approach into San Diego International Airport. It's about 83 degrees and sunny, looking like a good day. Unless they front ran you and then dumped it after the event, and now they're going to confuse you only to ultimately take it where the macro is pointing. But the good news is we're no longer under any COVID guidelines, so no masks are required. But we do ask that you exit one row at a time and drop a GG on your way out. As always, we appreciate you guys' business. If you're interested in the Car Rapid Awards program card, please fly down there, flight attendant, and we'll get you that as soon as possible. As always, thank you for flying with the coat. And hopefully have a wonderful evening. Wow, Chatadonia. Get ready, baby. You got a lot. I got a couple. I'm going to wait, though. I already did enough today. So we'll see, but get ready, Chatadonia. It is time to finalize all of it. The day of Powell, 4 years in the making. And I think the price action is wonky. But now you only have 1 minute! Go, 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 go. Ladies and gentlemen, boys and girls, it's time to wrap it up. Bring it home. Finalize those plays. Speak now or forever hold your peace. Shares, options, futures. You got to wrap it up. Make up your mind. What are you going to do? What do you believe? What is your plan? How do you think about Powell? You got to make up your mind. And guess what? You even have earnings right around the corner, Yeah, that starts to kick off too, but you got 10 seconds. Wrap up the play. Shares, options, futures. Some will have flexibility. We get a little bit more data now, but we'll see. But that was the big one, and you have 4, 3, 2, 1. Ding, 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 ding. Horna, let's go. Holy Chatadonia, we did it. We made it, baby. 7 hours in the books. I don't care if you just got here or not. I need a good game in the chat. Drop that GG, baby. Let's go. Good game. Are you kidding me? On Powell Day. This is about to get wild, you guys. My goodness, good game. It don't matter if you made money or lost money. I know you learned something. Everybody that contributed brought something to the table. Plays, news, vibes, personality, info, baby. Way to hold it down. Way to be a part of it. Way to show love and mutual respect. Way to not get banned, baby. Thank you. Good game, baby. Thank you for showing love to the community. Thank you for leaving it better than when you got here. You know what I'm talking about? That's why you didn't get banned, baby. Amen. Good game. Let's go. I see you too, Twitch. Let's go. Members, non-members, stream alert. Man, you made it to the bell. Let's go, bro. You showed love today. You on the internet. You didn't have to. You could have been a baby back bitch. You didn't. Man, you doing a dono, man. You didn't have to, bro. Come on. Thank you, my friend. Good game. GG, bro. Amen. I need me to rap. You won't see me a lot. Monday to Friday, you need me, let's talk. Huh?
Right,
Chatadonia, that's it.
You know what to do.
That's it, baby.
Ready? It's a call, baby.
That's it. That's it. No, hold on. I won't let the music ride yet, man. I can't believe today's. I don't want it to end, bro. I got a busy schedule today, too, man. But this is like, oh, my gosh. I'm so excited. I can't believe it. This is so surreal, you guys. We have our first rate cut in 4 years. It does. I'm not going to lie, though. It does give vibes of 2019. I think you might have yeah, I think the next couple of days of TLT might end up going crazy, or I think a lot of digestion is going to happen, and that's it, bro. This is this is big. That's why I'm like, if you're letting the price action move you around, then yeah, then I could understand. But oh my goodness, what this is opening up the door to. The door has been opened, is long story short. So either way, bro, wild day. I'm sure we're going to get a lot more ahead. Thank you all for being here. I hope you learned something. I hope you got the info. I hope you are ready, man. And God bless every single one of you who contributed, brought something to all of it, man. Thank you for making this the place it is. But once again, man, thank you for your time and the opportunity. So that's all I have. What I will say, if you want to know the plays that I made today and you want more of that breakdown or any of the plays, go to the Watchlist. Ladies and gentlemen. So we're putting all the plays there from now on, making it organized, youtube.com/the trading fraternity. Again, we've been talking about a lot of this for a while, but check that out. The description has everything else. First link for the Stream Alerts Bootcamp real estate course. Second link for the membership. Check out all the other channels. Follow me on Instagram at the Trading Fraternity, and then that's it. Go fill out the prayer request wall. I'll pray for you. You pray for me, and that is all that we have. I don't know. So we don't have a watch list today, and then I got to see by 4. I'm going to be at the Colt Real Estate one at 4, but I don't know if I can make the 5 o'clock. So that's my only thing. So depending if there might be a surprise watch list at 9, but if I don't, no guarantees, okay? So if I don't get it there, worst case, I'll just see you guys in the morning. You know what I'm saying? But we'll see how it all plays out. But this is crazy, bro. This is crazy. So, Chad, I love you all. Thank you for being here, man. And I really hope you learned something. And then get ready. We have earnings starting. Why is NVIDIA dumping? And that's a big deal, too. Don't underestimate. Remember, I was telling you guys how NVIDIA can move the market, but, we'll see what happens if Dow and Russell and value comes to play, or if we have to rely on the other one. So that'll be a big deal or not. So we will see. But Chattadonia, I think that's all I have. I think let's get. Let me. What's another one? Maybe I don't know. Which one should we have? No, I want it. I want beast mode. I want beast mode because he says something in beast mode. I like it. I'll play you one more, and then we wrap it up, baby. Thank you, man. Thank you for saying thank you, bro. I appreciate you. You got a lot of fun today. Man. I hope you guys are ready for more. This is kind of mind-blowing. Woo! Hey.
I'm just tryna teach some, so let me taste. I'm just tryna eat some, so let me eat. I woke up in beast mode, they still asleep. Told them hit they free throws, they back on D. I can hold the L, bro, that's on me. Told them take the game slow, keep the pace. Looking at the table, my enemies don't know where I came from. I'm like E.T. Money ain't the motive, but it sure is motivating. You ain't a hoe with love complaining and the celebrating. You sell a home, you know I'd love to have a conversation. We was buying cribs before you knew about inflation. You ain't gotta give me credit, boy, the banks give me a lot of that. I meant it when I said it, we gon' take it all and give it back. I learned a couple lessons, the wisdom that came from all the bad. I learned the repetitions, I put that shit on my dad. My money ain't getting lag, I wanted, could get it now, but I cannot force the hand. I buy that shit when it's there, your homie just look around. We did it, I say a prayer, we bit that shit from the ground. And the foundation they saying, y'all ain't feel it though. Nah, but we ain't need them though. I ain't being cocky, I just won't look in the mirror, bro. Doing more than talking, boy, the empire empirical. Every time I sign a dotted, boy, it still feel like a miracle. I'm just trying to teach some, so let me speak. I'm just trying to eat some, so let me eat. I woke up in beast mode, they still asleep. Told them hit their free throws, and back on D. I can hold the L, bro, that's on me. Told them take the game slow, keep the pace. Looking at the table, my enemies don't know where I came from. I'm like E.T. running. Market's gonna crash, but I could kick another lesson. Till the curve uninverted and I don't talk recession. Till the dollar was stronger, then I ain't really stressing. But the fact it won't crash it until the Fed admitted 15 on 50, boy, the kid already seen this shit. Only way to get tricked off bullshit is to believe in it. 2022, like 92, you should go read this shit. Japan and how they move might really make you think they lead this shit. Inflation, hot money, boy, it sound like today. I'm not playing, it ain't funny, even the fix was raised race. Both the problem and solution started with a central bank. Call it what you want, but that one cost a decade.
I woke up in beast mode. They still asleep. A lot, bro. Curve. the dollar, the Fed. I can't believe it, dude. I can't believe it. I can't believe it. And that's what I'm saying, bro. And the fact that it makes sense, it even makes sense with the inversion. Because, like, again, even, bro, this is wild. I can't believe he did 50. That's why Powell didn't answer the question. That's why when he said, would you have done 50 if the market didn't price it, there's a reason why he used, I did what's best for the economy. Oh, shut up. That's insanity, bro. Because, dude, that's crazy. I'm telling you, the fact that it happened and that it's here, right, that's just reality. It feels very surreal. But I don't think a lot of people, again, a week ago were really expecting that. But now the fact that two rate cuts, literally, it's saying it was where the yield curve was inverted. It's the same. Even though the yield curve ran prior, this double rate cut would have still uninverted the curve. So whether the yield curve went in advance or not, whether it was priced in or not, it was going to happen either way, which makes me very, very confident about it. Well, everybody, I mean, I already see it. A lot of people are going to get excited. They're going to call this. It's funny because the market's not up, but don't underestimate the crackheads. And again, I'm saying it's going to be bullish in the short run, and then we'll see, hopefully, unless Japan fucks you up tonight. But other than that, it'll be bullish impetus in the short run, and then before you know it, they are going to, it'll wear off. Is the only way I could put it, and I don't know the timing, but that's the problem, is that it may have just bought us enough time for the election. So it doesn't have to be immediate. So just don't force it. Bearish for 2 days. Oh, who knows? It could be bearish for 2 days, 1 day. Maybe it runs tomorrow. It's just like, it doesn't matter, bro. You are on a plane right now that is going down. I don't care about what's happening else. But all I know is that they just did it. The curve is now uninverted. They have cut rates by 50. I don't know. You're in the moment right now, but like 3 to 6 months from now, things are going to look very, very different than how they look today, whether it's very positive or very negative. I would lean towards bearish after today, but I'm still open to optimism. But I do lean one step more bearish after today, in the long term or in the middle term. In the short term, I'm bullish. I think the crackheads will come out and play. Yeah. We beat to rap what power to cut is. We beat to rap what power to cut. We beat to crap, but we beat to rap. We beat the. I'm on my second win. I'm on my second rate cut. No? Yeah. So that's what I'm feeling. But wow. On that note, Chatadonia. Yeah, that was kind of the seatbelt announcement. Yeah, I like it. I think the yen is going to move with the dollar and us. So today should have moved the yen a little more, and it might do it. But just if there's no surprise out of Bank of Japan tonight, then the yen will get cues from the dollar. We beat to rap what power to cuts is. I like that. But Chatadonia, I love you. I hope you enjoyed it. I hope you stay alive, baby. We got a lot more on the way. Very, very fascinating. Get ready for a lot more, but that is all I have for you. Thank you for being here. Enjoy your evening. I will see you tonight. YouTube.com/trading for training. If I don't see you then, I'll see you in the morning. But that's a good place to be. But that's it. Go read the books. Richest Man in Babylon, Proverbs, New Living Translation, and the strangest sacred in the world. And don't forget what I told you, man. Everything fails at one point, okay? So don't forget. And remember, the more faith you put in things versus the immaterial, the more insecure you will be, my friend. So defeat that insecurity, baby. Why, baby? Why? Finger to the sky, baby. To God be the glory, and through the grace of God alone. Amen. Amen. Wow. So, Chatadonia, That is all I have. You have a wonderful, beautiful, glorious evening. I will see you guys tonight, hopefully, and then I will see you guys in the morning. And that's it, man. That's it. Wow, history has been made. Goodbye. Yeah, I made history when I build it better. Now build it back better. The rate, the September rate projection, cut by 72. Hey, fuck you. What? Like the video. You follow Josh on Instagram at the Trading Fraternity. Yeah, watch out. The fake Josh will follow you. You're going to trade crypto. He said, come on, you're going to trade crypto. Try to trade crypto with you. Try to buy your crypto. Try to make you into crypto over there, huh? Anyways. So I'm going to go there. You have a fucking... I know, Joey B. It's crazy. He's our president. But I still think he's a little cuckoo. He has no idea where he is. And Powell's cutting rates. I told him to cut rates. I know. And I told Powell to cut rates. He went small like a baby. He's like a little baby. He has baby hands. He reminds me of my hands. Little accordion babies. I know. He's a dumb guy. Dumb Powell. Call him Dumb Powell. I think they called him Mr. Dummy in high school. They probably called him Poo Poo Powell. Poo Poo Powell. Poo Poo Caca Powell. Cuts rates by 50 for Kamala. 25 for me. I don't know. Can you make it more obvious? Poo Poo Powell, Caca Powell. That's what it sounds like. I'm sure they bullied him. I can't make it up. I know a kid who got bullied when I see him. I know. All I'm saying, cottage cheese or sour cream, it doesn't matter. You got 50 basis points. Exactly. You better watch out. Cottage cheese, bologna, it doesn't matter. It doesn't matter if you like cottage cheese. Some people like sour cream. Who am I to judge? But I'm just saying it's there. Exactly. Have a wonderful evening. I'll see you on the watch list. Goodbye. I reclaim my time. Turn this off. Okay, thank you.